breadth as well. Yesterday you had a very stark market breadth in favor of the declines. Today, on the other end of the spectrum, you have a lot more advances as well. And a lot of stocks that were beaten down in trade yesterday are actually gaining. IT, for one, made a sharp rebound through the course of the session yesterday and is up about 0.8%, of course losing a little bit of ground. Now, we are joined today by Swati Hodkar as well as Asta Jain. Thank you so much to the both of you. And yesterday, our reporter went out and asked a few people what they'd like to know, and we got a couple of interesting responses. So I want to play that out if we can right at the onset, and then we'll move to some of the questions that you're sending us on the numbers that you see on your screen as well. But play that out. Let's see what people had to say.
Recently, 4 months, we have seen an inversion in the bond yield curve. Whenever this has happened, most of the time recession aata hi hai. So is this a start of recession or this is just a correction? This is my first question. And second question is, what metrics should an investor use in a falling market? In a bear market, क्या indicators हमें use करने चाहिए? Fundamental indicators, जिससे we are able to screen those companies जो next bull run में हमें अच्छा पैसा बना के देंगी.
मैं बाजार में जो है कि 40 साल से हूँ और मैं ये समझना चाहता हूँ कि आज गिरते हुए बाजार में किसमें इन्वेस्ट किया जाए कि हमारे लिए और जो नए लोग हैं उनके लिए हित और अच्छे हो.
So pertinent questions, and I think that reflects the mood of a lot of people investing in India. The question is not should you sell, and that's, I think, a very telling thing to talk about this morning. The question is, what are the fundamental indicators that you would look at when you're looking at long-term growth stories here in India, possibly stocks that have corrected and are at attractive valuations right now, and what stocks would you go out and buy? So Swati, as well as Asta, I think the questions are pretty clear. Asta, I'll come to you first. First, from the perspective of fundamental indicators, and it's a great time to be asking this question because already you're seeing business updates come through. Thursday, you're going to see the start of the earnings season with TCS. What are the key indicators that you're going to be monitoring?
Hi, good morning to all of you. So if I look after the key indicators, first of all, business updates has already come in now, which what I'm looking after is that the results. Results are the key for any stock selection. If the results are not good, whether the company is in a very good industry or a sector, but if results are not good, then definitely at least that stock will not going to perform. So we have to see the financial performance, in which most important is the bottom line growth. Bottom line growth should be very strong, and one should keep this in mind that this bottom line growth should not come with the help of a high other income or extraordinary items or exceptional item. So we have to exclude all those items and then see that whether company is able to generate good profits or not. So first of all, if I would like to go with something, then definitely the results. Secondly, I mean, as I've told you, bottom line is most important. Then, of course, companies' commentary, especially management commentary, holds importance. What management is speaking, what outlook they are giving, because I can cite one simple example that Siemens has come out with their earnings outlook, and the stock has tanked 10%. It was a matter of about 2-3 months back. So just on the basis of management's bleak outlook, the stock tanked a lot. So we have to see this thing also, that what is the management thinking about the future prospects, whether it is on the macro level or at the company's level. So we have to take this thing into account also, because sometimes results are very good, but if the commentary is not positive, then definitely that stock will not perform strongly. So we have to see both the things in the commentary. If guidance is given, then that holds the most importance, what kind of guidance management is giving, because ultimately it gives the future visibility. So I think financial performance along with the management commentary are the basic indicators. And now other things which we need to see is definitely the management pedigree, promoters background is very, very important for any stock. Then balance sheet is leveraged or not, debt status of the balance sheet, promoters pledging are there or not. So these are some of the important, and margin, because if margins are good, sometimes what happens, bottom line growth is not that high, but if the margin growth is high, then definitely street like that also. Ultimately, margin reflects whether the company is able to, generate profit from the sales or not. So margin also holds a key importance. So these are some of the basic indicators we need to look, and definitely overall the macro outlook, we need to continuously keep an eye on what the global news is coming about that sector also, because sometimes that negative news about the sector can also play a spoil sport.
Right.
So we have to see all these
Okay.
factors. Yes.
While we've been speaking, we've seen a little bit of a further cool off in the benchmark. So I think good time for me to come to you. Some selling pressure coming through, and we were hoping that the gains from early on in the session would hold on. And of course, quite a lot can change in the remainder of the session as well. But any opportunities, and what would you go to buy right now? Because we saw across the board cracks yesterday, some of those beaten down stocks, of course, coming back. What would you venture out and buy today?
First of all, good morning, Alex, and all of you. Definitely, yeah. As of now, we are witnessing some sort of a cool off. Today's morning sessions at the start point of time, it really was good. But as of now, we are facing that, and Nifty is facing a very strong resistance of 22,500. So as long as it sustains below that level, my view will remain a cautious. Because yesterday we have seen that the Nifty has touched the feet of 21,700, which was the low, which has been we have seen in the May 2024. From there onwards, we have seen a very strong rally, or say the uptrend in the past history. Now, technical analysis, what it says, the assumption of the TA is basically history repeats itself. Now, we believe that 21,000 is acting as a crucial support levels up to it will form within the range of Nifty will trade within the range of 21,700 or 22,500, in between that. A breakout on either side will decide the clear trend of the market. VIX volatility index is definitely really a point of concern. Yesterday, we have seen a 66% shoot up, and we have seen a cluster resistance at around 23-24 levels. If the India VIX cool off from the here onwards, and if it's break 19-18 levels, then we are likely to witness a uptick rally. But this market is likely to remain volatile for the coming few weeks as such. Rather than concentrating on the Nifty or the Bank Nifty, I will suggest try to be focused on the stock specific trading. If you ask me about the stock specific, Godrej consumer product really looks very good at the current levels. Even we have initiated a buy call for our clients as well. Why so? Because on the weekly chart, it has formed the inverse head and shoulder. Whatever fall we have seen into the market, this particular counter has hold its strength intact. It's well placed above the important moving averages. If you look towards the short-term moving averages also, it's trading about 20 DMA in the formations of the high tops, high bottoms. I believe it has a very strong potential to reach up to 1250. Currently, the counter is trading at 1185. So by keeping a strict stop loss of a 1150, one can definitely go for a long positions. It's a consumer durable sectors. Another interesting counter looks good on the technical front is a Marico. This particular stock, even though in this kind of a market, it's holding its 200-day moving average. So Alex, this particular formation looks very strong. Volumes are slowly and steadily increasing along with the price momentum. Currently, the counter is trading at 665, 668 levels. By keeping a strict stop loss of 650, one can go for a long positions for a target of 710. I will not suggest to buy the full-fledged quantity at the current market, but definitely 20-30% can be invested into these two counters.
Right. While the Nifty 50 is, down by about 250 odd points from its day's highs, let's also mark out some stocks which have fallen significantly from its day's highs. There's Tata Steel, which has fallen around 5.7% from its day's high. Trent has fallen about 4.9%. Hindalco about 4.3%. Titan is down by about 3.8% from its day's high. Tech Mahindra also down by about 3.6%. BEL down by about 3.28%. From the entire universe of the 500 stocks of BSE, there's Delivery, which is down by about 9% from its day's high. Siemens, of course, going through the entire demerger phase, it's also down by about 8% from its day's high. Stark, Jacob, Sarda Energy, JM Financials are some counters which are down by about 7% from their day's high. So some important stocks to watch out for, which have kind of contributed to that drop in trade today.
I also want to pull up the patchwork of the Nifty 50 if we can, because we started off in the session with 50 out of 50 gaining. I just want to see how many of those stocks. Let's pull up the patchwork if we can, the heat map of the Nifty 50. Okay, so we're still seeing green on the screen, but you see a few telling names that have lost ground. HDFC Bank, for one, is trading flat at this point. Reliance Industries is trading flat. trend down 0.5% or so. But the heavyweights, Reliance Industries, HDFC Bank, Reliance, if I remember correctly, was up about 1.6% or thereabouts, or 1.5% earlier on in the session. And that losing ground is one of the key reasons perhaps that you can see a little bit of a cool off for the benchmark Nifty 50, which again reinforces the point that Swati was making,
right,
which is don't look at the index level right now, look at individual stocks. To that end, let's go to the next question.
Right. So our first question for the day is from Dinesh, who's from Gurgaon, and he's asking a question on the metal space. He's holding around 330 shares, bought at 345 a piece for Vedanta, and he wants to know whether he should enter at the current levels or not for the particular counter. Asa, I'll come to you on this one since he's a long-term investor. What's the view like for Vedanta, and should he make fresh additions right now at the current levels?
So, in fact, Vedanta has came out with the business updates also, in which we have seen the rise in the production. Still, those numbers were not able to cheer up the market because it is mainly dragged by the weakness in the metal sector. So right now, my idea here is not to enter at this point of time, because right now the more turmoil is created by the global news rather than the company's own fundamentals. It's better to wait for some more time before making entry into this counter. So my idea here is to enter at the lower level of around 330 to 335 rather than entering at this point of the time, because although fundamentally the business updates are good, but sectoral headwinds are still there for this counter.
All right, so that's the view with regards to Vedanta. A gentle reminder for viewers who are just tuning in, you can call us on the number that's flashing on your screens on the upper band right now. You can use that number to call us and ask all your stock related queries. All right, our next caller, Ashish from Hyderabad, is calling in. Ashish, a very good morning to you. How can we help you?
Yeah, good morning, Nirma. So I have a query on the HPL Electric.
Okay.
So is it right time to enter, or we need to wait for further correction?
All right. Okay. Got your query, Ashish. I'll take this up with Swati. Swati, are the charts attractive enough for something like an HPL Electric to make an entry right now?
Maybe not at the current levels, because the particular counter is under the selling pressure and it's facing a very strong resistance of a previous high, which comes to nearby 440. If you're getting any dips towards to 350, 320 within that band, definitely one can go for a long positions, but not at the current levels. So wait for some more dips towards to 330 to 350 levels. Then you can take a review once again on this particular counter.
All right, that's the view on HPL Electric. Stock is up 2%. Bhupati is writing in from Visakhapatnam and asking about Wockhardt, which was under pressure. If I remember correctly, it dropped 10% recently. Yesterday, I'm not sure what the mark was, but it's up about 1.8% or so. Long-term perspective is being sought. Should you wait for some time? And suggestions for a buy level. This would be a contrarian call based on the kind of word that we've seen on pharmaceuticals, Asta, and the question marks, the clouds on whether or not there's going to be an implication for US sales. I know that the company and the management has very clearly stated that there's nothing that's going to happen that's going to affect their sales, because it's not so easy to shift supply chains, particularly in pharmaceuticals. It takes years. So would you hold on to this if you bought, or would you buy at these levels?
So if I talk about the counter's fundamental seems to be okay. In fact, they have came out with the news recently, maybe on the 1st April, that they have done certain, research on certain products, and that has been successfully done. So the products are really getting good traction in the US market. But the main problem is regarding this tariff issue. So right now, it's better to wait on the sidelines and then just putting the money in. My idea here is to wait for some more time, let the dust settle down, and let's see what is there for the pharma sector by Mr. Trump, and then make entry into this counter, because anyways, if some bad news comes about the sector, the stock can be available at the attractive valuations later on as well. So right now, rather than putting money into it, my idea here is to wait for some more time.
Okay, all right, wait for some more time. I believe we've got our next caller. Manohar is calling us from Bengaluru. Good morning, Manohar. How can we help you today?
Good morning, sir. Good morning, everybody. I wanted to invest in ABB India or Cummins India for a long time.
Okay.
Which is better? And is the sector good to invest right now?
Okay. Why these two? Have you shortlisted from a wider group, and on what basis did you shortlist?
because of the power sector. They are related to the power sector.
Okay, interesting. Okay. So, Asaf, from that perspective on the fundamentals, ABB trading higher by about 1.2%, 2,740 or thereabouts. I think a lot has been said about the order book, where it stands. Execution is going to be key, and also power sector. A lot of people are talking about how domestic focused companies should be favored. ABB would be one of them, wouldn't they?
Right. So in fact, I'm liking more Cummins at this point of a time, although ABB has got a very strong order book, but I think some problem is there with the execution part, and we have seen that delay also. So that is the major concern about the company. So maybe in the management commentary, I would like to see how this thing gets tackled on. But Cummins India is looking very strong to me. Why? First of all, their results were super exciting, which they have posted in the Q3 FY25 numbers. The results were good. In fact, revenue expansion was very strong. And in fact, whatever levers are there, they are well placed for the margin expansion as well. So at this point of a time, if I have to choose between these two, I will like to go with Cummins. And our idea here is to enter into this counter at the lower level of around 27.20 to 27.30 with a price target of initial 28.30 to 28.40.
All right, so that's the view where ABB and Cummins are concerned. Our next counter that we're talking about is RVNL. K. Ravi Kumar from Hyderabad is holding 37 odd shares that he bought 4 months back at 496 a piece. He wants to know whether he should hold or average out or add some more at the current levels, or he should book the loss. He's sitting on a loss of around 5,700 odd rupees. What should he do more? His time period to hold is around 1 year. Swati, what are the charts indicating for RVNL?
2024 was not much good year. We have seen a correction mid of 2024 from May. The stock has corrected from almost 650 to now 300 odd levels. I believe that a more downfall can be seen. No wonder the counter is already trading in the oversold zone. But looking towards the setups, yes, I believe that 300 will be the very crucial support level for this particular counter. And up to that level, we are likely to witness some more selling pressure into this stock. So any dips towards to 300 levels can be a very good opportunity to take a buy call, because the risk reward ratio will be a favorable, and your buying rate will also come down very heavily on the downsides. Upside, majorly positive rally can be witnessed only above breakout of 400 rupees. If it's break that level 400 levels on the closing basis, then uptick rally can be witnessed up to 470 to 480. So my view, just wait for some more time. If you're getting any dips to 300 levels, then you can add on, not at the current market price.
Okay, so that's the view with regards to RVNL. Next caller, Shweta is calling in from Hyderabad. Shweta, very good morning to you. How can we help you?
Hi Mahima, very, very good morning to you. And
I can feel the joy in your voice today since the markets are up, Shweta.
yeah.
Yes, go ahead with your query.
But we can't know whether it is
yes, that's true.
It's going to last or not.
Yeah, go ahead with your query,
My question is regarding, CG Power. I have 115 shares at a price of 612.
Okay.
I would like to know whether I can add it at these levels.
Okay, and I believe this is from a longer term perspective, right?
Yeah, it is a long term view, but if it is possible, I would like to know the technical view also, if it is okay with you.
Okay, I'll take both views quickly. Asta, I'll come to you first. What's the view like for something like a CG Power? She's already holding 115 shares, bought at 612 a piece. Should she add more?
I think at the lower level, one can add more. Now, the reason behind it, their results were good. And in fact, business outlook is looking very strong since this company manufactures electrical equipment like transformers, etc. So they're getting very good order pipeline for that. In fact, company is exploring the opportunities for the exports also. And they are looking for gaining the market share in the power segment. So I think over all this counter is well placed to show more upside from here. The only thing is due to the volatility of market, rather than adding at this point of a time, maybe adding at a lower level of around 520 to 525 can be a better choice. But here the price target can be set at around 600 to 620 levels in the medium to long term.
Swati, do you also reckon with what Astha said, 520 are the levels where you will also take an entry, or do you think the current levels are attractive enough?
think current levels are not attractive to take a long positions. I definitely agree with the Asta. Any dips towards to 500, 510 levels, that will be a very attractive level too, because those are the levels which has been tested in 2024. I believe that the counter is likely to retest those levels, and then we can see some rebound in this particular counter. So wait for some more time. If you're getting any dips towards to 510, 500 in between that levels, you can definitely add on the long positions. For a upside for a year and so, I'm looking for a target of 670 to 700 levels on the high side.
Coming back to you for a quick one on RVNL, K. Ravi Kumar is asking this question. Hyderabad is where he's tuning in from. Okay, it's already done. Let's go to the next one then. We got CDSL, and quite a few of these capital market plays were interesting earlier today. They were buzzing in trade. Let's see. Okay, so it's still up about 2.3%. Shailaja from Hyderabad is asking, didn't we just take Shailaja's question? No, this is Shweta's question from Hyderabad. All right. Sorry, Shweta. All right. CDSL, can it be accumulated at this current price for a period of 1 year? What would you say, Swati, on the charts?
I think, Sam, I'm positive on this particular counter. If we look towards the retracement theory from 2023, we have seen a very strong rally from 700 to up to 2000 level. If we calculate the retracement, the counter has already retraced 61.8%, which is the golden ratio, which we consider in the technical analysis. And it has forming a very strong support in the range of 1080 to 1100. I believe at least 20-30% can be accumulated at the current market price. Breakout level comes at 1250. If it's break that level, then the positive momentum likely to be carried forward towards to 1500. So those who don't want to miss the rally, they can buy at least 20-30% at the current market price.
Okay, so that's the view with regards to where CDSL is concerned. But with that, it's time to slip into a short break. But we'll be right back answering all your queries on the other side. So stay tuned to NDTV Profit.
That's huge. That is a biggie. It's on.
Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही code बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get? Oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Welcome back. You're watching Ask Profit. It's time to start the queries again, and we've got a caller from Bengaluru this time, and we've got Basavaraj calling us. Good morning, Basavaraj. How can we help you today?
Good morning. Good morning.
Please go ahead.
I got 100 shares, purchase 100 shares of Nestle.
Okay.
2340. I am under loss.
Okay.
Is the right time to accumulate more?
2340. Okay. The price is currently 2,242. Okay. What is the time frame that you have in mind, Basavaraj?
Long term, sir. Long term.
Okay.
I can keep it for another 2 to 3 years.
Okay. Asta, on the fundamentals, what's the view on Nestle?
So the company is on the capacity expansion. If I talk about the Maggie, etc., I mean the coffee and the chocolate part. So first of all, that is a positive point for this company. And in fact, we believe that going ahead, definitely the kind of improvement we are seeing in the rural demand, that will also help the company in boosting good numbers. So we are positive on this counter, recommending a hold on this counter with a price target of 2450 to 2500, but in the medium to long term.
All right. All right, so that's the view where Nestle is concerned. In fact, even the presser takeaways were interesting to watch out for because their outlook was strong enough. But we'll have to wait and watch out for as to how Q4 updates pan out for Nestle and see how the stock reacts to that. All right, the next question is from Vaishnav, who's from Bengaluru again. He's holding 399 REC shares purchased at 91 a piece, and he's sitting on a significant profits of 1.2 lakh rupees right now. He wants to know whether he should hold or buy more at the current levels. Swati, I'll come to you. What are the charts indicating for something like an REC? Should he enter more, book some profits right now? What should be the next strategy?
I believe towards the long-term charts, definitely view is positive, and he has already bought at a very downside levels, and it is in good profits. I believe that the long positions can be hold, and I'm looking for a target of 440 to 460 levels in a near terms. So you can hold your long positions by keeping a profit stop loss of a 350 on a downside and hold your long positions.
Positions. All right, that's a view on REC. And the next one is BEL, and it's an interesting one to talk about. By the way, this is a question from Santosh Maripalli, who's asking about this. Can it be consolidated today? There is a fundamental update for this company. Of course, there is another order win that it has managed to bag from the defense space. Asa, on the fundamentals, would you buy into this right now?
Yes, I think, but not at this point of a time, because yesterday also we have seen some sort of a lower ticks in the stock prices. So maybe today we have seen it rising. But I think, and my idea is just on the basis of this news, we have seen it rising, but the stock can tend to move little lower again. So those are the attractive level. Maybe at around 260 or 250 odd level, the stock is a good entry opportunity.
All right, so that's the view where BEL is concerned. Our next question is from Satish, who's writing in all the way from Texas. He's bought Spandana Spooty 1,000 shares at 313 a piece. He's saying that during NBFC collapse 6 months back, it was from a shorter term perspective. He wants to now know whether he should continue to hold, add or exit. I'll come to you, Astha, again for this one, because he's continued to hold the counter even though he bought it from a short-term perspective. What should he do next? Should he continue to hold the counter or should he exit?
So when I have heard the management commentary, they were quite positive that they will be seeing some sort of a sign of recovery in the January 25 months or coming months. So I think that can be seen as a positive. Otherwise, I think stress in the asset quality was visible in their last quarterly numbers. So we really need to see how the company will be able to overcome that. So my idea here is to hold this counter, let the results come in, let's see what the management is now thinking about, and then make any sort of adjustment in this counter. Right now, just stay invested.
Stay invested is the view on Spandana Spurti, and this is a question, as we mentioned, it's coming all the way from Texas. Really appreciate that you're taking the time. Though I must say that a lot of the chaos that is unfolding is emerging from where you're at. Maybe you can give us some perspective on what the view is on the ground. All right, Rakesh from Hyderabad is asking a question. Is it good time to get into Enviro Infra Engineers and UCO Bank? So two very diverse companies, and he's not really specified a time frame. So Asta, I'm going to come back to you if you've got a view on Enviro and certainly on UCO Bank. If not UCO Bank, then which bank would you pick ahead of the monetary policy tomorrow?
The Enviro Infra, when the IPO came, we were the merchant bankers as a HIM security. So I think I cannot comment on that part due to the compliance issues. But yes, talking about another counter, that is UCO Bank. UCO Bank is looking good to us, but I think they are much better public bank, rather than UCO Bank, in which Bank of India holds good importance as of this point of the time. So rather than UCO Bank, I think Bank of India is a good choice. In fact, SBI is also looking good to us apart from BOB. So these three counters are looking very good to us rather than UCO Bank.
Okay, so that's the holistic view as to what banking structure looks like right now for Astha. Astha, one more question. I'll stick with you because it's a recent listing, MobiKwik. Sharad from Bengaluru is holding 100 shares, bought at 313 a piece, and right now he's sitting on a loss. Let's pull up and see how MobiKwik has done since its listing, and he wants to know whether he should hold or buy the dip. What's the view like, Astha, and should he continue to hold?
So at the time of the listing, the major positive about this company was that it is into the profit. It was into the profit, as we have seen with the other counterparts. So that was a major positive. But I think afterwards the results came and the valuation seems to be a little stretched, and we have seen the stock falling below the level of issue price. So right now, I think just wait for some more time, let the results come in, and then make any sort of changes in the stock. Right now, idea here is to hold the stock till the results are in.
Hold the stock till the results are in is the view coming in from Astha on MobiKwik. All right, next caller, Subramani is calling in from Visakhapatnam. A very good morning to you, Subramani. How can we help you?
Yeah, good morning. So I am tracking this Ashoka Bilcon.
Okay.
So it is right time to buy some shares, or I need to wait for further more correction?
Okay, so when you say you're tracking the stock, are you seeing the fundamentals of the company or are you reading the charts for the company?
Fundamentals actually.
Fundamentals. Okay, Asa, I'll take this up with you. Ashoka Buildcon, what's the counter looking like?
The counter when they posted the numbers were not looking very strong, because what we have seen in the numbers that they were subdued numbers which this company has posted, and in fact there was the delay in their execution, and in fact their order awarding was also like it was a delay in that part also. So after that, we have not seen a very good momentum in the stock prices. Right now, company is working on reducing its debt as well. So I think all we need to do is just wait for some more time. Don't make a fresh entry into this counter, because we really need to see how the company will be performing in its upcoming numbers. So idea here is to wait for some more time rather than making fresh entry at this point of time.
All right, so that's the view on Ashoka Buildcon. The next question we're taking is on Hind Copper, and Shabir has got this question on Hind Copper. Is this the right time to enter into the counter? And he's just typing and messaging whether or not this is a short term or long term. Shabir, type quicker. I need to ask the question. So without knowing what your time frame is, I'm going to take the question across to Swati on the chart. Swati, is this the right moment to get into Hind Copper?
Alex, not at all. This particular stock is showing a very strong correction phase, and I believe that is likely to be continued in the near term as well. Downside, it has a very good support at around 160 to 150 levels. If it comes to that level, then you can think about a buying, because the risk reward ratio will be a favorable, but not at the current market price.
All right, so that's the view with regards to Hind Copper. The next question is from Siddharth, who's writing in from Kolkata, and he wants to know the right price and time to add Infosys or TCS from a longer term perspective, or even a mix of both. Asta, I'll come to you on this one. What's the view like? We've seen a significant correction in IT in the past few days. Today, the Nifty IT is comparatively doing better, but do you think that, considering the outlook that has been painted for FY26, it's the right time to enter these counters?
No, I don't think so, because I would really like to see first of all the results, and the key here is a management commentary. We really would like to hear what the management is thinking about this global ongoing happenings. So right now, just wait for some more time, because these stocks are not so much attractive at this point of a time that one can make a direct entry into. So the idea here is not to make a entry either in Infosys or TCS at this point of a time, and results are not now just round the corner. So let's wait for the results and then make any sort of entry into this counter.
48 hours to be precise. It's going to be an interesting break to the trading week. Remember, we're going to be on a holiday on Thursday, but our colleagues are going to be working. Of course, the research team is going to get you insights on
TCS.
Yeah, is it going to be you?
No, that's going to be Puneet. But yes, TCS is set to post its results on 10th of April. And despite of that being a holiday, we'll bring all the coverage that you require on 10th
And tune in
February.
bright and early on Friday morning, because who knows, you could have updates, of course, on TCS, but also from overseas that you need to bear in mind. And the effect of the monetary policy outcome also could be playing out not just tomorrow, but also on Friday. But let's take the next question. It's an interesting one. Tata Motors, it's a stock that has been under tremendous pressure because of the auto tariffs that were announced by US President Donald Trump, 25%. That is seen to have an effect on Jaguar Land Rover, which, as you know, has a large presence in the US, about a third of its volumes coming through from North America as a whole. And the company announcing not too long back, over the weekend, in fact, that it is pausing exports to the US in light of this latest development. It's trading at 592. It's down about 11% in the last 5 trading sessions or thereabouts. We've got Anup, who's bought at levels of 676 on the 18th of March. He's got a long-term view that he's seeking. What should he do now? Asta, this is a stock over the last 4 or 5 years that has seen huge gyrations. It has dropped to double digit. It's gone all the way up to 800 plus levels. What would you do with this?
So company in its commentary, when the results came, they were very much positive about the US business, and they were started seeing some sort of green shoots in the EU, that is a European business as well. But now the things have completely changed. But my idea here is to wait for some more time before making any sort of selling into this counter, although we all know this is mostly affected by the kind of news flow that is going on. But still, I would like to wait, because in their commentary, they have maintained their EBIT guidance. And in fact, I just want to see how their European business pan out to be. In fact, they have certain plans to launch new products in the Indian business as well as. So looking after all this, I think rather than selling at this point of a time, hold it patiently.
All right, so that's the view with regards to where Tata Motors is concerned. Our next caller, Raghu, is calling in from Karnataka. Raghu, a very good morning to you. I believe you want to ask about Alok Industries.
Yes, good morning. Yeah, I hold Alok Industry 2000 quantity. Buying price is probably. So I hold this stock from almost 6 to 7 months. So I want to know if it's good to average now, or exit in loss, or hold.
Okay, and what's the time horizon like for you to keep holding the counter?
Maybe 1 year.
Okay, got your query, Raghu. I'll take this up with Swati. Swati is sitting on a loss of 27,000 rupees right now. Should he continue to hold, average out, or should he book the losses right now?
Overall, as of now, the trend is looking weak, but I will not suggest to book the losses because we have seen a correction in the last 1 year. If the stock find out so good support at around 13 levels, definitely we likely to witness some sort of a reversal in the near term, which might take a counter towards to 2024 levels on the upsides. Wait for an average bidder, because I believe that we might witness some sort of a selling pressure, which will drag a counter towards to 13 to 12 levels. So at that level, you can definitely average out. So your buying price will come down. And if you're getting any rise towards to 20 to 25 levels, you can book your profits.
All right, I'm just clarifying while I'm on the chat, right? We've got Rajesh, who's writing in from Dubai, and he says that he's been accumulating HDFC Bank, and now cumulatively over the course of 30 years, he's accumulated, wait for it, 56,000 shares. At the current value at 1,762, the accumulated value of that is about, I got my calculator out, 9.9 crore rupees. I've told him on chat that he doesn't really need guidance because he's accumulated a significant amount of wealth purely by dint of adding to his positions, and this is over a period of 30 years. Remember that. But Asta, over the course of the next 12 to 18 months, he's asking for what your outlook on the stock is, and based on the fundamentals, right? So this is an individual who's already holding 10 crore worth of HDFC Bank. He's seeking advice. I've said that he doesn't need it, but what advice would you give?
Yes, you are right, Alex. And congratulations, first of all. I mean, so now talking about this counter, first of all, their results, business updates have come in which credit growth was very good, deposit growth was good. And in fact, what I have seen is that their deposit growth have outpaced the industry peers. So it was very, very strong. So I think, and this bank has a potential to move upside from here on the basis of kind of business outlook the bank is giving, because their asset quality is among one of the best asset quality. And NIMs are also at a very good level. So 2000 to 2100 is the price target, which I would like to attribute to this counter at this moment of the time. Remain invested in this counter.
All right, remain invested in HDFC Bank is the view coming in from Astha, even if you're holding 56,000 shares. Interesting. Interesting. I mean, I'm just very curious as to what percentage of his portfolio is HDFC Bank. I've asked him that question.
You did? Okay.
Let's see what his answer is. All right, moving from one bank to another bank, Satish from Bengaluru is calling in. And Satish, a very good morning to you. I believe you want to know what's the right time to buy IDFC First Bank. Is that correct?
Yeah. Good morning. You have got a wonderful, fabulous program.
Thank you so much,
constantly
Satish.
watch it. I'm a retired banker, State Bank of India.
Interesting.
Retired chief manager, and now I'm investing in IDFC.
Okay.
Could you please tell me, because of yesterday's downfall, is it the right time to invest in the IDFC?
Okay. Okay, Satish, and you're a long-term investor, right?
Not so. I'm little short term, but long term I want.
Okay. You want the view. All right. I'll take this up with Astha, and Satish, thank you so much for those kind words. You made our day. Astha, I'll take this up with you. IDFC First Bank, what's the view like?
So view is positive because their business update was good. They have posted a very strong growth in their loans and advances as well as deposits. But if I compare it to the big banks like HDFC, then definitely the traction is more there. But still in IDFC First Bank, I would like to recommend hold at this point of the time. So yes, one can remain invested in this counter. Let's wait for the results to come in because we have to really see if MFI stress was there in their book. So I really need to see how that book is going out to be in the coming quarters. Wait for the results in this counter.
70%. Rajesh, 70% of your portfolio is HDFC Bank. Okay, so ordinarily the advice would be to reduce concentration risk, but then man, you've got a 10 crore holding in HDFC Bank. What do you say to that, right? But we've got Santosh from Chennai who's holding Sundrop, or rather he's thinking of investing in Sundrop brands. I'm not sure. I'm not sure what this company is engaged in. It's in edible oils and food products. From what I can say, it's agrotech foods. It's a 2,900 crore market capitalization company. And Asa, I'm not sure if you track the company. If so, what's the view?
No, Alex, I don't track this company.
Okay, Swati, I don't know if there's too much volume either. So, do you have any specific view on this?
If we're looking towards only the chart setups, definitely volumes are not really doing very well. The price momentum as of now, it's currently trading at 763, and the momentum as of now on a weak side. So not to initiate a long position because we are getting very zigzag rally in this particular counters. So stay away from this particular stock for a long-term investment.
Okay, stay invested. Is that right? Is that reading correct, Swati? For agrotech foods?
Stay away from.
Stay away. Okay, all right. Stay away from something like an agrotech foods. Interesting. It's in edible oils basically, and it has benefited a lot, in fact, from the rising palm oil prices as well. So it's a company.
I must state that our viewer has been reading and he's pointing to a management change. I must confess that we haven't looked at it, and so don't only base your investment decision based on what we're looking at on the charts, or in fact what the fundamental analyst Astha has said, because she doesn't have coverage. So if you've done your own research, then please go ahead and follow the research that you've followed.
Absolutely. All right, the next counter that we're talking about is Dreamfolks. Akshay is asking this question. He wants to know whether this is the right time to buy Dreamfolks from a longer term perspective. Asta, a very interesting business. Do you think, it's the only business right now in the listed space. It's a monopoly stock. Do you think it's the right time to enter something like a Dreamfolks?
Dreamfolks is looking good to us, and definitely if I see their results also, then results seems to be on the decent side, and the kind of industry tailwind this company is having, I think yes, one can make entry into this counter. The only caveat is that right now the markets are very much volatile, so maybe it can move downwards in line with the market movement. So those can be the level like 200 or 195 where one can make a fresh entry. So this is what I believe. Enter into this counter, but at the lower.
All right, so enter into the counter, but wait and watch out for as to how things pan out. All right, we have our next caller lined up. Kamran is calling in from Singapore. Kamran, a very good morning to you. How can we help you?
Wow.
Yeah, hi. Good morning. First of all, I would like to say that your show is really nice and it really helps people.
Thank you so much, Kamran. Thank you so much for watching us all the way from Singapore.
Thank you. So I have one question.
Right.
I normally try to keep at least 2 stocks in each category. I have Apollo Hospitals for healthcare.
Okay.
And I was looking into Fortis Health.
Okay.
So I wanted to know valuation and growth up to 5 years. Is it a good time to invest in Fortis Health or any other stock in this category?
Okay, I believe you're looking at this from a longer term horizon.
Yes, I am.
Got it. Got your question, Kamran. I'll take this up with Asta. Asta, he's adopted an interesting strategy. He's picking up 2 counters from each sector, and he's saying he wants to know whether it's the right time to enter something like a Fortis right now.
So Fortis has recently go up with some acquisition strategy of Shriram Super Speciality Hospital, if I'm not wrong. So in fact, they have acquired that hospital and they have got a very good presence in the Punjab. Their 800 bed facilities are there, and then they have 4 facilities there. So in the healthcare space now, Fortis is also emerging as a good option. So yes, one can make entry into this counter. This is what even I believe. But the only caveat which I'm saying for all the stock is that market conditions are volatile. So that is the major thing to look upon, whether to enter at this point of a time or wait for some more time to get the stability into the market. So we need to really see that. That is the only thing. Otherwise, fundamentals are good for this counter. Go ahead with this.
Okay, fundamentals are good. So that's a view on the hospital space. And thanks once more, Kamran, for calling us from Singapore. Really appreciate that you've taken the time, and thanks so much for your kind words. We've got Siemens that we're talking about, and Ajita from Aurangabad, Maharashtra is asking about this after the demerger, and yesterday it was down 40% because of that. The stock is just about flat right now. What are the prospects? Because if I remember correctly, there was a note that came out today that talked about a 17% upside. I cannot remember who the brokerage was, but Asta, on the fundamentals, would you buy into this right now?
Yes, one can have a look at this counter, but the only thing is that, as I have discussed earlier also, the management commentary which came in few months back, they were not sounding to be very much optimistic, although this demerger has really created the fundamentals on a very stronger side. But since the management was not that optimistic, so I really need to see the results first. Maybe I'm sounding a little bit conservative, but I really don't want to enter into this counter without seeing the result and the management outlook for the coming quarters. So on that basis only, I'm recommending to wait for some more time before making entry.
Okay, so that's the view with regards to where Siemens is concerned. Next caller. Okay, we've seen a drop in the line there, but next WhatsApp queries from Akshat, who's writing in from Greater Noida. He's holding 10,000 shares of GMR Power at an average price of 90 rupees, and he wants a 5-year view on this one. Asta, I'll have to stick with you again for this one. What's the view like for something like a GMR Power? He's sitting on a significant profits of around 2.18 lakh rupees.
Right. So if I talk about this counter, 5-year horizon is really a long one, and definitely this counter is looking good from that perspective. But here I would like to suggest book some of the quantity, maybe not more than 25%, but at least book 1/4 of the quantity which you are having into this counter, because here if the quantity is 10,000 shares, then definitely I believe that somewhere at around 2,000 or 2,500 shares one can put profit in, because he's really sitting on very good profit. But long-term perspective is looking very good for this counter, and we believe that this counter is poised to show more upside from here. Initial target can be set at around 130 to 140 odd levels.
130 to 140 is what you watch out for on GMR Power. Nidhi's got a question for us, and she's writing in from, okay, I don't know where, but she's asking about NMDC. 700 shares is what she's got at a price of 67 rupees per share. She's wondering whether to add more the current price for a period of 3 months. What are the levels that you would watch, and where would you put the stop loss, Swati?
See, as of now, the view is a bit cautious. Downside, it has a cluster support nearby 57 rupees. If you want to keep a stop loss, 57 will act as your stop loss. Upside momentum can be seen only if the stock manages to give the breakout of 70, which is acting as a crucial resistance levels. Any move above that level will extend the rally on the higher side towards to 80 to 84 levels. So as of now, the view is cautious. Try to put the stop loss at 57 and carry your long positions.
Okay, it's time now, ladies, for the rapid fire segment, and you know what this means. We throw as many questions at you as possible over the course of 2 minutes. And let me start by taking a question from Mr. Venkatramanan on Trent. It's a stock that has been under pressure. He's bought at levels of 6,500. Can it be accumulated at the current market price today? And he can wait for 2 years. Asta?
Accumulate, but not at this point of time. Maybe at the lower level of around 4,500 can be done. So yes, for 2 years, hold this counter and accumulate at the lower levels.
Okay, Sankara wants to know whether to invest in Larsen & Toubro right now. He's already holding. He wants to hold 100 odd shares of Larsen & Toubro. Swati, what are the charts indicating?
Yeah, as of now, the view is positive for longer term duration, but if you're getting any dips towards to 2800, 2850, that will attract attractive levels. So buy on every dips towards to 2850, but not at the current market price.
Okay, all right. The next one is on DLF. 50 shares is what Akhil has at 780 rupees. Can it be added at the current level for the medium term? What's the view, Asta?
Added at the lower level, not the current level, maybe at around 600 to 580 odd.
Okay, Vaibhav from Mumbai is writing he's holding 12 shares of Hyundai, purchased at 1868 a piece. Should he hold or exit? Asta, what's the view like?
Hold is the strategy at least.
Okay, viewer asking for penny stocks. No penny stocks are recommended on this program. Suzlon is the name of the counter we're talking about. Kunal wants to know 500 shares. He's not given us his time frame or his buy price. But would you hold for the long term? Asta?
Yes, we would like to hold this counter for the long term. Price target can be set at around 50 to 60 odd levels.
Okay, so Naveen from Kadapa is writing in. He's bought water-based 90 shares at an average price of 72, and this was after the budget announcement. He wants to know whether he should book the current losses or should he continue to hold. Swati, on the charts?
I will suggest to book the losses on every rise towards to 85 odd levels on higher side, but not to carry the long positions for a longer term duration.
Kadapa in Andhra Pradesh. Wow, fantastic. Angel from Mumbai is asking about Hindalco at a price of 676.29. Would you hold or would you add more at the current level? What's the view on the charts, Swati?
My view is cautious, but not to book the losses at the current market price. If you want to buy or add on, wait for some more time. I believe that the stock will find out a support nearby 500 to 480 levels. That will be a good attractive price to take a average of positions. So at the current levels, just hold your long positions.
Okay, on that note, that brings us to the end of the rapid fire round. Asa, Swati, thank you so much to the both of you. It's because of you that our viewers are benefiting, and appreciate the time that you have spent with us. And viewers, well, you've absolutely made our day, and our producers sitting in production control room as well are smiling. Their teeth are very clearly visible because so much love has poured from you today, and hopefully this program continues to help you out over the course of your investing and trading journeys. Do stay tuned. Lots more coming up, starting with Know Your Company up next. Do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही code बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get? Oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Hello and welcome to Know Your Company. It's a show, of course, which gives investors hopefully powerful and actionable insights into the fundamentals of a single listed company daily. Today we're going to track HPCL, and with me is Mihika Barve, and of course she tracks oil and gas quite closely and therefore will help me break this one down. In terms of what the company does, you've seen petrol pumps of HPCL across the country. And we have those dotted even in the remotest of areas like Spiti, etc. as well. We find HPCL pumps, and therefore it's the third largest Indian refining company in total sales, but also one of the largest distributors of oil. In terms of refining though, it owns 2 refineries in Mumbai as well as in Vizag, and it has around a 22,000 plus strong nationwide retail outlet network. It distributes its oil across this retail network and thereafter retails it to the end customer. You'll find these dotted across the country, of course, from Leh all the way to Kanyakumari. You'll see that across the board. So HPCL very, very clear on what it does. It does oil and gas distribution. Now, in terms of what it is, let's dive deeper. It's an integrated company involved in the entire value chain. So it acquires oil, refines it, thereafter distributes it. So the acquisition of oil, if oil prices were to go up, therefore the profitability starts to get impacted. Currently, oil prices have sunk and therefore positive. And that's why the company is in focus, and hence we're doing a KYC on it. Now, in terms of markets and sells diverse range of petroleum products, not just your petrol and diesel. It also has a growing presence in oil and gas exploration as well as in the renewable space. It's ancillary to what it does, and therefore oil and gas distribution will oil and gas exploration will likely allow it some more leeway with regard to profitability, some more certainty with regard to profitability, because currently its profits depend on crude oil prices and refining margins, which Mihika will explain in better detail. So, Mihika.
You always have GRMs, the term GRMs thrown at you via the companies. It's in their financial results as well as analysts. This stands for gross refining margins. The refining margins is basically the value that a a certain petroleum product has from, which is produced from 1 barrel of crude minus the actual crude oil cost. So this is when you have lower crude prices, it actually benefits the refining margins, and then this has a follow-through effect to the marketing margins. Now these are not revealed by the company, but you do have analysts who closely track the company naming them. The revenue from selling your products, which is mainly your petrol and diesel, which is widely tracked, minus the refinery production costs. And like we all know, you have petrol and diesel prices that are currently fixed right now. So lower the prices of crude, it kind of follows through. Now, in terms of the kind of risk that the company may be facing right now is, like I said, petrol and diesel prices are currently fixed at the pump. So the volatility in crude prices is what has an impact on their refining margins and thereby their marketing margins. And this could be hurt if crude prices rise. And it's also key to note that the government just yesterday has hiked the excise duty, which is a duty that the central government charges on a company like HPCL, and this excise duty is actually calculated and included in your petrol pump price. However,
this is for refiners.
Yeah, this is for refiners.
Just
so
trying
it's
to
a marketing
clarify
company as well, right? So
Correct.
this actually has an impact on your petrol price.
Correct.
It has an impact on your marketing margins, but we as consumers will not have a price increase. It will actually be undertaken by HPCL. The second thing that's very key to understand is LPG losses. Now currently HPCL and the other OMCs have to sell their LPG cylinders at a subsidized rate, which is lower than the cost of making these LPG cylinders and what's inside them. And till now, in 9 months FY25, HPCL specifically has seen losses of 7,600 crores. However, yesterday the oil minister said that the same excise duty I currently talked about will be used for the compensation of such losses. And it's not new. OMCs have gotten compensation for their LPG losses back in FY23 as well, but it did not come through in FY25. It was expected in the budget. But the company does need this in order to insulate itself from the heavy LPG losses that it's currently facing and could face going in the future. But Harsh, it's time for the KYC ratings. Why don't you give the viewers of what we're going to analyze?
Absolutely. Let's do that. Let's quickly look at what we'll analyze on this one. We'll have the income statement, the balance sheet, the cash flow, return ratios as well that we'll analyze. We'll also look at shareholding, street cred, and street coverage. But outside of that, we'll also have a look at the valuation picture. So we'll look at all of these when we're analyzing this one, HPCL. Meeka, start off with the income
Let's start off with the income statement. It's a little trickier because it has seen volatility. Now, I want to go with just the revenue, EBITDA, and net profit numbers. EBITDA margins, while it's something you usually look at for a company, for something like an HPCL, that's not what you look at. So revenue, in terms of the 9 months FY25, you've seen a growth 2.3% uptick. This is higher volumes and even a certain hike in petrol and diesel prices like you've seen during the financial year. However, EBITDA is what's taken the hit. You've seen volatility in the gross refining margins as well as marketing margins because your oil prices have been volatile this year. That's one of 9 month FY25 places. EBITDA is down 46% and even their net profit is down 66%.
How much of this is impacted by LPG as well? Because you suggested around 7,600 crores of losses.
Is losses. So it's kind of offset whatever profit it would have actually met. This is kept in a separate buffer.
But this would have been much better off.
Much better off if LPG compensation had come.
So likely if that LPG compensation were to come, Meeka, this number will change.
Yeah, and it's widely expected to come because it's gotten that in the past. But from a 3-year basis, and it's key to know that FY23 was one of the years that all the OMCs faced heavy losses despite that kind of, downtick in revenues then. You've seen over FY21 to 24, revenues growing at a 36% CAGR, EBITDA at 24%, and net profit at 17%. And that's why we've given a neutral rating on this one, but it's key to know their integrated margins. Now, integrated margins are your refining as well as your marketing margins blended. Now, in Q3 FY24, 7.4 rupees per litre. Q4, you've seen 8.8, and you've always seen a kind of a volatility. Q3 FY25, it stood at 12.5, which is in the super normal range. Q4, you saw some correction. Prices have always been volatile for oil, 10.1, but it's actually Q1 of FY26 that the companies are again witnessing supernormal margins. So in terms of, while they do stand very high and higher than what we've seen even a year ago, because of the volatility of earnings throughout any quarter, we've given Hindustan Petroleum's income statement a neutral rating. But Harsh, what does the balance sheet?
Sorry, Q1 FY26, you were suggesting that it will get better.
Yeah.
But also want to point out this excise hit that they will take. Will that knock off the possibly better margin they would have made in Q1?
It does have some impact that because they're going to absorb that ₹2 cost, so that increases.
Correct.
And furthermore, it all depends if prices sustain. Because if prices continue to trend lower, then you have inventory losses. Because in Q3, Q4, you've seen them buying oil at a much higher price because at that point that was a cheaper rate. But now we are hitting 4-year lows left and right.
So what I'm trying to say therefore is, should you keep higher hopes from Q1 FY26?
For now, the ₹2 excise duty does have an impact, but they're still so maybe a ₹13 margin, they're going to an 11 margin, which is still an uptick sequential.
Sure. Point taken. Okay, let's go across to the balance sheet. Let's quickly look at how the balance sheet is stacking up. When you're looking at equity, largely flat. When you're looking at it from a 3-year perspective, that increase just seems to be an increase from a perspective of bonus shares, stock split, etc. So therefore, no real change per se from an equity standpoint. Let's look at reserves and surplus as well. There you go, fairly steady in that sense, even where reserves is concerned. When you're looking at debt though, and this is where it starts to really become important. The debt picture, the borrowing number has increased by 1.5x. And is this the correct way or the best way to look at it? I'm not so sure. So the way we'd rather look at this number is EBITDA to borrowing. Whether my EBITDA growth is matching the borrowing growth. And we've seen a 50% roughly EBITDA growth from FY22 to FY24. The borrowing number also has gone up in the same kind of clip, and therefore we've given this a neutral. This is the real key number to look at, Mihika.
And it's key to note that why borrowings have gone up, because they had a capex. They're building a Barmer refinery, which has around 53,000 crores of capex spending that has been put in. So that's something you need to realize. But that's why you've seen that borrowing number seen an uptick, but you need to see how EBITDA and borrowing have grown, like you said.
And borrowing is also because of subsidies, right, Mihika, to a certain extent. When you have those large subsidies which are pending, you'll park some of that within the short-term borrowings on the liability side. Those assets will get parked. And that's the other piece. But let's look at cash flows. And cash flows, we'll just look at the 3-year CAGR. And the most important metric here is the cash from operations which are coming through. Everything else will likely not be the most important. And therefore, when you're looking at cash flow from operations, and we'll focus in on only this one number, it's around a 11% CAGR growth that we've seen from March of 2021 to March of 2024. So that number looking okayish on a 3-year CAGR basis, not bad. Of course, there's been some capex, some fundraising due to various activities, and therefore your net cash flow is negative currently. But this is the key number that we'll want to focus in on, the cash flow from operations, which has grown fairly okay for a PSU in a price-regulated environment where your prices are fixed. And therefore profits are largely going to be capped.
And we've not seen since 2022, we've not seen prices change every day. And even your operating cash flows, net on net, they stand higher than what they're investing as well.
Correct, absolutely. Let's therefore look at return ratios.
Yeah, let's look at your return ratios. Now there is volatility even there, and we've seemed to establish that. FY22, let's see, your return on common equity stood at 18%. It took a dip in FY23. Like I said, there were losses experienced by the entire space, but we did see supernormal growth in FY24 because there was a high recovery in terms of your losses at 41%. Return on assets, they stood at 5% in FY22, dipped to -4% in FY23, 9% in FY24. And then return on capital employed, you had 13% in FY22, FY23 does not come into consideration in this space because of the losses, FY24 28%. So there's been a lot of volatility, and it's also key to, you also have to take into consideration what the picture will look at as the FY25 numbers come in place. So you've given a neutral rating in terms of return ratios, while they are healthy return ratio metrics. When you when they are positive, but because of the volatility over the years, it's a neutral rating on this one.
And will this always be volatile, Mika? That's really the key question.
Yeah, but that depends on if they are in a capex cycle, how our crude price is playing. There's so many moving factors as well as demand when you have renewable energy coming in, but demand doesn't seem to be as they're seeing volume uptake. But I think we should go to the shareholding. Well,
one piece here, Mika. Yeah. So on return ratios, why are we ignoring the FY23 number? And I'm covering this only because we've not flashed it anywhere as part of our graphics. But the FY23 number has a loss. So there's a 9,000 crore loss on a standalone basis, which HPCL has made in FY23, which is why you will have a negative return ratio, or therefore return ratio ROC not applicable. But otherwise, you'll see these fluctuating return ratios because there'll be bouts of profitability followed by losses. So this is par for course for a company like this. If you're looking to invest in a company like this is something you should expect and anticipate in any case.
That's right.
But yes.
Yeah. Shareholding, well, first it's a government-owned company. You have Government of India holding majority share, 54.9%. That's not changed over the course of March 22 to December 2024. DII interest at March 22 was high, 34%. This has fallen as of December 2024, but only because your foreign institutional investors have taken interest, and you've seen a 10.11% to a 14.44% shareholding change. And you've also seen some retail participation coming in to 8.84%. So from a shareholding pattern, you have strong Government of India as the promoter. It's a PSU company. You have the backing, and they do sweep in when in times of needs. You have domestic as well as foreign interest, and even a retail aspect to it. So it's a thumbs up on the shareholding. Harsh, but how does the share performance, stack up?
So just quick correction here. The March 2022 number of retail is around 10%. So that's one change we'll need to make. So please keep that in mind as well when you're looking at these numbers. Apologies. Yes. Sorry.
Street cred.
Street cred. Yes. Let's look at how the stock has moved actually. And in terms of the way it's moved, we've had a very muted sort of performance on the counter. 1 month, of course, we've had very good move given the way in which crude has moved. And a lot of the movement in the stock price will depend on crude. Mika, please correct me if I'm wrong. But 11% in the last month. The year-to-date number, though, is more muted, a negative 12% number. The 1-year returns are 17-odd%. And the 5-year returns are around 162%. So it's been a 2.5 bagger in that sense in the last 5 years. Now, in that sense, it's a neutral. Because when you're looking at the way in which the stock price moves, it largely moves in line with crude. And it's been a fairly flattish kind of move, at least on the year-to-date period, rather negative 12% year-to-date and just about 17% on the last 12 months. So given the volatility, we'll give this a neutral on that count. Mika, street coverage.
Very widely tracked. You have over 30 analysts tracking the stock. You have 64% of the analysts that actually track the counter have a buy call. So 22 analysts recommend a buy, 5 recommend a hold, and only 7 recommend a sell rating on this counter. In terms of the return potential, you do have a 14% return potential for HPCL. So it's a thumbs up on this one. It's widely tracked. You do have the street more bullish on the counter. And lastly, Harsh, I'll give it to you for valuations.
Okay, let's have a look at those. Let's quickly pull those up if we can. When you're looking at the price to earnings ratio, the current price to earnings is around 8 times. We won't look at this 1 year forward because it's more difficult to gauge. And therefore, let's look at it on a current price to earnings basis, around 7.5 odd times. Its peers, BPCL, IOCL, slightly more expensive, nothing material per se, but maybe 10 to 20% more expensive. But when you're looking at 5-year averages, the 5-year average valuation is at least 20% lower for an HPCL to what it is currently. And it has always traded at a discount to a BPCL and IOCL. And therefore, we're going to give this a neutral because you're largely in line in that sense with both 5-year averages as well as with history.
And Harsh, I want to point out that we've seen, OMCs have always known for single-digit valuations. We've seen periods in FY23-24 that the stocks were trading at 3 to 4 times. And a reason why HPCL has always gotten, discount in terms of valuations is because it is the biggest beneficiary when oil prices go lower, because it markets more products than it refines. So that's one of the key aspects I want to highlight. But a neutral picture.
I'm not sure. Do we have the shareholding pattern? If we can pull that up one more time, very, very quickly. Okay, I believe, there we go. Perfect. So, make a quick check with regard to shareholding. 55% government ownership, that remains quite solid. The DII is held around 15%, now hold 22% nearly. FI holding has gone down, as is always the case when DIIs increase their holding. And the retail participation has gone down slightly. So, largely, this is why we are giving this a thumbs up, because there's fairly steady government holding. No divestment expected either. And therefore, you're going to see a steady state on the shareholding front, and hence a thumbs up. Let's quickly wind all of this up. Let's look at all of our metrics and give this a final rating. Income statement, balance sheet, cash flow positive, return ratio is neutral. And we look at shareholding, which is positive, street cred, shareholding, which is a neutral, street cred, which is a thumbs up, street coverage neutral, and valuation picture a thumbs up. And therefore, we're arriving at around 5.5 on 8 on our KYC ratings on this one. But, we spoke with Yogesh Patil, who's the Director Research and tracks oil and gas at Daulat Capital, with regard to HPCL, his views, and how he views this from an investment perspective. Listen in to that conversation.
First of all, the crude prices are near to $63, $64 per barrel. And the HPCL would be the biggest beneficiary out of that, mainly because of, firstly, the gross marketing margins of HPCL, looking into the petrol and diesel side, is in the range of rupees 17 per liter. Okay. But yesterday there was one development that the oil minister has announced that rupees 2 per liter increase in the excise duty of petrol and diesel. And that will be collected to fund the subsidies which the HPCL or the OMCs have incurred in the FY25. That same collection would be utilized to repay the under recoveries incurred by the OMCs or HPCL in FY25, and that amount was 41,000 crore, closer to that. However, the timing of that reimbursement to OMCs is unknown, or HPCL is unknown, and the OMCs, as per our understanding, they are still waiting for the official notification from the oil ministry. The only point that they will start accounting once they will receive the official notification. Secondly, there is one more development yesterday. Domestic LPG cylinder prices increased by 50 rupees per liter. And that is a positive for the HPCL. Under recoveries will decline rupees 3.5 per kg, or closer to 10,000 crore less under recoveries for FY26 period for the OMCs. And HPCL will be the beneficiary out of that. So they have also mentioned that the MOPNG will revise the LPG prices every fortnight or month based upon the international LPG prices. So all in all, these are the two positive developments for the HPCL. Looking into the falling crude oil prices, HPCL will be the beneficiary, biggest beneficiary among the OMCs, because the HPCL is having higher marketing to refining ratio. What I mean to say, the marketing volumes of the oil products are much, much higher compared to the refining throughput of the HPCL.
Yogesh, but the latest excise duty hike, it's not going to be passed on to the consumers. So it's going to be absorbed by the OMC. So does this kind of offset any benefit it would get from the lower crude prices?
Yeah. So in the last 3 to 4 trading sessions, what we have seen the crude decline from $75 to $64 per barrel. That indirectly implies that the gross marketing margins or the integrated margins of the OMCs or HPCL has improved by 5 rupees per liter. In general, what we calculate, $1 per barrel decline in oil prices implies a 50 to 60 paisa per liter improvement into the integrated margins of the HPCL or OMCs. That's one benefit. Secondly, as you mentioned rightly, that whenever there is an excise duty increase, and as of now, that has been absorbed by the OMCs. But sitting today, considering the today's crude prices, the HPCL and the OMCs are earning a super normal gross marketing margins on the sale of petrol and diesel. So still there is enough cushion for the HPCL for the better earnings prospectus of the company.
Got it. And now we know that, this excise duty revenue accretion for the government will be going for LPG, compensation. So what's the kind of compensation that HPCL needs for FY25? And could this be the same cycle that we see, from years coming by? They see losses for the first 9 months, it's reported, and then they just keep on getting compensation.
So good question. So your question was quite straightforward. These 2 rupees per liter kind of excise duty increase will collect approximately 35,000 crore in FY26. Now coming back to the HPCL portion or the share, in FY25, as per our calculations, the HPCL has incurred the closer to 11,000 crore kind of under recoveries on the sale of domestic LPG. What we believe, out of this 35,000 collection in FY26, the HPCL will receive closer to 9,500 crore, and that would be a net cash inflow to the HPCL. Net cash inflow will lead to the increase in equity value of HPCL, and what we expect, that would be in the range of 30 rupees per share for the HPCL.
Got it. So, amid all of this, how do you expect HPCL to perform in Q4 and FY26? What kind of integrated margins are you building in?
FY25 or quarter 4, FY25 is already over. We have released our preview report also. In that, we have mentioned the OMCs and the HPCL will post the weaker set of number, mainly because of 3 reasons. First of all, during the Q4 FY25, Singapore benchmark GRM was a weaker, $3 per barrel compared to the long-term average of $6 per barrel. That's one reason. Secondly, gross marketing margins were lower compared to the quarter 3 FY25, which were lower around 3.5 rupees per liter. And thirdly, looking into the inventory losses, there will be a slight inventory losses on the crude and the product side, which will again hurt or impact at the EBITDA level. Lastly, touching to the subsidy, exactly looking into the last year FY24 compared to the Q4 FY25, in FY24 we haven't seen any kind of LPG under recoveries, so that will also impact in a Q4 FY25, considering HPCL will have a closer to 3,000 crore kind of LPG under recoveries during the quarter 4 FY25. So the numbers for the Q4 FY25, HPCL would be a weaker on Q1Q and YY side. But what we expect in Q1 FY26 and Q2 FY26, sitting today, gross marketing margins are super normal level, even despite an increase in excise duty 2 rupees per liter, that are in the range of 15 rupees per liter. That will definitely boost up the Q1 FY25 earnings. Secondly, GRM is on a recovery mode. Yesterday's closing Singapore benchmark GRM was a $4 per barrel. And yeah, there will be some gains because this excise duty has increased. That will also lead some gains on the oil products. Definitely, it would be a positive result as compared to the Q4 FY25.
Got it.
Okay, quickly to recap the rating, let's look at all the parameters one last time. That's how they stack up: income statement, balance sheet, cash flow, return ratios. Let's look at shareholding, street cred neutral, street coverage, and valuation picture. So that's how it really stacks up. 5.5 on 8 on our KYC ratings. But with that, completely out of time on this edition of KYC. From Mihika, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get? Oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Hello and welcome to Markets at 12. This is Anushi Vakharia. Now currently, if you are looking at what the global phenomenon is and how the Indian markets are, the one topic that we have been discussing about is the Trump tariffs. In fact, what we have seen in the Wall Street is 3 straight days of decline in terms of where the markets are headed. US markets have been on a roller coaster ride. In fact, yesterday we saw the 3 indices clocking in their lowest returns in the 1-year period that we are looking at. There was some recovery that we saw in the later part of the day, but overall there was some negative connotation that we have been seeing in the US markets. However, in the domestic side, the markets have seen some bouts of recovery today in trade, with the Nifty 50, if you are looking at that, seeing around gains of 1.2% in trade. Nifty 50 constituents up in the last half an hour or so. We have seen some stable trading over here. So around Nifty 50 clocking in gains of 1.2%. In terms of where the other benchmark indices are headed, Nifty Bank seeing around gains of 0.9%. So that's where the benchmark indices are headed. In fact, if we look at where these point contribution is for the Nifty 50, Infosys, SBI and Axis Bank are in focus, being the top contributors on the point side over here. Whereas something like a Trent, Hero MotoCorp and SBI Life are under pressure. We did see Trent seeing around a 10% of cut yesterday after it came out with its Q4 business update. So that's where the Nifty 50 constituents are headed for the day. In fact, if you look at the advanced decline ratio and see how the overall market breadth is, we are looking the declines in the ratio of around 1,775. This is in contrast with around 321 of declines that we are looking at. So markets favorably in green today, some strong recovery that we are seeing on the back of some positivity on how the negotiations are going to be. Would there be more measures being taken place? So that's as far as where the benchmark indices are confirmed. We are looking at 1,965 gains and around 336 of declines that we are seeing. But let's also see how the broader markets are faring. In fact, if you look at the Nifty Mid Cap 150 are seeing gains of around 1.6%, while Nifty Small Cap seeing gains of around 1.72%. So broader markets clearly outperforming the benchmark indices, which was not something that we have been talking about in the last 2-3 sessions itself. Let's see how the top contributors are. Which are the top contributors in the Nifty mid-cap space? So if we are looking at some of the key contributors here, we have names like Lloyds Metal, Coromandel and BSE in focus, seeing gains of around 4 to 5% each. While on the other side, Delivery is seeing cuts of around 7%. Do note that Delivery was one of those stocks in yesterday's market. It was in the green. This was after it announced acquisition of around 1,000 crore of the next Ecom Express. So that's why it was in focus, seeing some correction in trade today. Astral, Vodafone, other counters seeing cuts of around 1.8 to 1.9%. But let's also pull out the small cap 250 index, see how that one is doing, which are the top contributors here. So in terms of where these small cap 250 gainers are concerned, we have something like a Castrol, PNC, Infra 361 in focus, which are seeing cuts of around 2%. But on the green side, we have something like 5-Star Business Finance, Vijay Diagnostic and Chola Holdings seeing gains of around 7 to 9% each. So it's a fairly good place right now in the market where the markets are concerned. We are seeing Nifty 50 doing about 1.2% up in the trade. So that's as far as where the benchmark indices are confirmed. But let's also pull out the sectoral indices heat map, see how the sectors are faring in trade today. And one such sector which is in focus is the real estate sector. This one sector is seeing gains of around more than 1% each, 1.77%. And this is in focus on the back of a couple of business updates which have come out. So firstly, starting off with something like a Sobha Limited, if you are seeing, they came out with a strong Q4 performance. In fact, if you look at the total pre-sales number, we are looking at 1,836 crores or 22% of a growth here, wherein Sobha's share, if we are to consider that stood at about 1,370 crore, registering about a 7.5% of an uptick. Average price realization, however, saw about a 5% growth in the quarter. But it's the FY25 numbers which are in focus. If you look at the FY25 pre-sales, they were down about 5.5% for the year on the back of some launch delays which took place over the course of the year. In fact, the company in its Q3 con call had specified about the pre-sales, revised pre-sales guidance matching up to the FY24 levels. But this was after the company said that it wouldn't be able to achieve the 8,500 crore mark that it had initially guided for and had revised it to the FY24 number. However, the company was unable to achieve that number as well. Sobha missed the revised guidance of 6,644 crore number in terms of where the pre-sales were for FY25. But new launches, if we are talking about, that included the likes of Sobha Madison Heights along with Sobha Hamptons. So overall saleable area of 3.67 million square feet that we are looking at. Other than that, they also launched Chartered Birdsong, which is a plotted development project as well. Again, moving on to something like a Godrej Properties. However, Godrej Properties, a strong business update is what we are seeing. It beat its FY25 pre-sales guidance of 27,000 crore by recording a 31% of a jump in its pre-sales for the year, which stood at 29,444 crore. So more than 9% of a jump than it initially guided for is something that we are looking at. Business development, if we see, that stood at 26,450 crore. Do note that the company had already beat its annual business development guidance in the third quarter itself. In terms of where the new launches are concerned, they launched key projects like Godrej Riverine in Noida, along with Godrej Astra in Gurugram, which clocked in a booking value of around 1,000 crore, along with a Godrej Madison Avenue in Hyderabad, also seeing around 1,000 crore plus of booking value, which is there. Q4 pre-sales, if you have to take that into picture, that stood at 10,163 crores, so 7% of an increase that we are looking at. So Godrej Properties, a strong business update is what we are seeing. That's why the stock is in focus. In fact, Axis also came out with a note on the same, wherein they're seeing a 90% of an upside on the stock. So this is the overall flavor that we are looking for the real estate space. But also, let's shift our focus to the pharma sector. The space is in focus after Goldman Sachs has initiated a buy on both Suven Pharma and Piramal Pharma. Varsha joins us with more details on this.
Thank you for that. So let me start with Suven Pharma, wherein 28% upside potential is what Goldman Sachs is expecting. Now let's see what they are saying. They're saying the brokerage said that it expects a strong rebound and structural growth in the current financial year. The same will be driven by continued traction in its 3 to 5 drugs, plus new potential approval of the new drugs in the next few years. Also, the Goldman Sachs is also bullish when it comes to successful integration of Cohance, Sapala and NJ Bio. So these three companies were recently acquired by Suven Pharma. So Goldman is actually betting the growth for Suven Pharma on the back of these three entities. They are also expecting turnaround in AgChem macros. Now that is agrochemical macro environment. if you see, they are expecting the combined entities EBITDA to grow at a compounded annual growth rate of over 20% over the medium term. While let's shift our focus to Piramal Pharma and let's see what GS is saying about that. So they're saying that the company, that is Piramal Pharma, is well placed within its coverage to deliver top quartile profit growth driven by high operating and financial leverage, and it estimates Piramal a profit before tax margin to jump from 3% to more than 16% in 2028. They've listed few reasons for its projection. One is the CDMO business is estimated to post a strong sustainable growth post FY26, and the CHG capacity that is expected to ramp up from the current fiscal. Lastly, the company's India consumer healthcare business will also turn around, is what Goldman Sachs is betting on. So these are two companies where Goldman Sachs has initiated coverage.
Okay, so in Pharma and Piramal Pharma in focus on the back of Goldman Sachs notes. Thank you, Varsha, for those details. Both the stocks seeing gains of around 2.5 to 3% each. But another stock which is in focus is something like a Bharat Electronics, and this is after the company has received a 2,200 worth of an order, and this is for electronic warfares from Indian Air Force. So if we are taking the cumulative order till date for FY26 in picture, that stands at about 2,803 crores so far. Now do note, in terms of where the FY25 was for the company, they recorded about a 16% of a growth in their revenues, which stood at 23,000 crore, which was in line with what the expectations were. However, it was the growth number which was a disappointment across the street. They had seen orders worth about 18,715 crore in the FY25 fiscal year. This was against the guidance of 25,000 crore. So they missed about 26% of their guidance owing to certain delays in some of the key orders, 3 key orders which were expected from the Defence Ministry itself. If you have to take the order book into consideration, that stood at about 71,650 crore as of March 24. There were a couple of expectations now for FY26. So in more than this 2,803 crore of current inflows that we are looking at, a couple of other order inflows which should be in focus is something like a QR SAM order worth about 25,000 to 30,000 crore, which the company expects by this year end, that is FY26. And along with that, some of these next generation Corvette related orders to the size of 14,000 to 15,000 crore is also something which is likely to be in focus. Along with that, as mentioned, that in FY25 we saw a couple of delays in terms of where the orders are. So there should be management commentary in the fourth quarter update should be important to watch out for, whether these order slippages that were there in the fourth quarter would be something that we should be watching out for the first quarter FY26 period itself. So BL in focus. Currently the stock is up around 2% in trade today. But let's move to brokerages. Morgan Stanley has come out with a note on IndusInd Bank significantly cutting its target price while maintaining an equal weight rating. Let's bring in my colleague Harsh with more details on the same.
Well, yes, so they've cut their target price, of course, and by quite a margin. Let me spell it out: 1,105 to 755. So that's a large cut. They're building in weaker earnings at least over the next year or so. They're factoring in large treasury-related impact into the FY25 EPS. Now, mind you, the pre-tax treasury impact is likely to be 2,100 odd crore as per company estimates. Yet the final number is awaited, and of course the RBI has directed the company to put that out ASAP. The book value per share, therefore, in terms of forecast, falls roughly 4% for FY26 and another 5% for FY27. That's the expectation, that headwind will continue. They've raised the cost of equity assumptions amid the increased uncertainty around both leadership as well as strategy, and on the back of that there's this large cut in terms of target price.
Okay, so that's where we are seeing for the IndusInd Bank a huge cut over here. Currently the stock about 0.5% up in trade. But another sector in focus is the financials. Axis Bank and PNB Housing are buzzing, and this is as Goldman Sachs have upgraded both the stocks to but and even hiked the target price. Harsh joins in again with more from this report.
Yeah, it's a big one. This one is a big one, pointedly because Axis Bank upgrade to a buy from a neutral, target price hike from 1162 to 1288. That's a significant hike as well. They are saying that the mean reversion story is already going to start to play out. Profitability, growth, both will improve. They're seeing better visibility with regard to PPOP, which is operating profit, to return on assets, which is a measure of profitability. That should get better and better going forward. They are expecting both Axis Bank's valuation differential versus peer banks as well as profitability to aid the target price going forward. They've basically reduced the discount that currently sits between Axis and peers, which is roughly 35%. They believe that the differential should be lower at around 23%. Now, in terms of the other big upgrade, Goldman Sachs on PNB Housing upgraded to a buy from a sell. They've hiked the target price from 934 to 1184. They believe that improved confidence in earnings outlook, better profitability, which will likely remain resilient and only get better from here, and lending spreads are expected to expand as well. Improved visibility on the growth profile as well as asset quality trending better than peers should aid valuations, which are set to re-rate according to Goldman Sachs. So bullish on both of these counters.
Okay, so bullish on both the counters, PNB Housing and Axis Bank is what we are saying. Thank you, Harsh, for all those key details. But another stock which is in focus is FMCG giant Titan, and this is on the back of its fourth quarter business update that we are seeing. Mahima joins it with more details on what the developments are for Titan.
Right, so Titan is shining today, and this is on the back of its strong Q4 update, and this is of course on the back of how gold prices have risen so far. The jewelry growth is strong, but studded mix has slightly declined. The company has reported a 25% growth in their overall revenues. Jewelry business saw 24% growth. The growth is of course on the back of increase in gold prices. Plain jewelry saw a growth of around 27%, and gold coins saw a growth of around 65%. Elevated gold prices have led to a sluggish demand for consumer at lower price points and a single-digit bar growth. But on the higher end, the higher price bands have sustained the overall demand and have also led to a double-digit growth in ticket sizes as well. Studded jewelry mix has registered a low double-digit value growth. Solitaire segment has seen green shoots where they saw a turnaround and registered both buyer as well as value growth. In terms of like-for-like sales growth, that stands at around 15%. Tanishq has also expanded internationally. They've added new markets like Sharjah in UAE, in Atlanta and Seattle in USA, and they've added 16 new stores, of which 4 are Tanishq stores and 12 are Mia stores. In terms of watch and wearables, they've recorded a strong growth of around 20%. Analog watches clocked a growth of 18%, and they added 41 stores this quarter. Eye care saw a growth of around 18%, both in terms of revenue as well as buyers. E-commerce saw significant growth in this particular segment and added 2 new stores in UAE region. They closed around 11 net stores in India. Emerging business, fragrances saw a growth of 26%. Fashion accessories saw a growth of around 2%, but overall Taneira sales declined by around 4%. Lastly, CaratLane saw a revenue growth of 22% driven by healthy studded portfolio, and buyer growth was in mid-single digits. The like-for-like growth for CaratLane was around 11% this period, and around 17 domestic stores were added this quarter. Now, in terms of what brokerages are penciling in for Titan in terms of its Q4 update, Citi has maintained neutral with a target price of 3550. They're saying that something to watch out for will be the margin trajectory once the results are announced. Macquarie has maintained outperform with the target price of 4,000. They're saying they expect 20% standalone EBITDA growth in Q4, and healthy growth in Q4 is encouraging and enhances their confidence in their EPS estimates. Lastly, Morgan Stanley has also maintained overweight with a target price of 3876, and they're saying that the headline is strong, but there are internal, that is the different segments are giving mixed signals. So this is the overall view as to how Q4 has panned out for the jewelry giant that is Titan.
Overall, an optimistic print is what we are looking for, something like a Titan clearly shining in trade today. But another jewelers in focus on the back of its fourth quarter update is something like a P.N. Gadgil Jewelers. Mahima, what can you tell us about this counter?
Right, so mixed views here. The revenue growth has been in mid-single digits, that is of 5%, that is on the consolidated level. But overall studded mix has improved for the counter. The stock is up on the back of that. The e-commerce segment has seen a significant growth this quarter of around around 244%. Franchisee operated has seen a growth of 37%. Retail segment has seen a growth of 50%. Festive season sales has risen by around 40%. This is on the back of Gudi Padwa, and because PN Gadgil is focused on the west side of India. The studded ratio improved to around 7.4%, and this is up 31% almost. Same-store sales growth stood at around 26%. They've added 5 new stores this quarter, with 4 of which are company-owned and 1 is franchisee-owned. And the management has also given the outlook of FY26. They expect a strong growth in FY26, which will be fueled by robust demand, and they are set to launch around 20 to 25 stores overall in FY26. So this is the overall view as to how Q4 has panned out for PN Gadgil.
Okay, thank you, Mahima, for those updates in the consumption space that we are seeing on the back of the Q4 numbers. But another stock which is in focus is Bajaj Finance, and this is after CLSA has maintained an outperform rating on the stock with target price of 11,000. Harsh joins us with more details from this report.
It's a very interesting one. They call form temporary but class permanent. That's what they've titled the report as. They've correlated a Bajaj Finance to a Sachin Tendulkar. They've spoken about how Sachin scored 100 centuries across a career span of around 24 years. And they also emphasized the point that the 100th 100 actually came with a lag of 1 year, where a lot of people had actually written Sachin off by then. And therefore, they're saying that this was just a blip year for a Bajaj Finance. And the fact that they've been able to execute so well over the many years, makes it stand out. In fact, they put out some numbers for the last 15 years, FY 2010 to FY 2024. They're saying Bajaj Finance has delivered an AUM CAGR of 34%, pristine asset quality, ROE of 20% plus in 10 of the 15 years, therefore correlating it to a Bajaj Finance clearly. FY25 was a year when it was relatively in bad form. Growth slowed down to 26%, ROE moderated to 19% for the 9-month FY25, driven largely by higher credit cost. Asset quality headwinds now receding. They're expecting Bajaj Finance to regain its class in FY26. Investor focus will shift, therefore, to NIMs and asset quality, which should get better, and therefore the focus will shift towards growth now. So very positive, 11,000 being the target price.
Okay, focus shifting towards growth now is something that can be expected for Bajaj Finance. Thank you, Harsh, for those details. Starting today, LPG prices will increase by 50 rupees per cylinder, affecting both the general consumers and the beneficiaries of the Ujjwala scheme. For general users, if you see, the price of a 14.2 kg cylinder will rise from 800 rupees to 850 rupees. For Ujjwala scheme beneficiaries, the price will go up from 500 rupees to 553 rupees. Meanwhile, the government also announced a hike in excise duty on petrol and diesel. However, Petrol Minister Hardeep Singh Puri has clarified that the excise duty hike is a part of a broader review process and will be reassessed in the coming weeks. The increase comes amid efforts to offset oil marketing companies' losses, is what we are seeing. But let's go across to Soumit to understand how these price and excise duty hike will impact some of these oil marketing companies out there. Soumit, over to you.
Well, yes, all in all, it's a positive announcement that has come in from the government side for the oil marketing companies. Yes, the excise duty hike will impact the gross marketing margins that the oil marketing companies earn on selling every liter of petrol and diesel. But do remember that the sudden drop that we have seen in crude oil prices, that alone would have hiked the marketing margins by around 2.5 rupees per liter. So the future earnings would get limited, but the current supernormal marketing margins that the oil marketing companies are earning, which is anywhere between 11 to 12 rupees per liter, that would continue for the oil marketing companies. Moreover, the oil minister also said that whatever earnings that the government will get from the excise duty hike will be passed on to the oil marketing companies for the LPG subsidy losses that they incurred in FY25. So they incurred a loss of close to 41,300 crore rupees, and with this excise duty hike, government might get around 33,000 crore rupees, which would be passed on to the oil marketing companies, while the remaining amount will come in from the LPG price hike that the government has done of around 50 rupees per cylinder. Now, apart from this LPG price hike hike that the government has done, there's also a possibility that LPG prices in the international market would come down, given the fact that crude prices have come off sharply. So both these factors, that is the LPG price hike and lower international LPG prices, will compensate for the remaining amount of LPG losses that the oil marketing companies had seen in the financial year FY25. So all in all, a positive announcement coming in for the oil marketing companies. Apart from that, they have also said that currently they are having a crude inventory of around 45 days, and that is valued at close to $75 per barrel. So some inventory losses could be seen in the first quarter of FY26 for the oil marketing companies.
Okay, thank you so much for all those key details. IOCL, BPCL, HPCL all currently up in trade is something that we are looking at. But let's just focus. India well positioned in terms of tariffs. This is what Vikas Khemani, the founder of Carnelian Asset Management and Advisors, had to say. Listen into the conversation on if Nifty will sustain the recovery or not.
Of course, Indian investor, and also more importantly, even Indian economy. We all know that, of course, there's a lot of chaos happening around the globe, led by the tariff war. Lots of uncertainty. We all know that. And at the same time, it's also a matter of fact that India is relatively insulated from what's going all over the world. And I think it's, in my opinion, testament to that fact. But yeah, you can't remain unscathed when there's a fire all over the place. You are bound to get some amount of heat. But when the dust settles down, when the fire settles down, obviously, one knows that, which countries or which economies will stand tall. And India is surely one of them.
So, okay, hi Vikas. I think we were talking about this as a bit of a theme, right? Because in this chaos that is playing out globally, ultimately, everybody seems to be focusing inwards. And various economies are already starting to have measures announced to bolster the domestic economy. We're speaking on the cusp of the RBI monetary policy outcome, where in all probability we're going to see another rate cut or measures at least to bolster growth. How much of a factor is that going to play, in your opinion, in further adding to what the government has already announced on the fiscal side?
We must understand right now what's going on at a global stage is very unprecedented. One does not know what will happen when you wake up in the morning, what kind of announcements will come, what kind of, and whenever these kind of announcements come with a far-reaching implications for the global economy, it is natural that investors will get worried and tentative, and especially the short-term investors tend to act and react. And that's what creates volatility. In that volatility, any short-term measures boosting growth for economy can be ignored. RBI did a major policy pivot, in last 2 months, and markets kind of ignored that. Already RBI, gave a growth stance, accommodative stance with a rate cut in the previous policy also. So,
well, that was Vikas Khemani, the founder of Carnelian Asset Management, and his outlook on how the markets are going to be. But that's all the time that we had on this show. Stay tuned to NDTV Profit. Lots more lined up on the other side.
That's huge. That is a biggie. It's on.
Gold Plus Clear Glass. पार हो या नियर, सब कुछ दिखे clear.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or something like that. We what we were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार, इतना simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
AB Real Estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
SEBI is seeking
Terrific Tuesday on the Loud Street. Nifty trades above 22,500. Sensex gains as well in trade. Mid and small caps shine.
All sectors trade in the green. Sectors with exposure to Trump tariffs also trade higher, with Nifty IT at the top and Pharma not far behind.
Oil marketing companies are on fire after government hikes excise duty on fuel. The duty collected will offset losses made on LPG by the companies.
Titan gains over 4% on after reporting strong growth in gold jewelry business.
And brokerages are bullish on India's growth story. They say tariffs will have minimal impact on India. Morgan Stanley and Macquarie are positive on the domestic consumption theme. Hello and welcome to NDTV Profit. You're watching Profit Buzzers. I am Hiral Datia and with me is Varsha. Firstly, we should be wishing Varsha a happy birthday as well. That's her birthday today.
Thank you.
Let's quickly take a look at what markets are doing at this hour. An interesting day of trade with the kind of recovery that we're seeing in terms of where markets are concerned. Overall, if you see Nifty 50 gains of almost 2% coming in there from a low of 22,270, we've gone up to almost 22,600, and that's where the markets are hovering at the moment. With that, let's quickly pull up a heat map in terms of the sectoral indices and see where the strength is, because IT as a sector is going to be in focus, taking into consideration TCS will be reporting numbers on Thursday, which is a holiday. But there you see a sea of green. Yesterday we were talking about a sea of red, and now you're seeing green. Metals has bounced back, Bank Nifty is seeing some good moves, but mainly the strength is coming in with regards to consumer durables, which is up nearly 3%. IT ahead of the numbers is seeing gains of almost 2.8%. Media in the positive, as well as if you talk about the PSU Bank Index, pharma and oil and gas, which are seeing some smart moves. Let's also pull up the broader markets. I'll take the liberty to do that, and before going to the guest, because we have the management of Deep Industries that will be joining us shortly. But you have the mid-cap index, which is up almost to 2.5%. And if you look at the small-cap index as well, there you go, nearly at the day's highest levels with gains of 2.2% coming in there. Let's look at the heat map in terms of the benchmarks and see what's happening on that front. But overall, the trend is on the positive side. There you go. It's just a trend which is slightly under pressure today. But apart from that, Infosys, Reliance Industries, Bharti Airtel, as well as the HDFC Bank that are contributing to the kind of gains that we are seeing in the markets. In terms of broader markets as well, let's quickly look at a few of the names which are strong. Vijaya Diagnostics, Sequence Scientific, 5-star. These are a few of the names which are seeing some smart moves in trade today. And on the losing end, you have names like a Delivery, which is down nearly 6.5%, J Corp under pressure, Thomas Cook, 361, Sarda Energy. These are a few of the names, Varsha, that have been ruling under pressure. But very quickly, we're going to talk to the management of Deep Industries. What's the highlight there?
So, basically they have entered into an agreement wherein they're going to lease one of the barge. Now, this is for 3 years for almost 200 plus crore. And, so this is actually the highlight. But, let's see what this agreement is. Let's hear it from the management itself. We have Rohan Shah, who is the Director, Finance and Group CFO of Deep Industries. Welcome to the show, sir.
Hello.
So, hello. So, I just wanted to have an update on the press release that you have shared. So, if you can, just give us the details of the agreement.
Sure. So we are delighted to inform that Beluga International DMCC, the wholly owned subsidiary of Dolphin Offshore Enterprise India Limited, has entered into a lease agreement with a Mexican company called Balash Shipping for leasing its barge, which is Prabha, DP2 accommodation barge, for a period of 3 years. And the total estimated value of this entire lease agreement is almost $32.85 million, which is equivalent to around 280 plus crore Indian rupees.
Right. So, Rohan, overall, if you see in terms of the annual revenue potential from this deal, how does that pan out? Because again, this is with a subsidiary. So, if you have to look at the books of Deep Industries, how will it impact?
So Dolphin Offshore Enterprise is our subsidiary where Deep Industries is holding 75% stake. And with that 75%, it becomes our major subsidiary. So annual revenue from this particular contract, we are expecting somewhere above 90 crore per year with a good bottom line of almost 70 crore a year. And this would be giving a great amount of boost, not only to Dolphin, but also to Deep Industries as well.
Right. Also, Mr. Shah, so does the company is expecting previously mentioned 60% margin from the contract?
Yes. So this time, this particular contract is net of operating expense. So this rate which we are calculating as of now is net of OPEX. And so post this, there will be very minimal expenses to be deducted. So margins would be higher in this case.
Okay. And so you're saying margins will be higher. So will they be above 60% or will they be at 60%?
They will be above 60%.
Okay. And what is the life of the Prabha asset? I mean, how long can this barge keep generating revenues for the company?
So this particular barge can work for more than 20 years. So it has a useful life of more than 20 years. And post our acquisition of Dolphin from insolvency, we were trying to put this asset into operation since last 1 year. And finally, we have got this asset deployed and it will start generating revenue immediately in this month itself, starting from this month. Yeah.
Also, Mr. Shah, so I do agree that, because of this contract or this agreement, by the subsidiary company, Deep Industries will have an edge over it. But just wanted to understand, considering the oil and natural gas prices going down, how this will impact Deep Industry as a whole?
So in Deep Industries, we are into onshore oil and gas support services. And in Dolphin, we are into offshore oil and gas support services. When we talk about the prices of oil and gas and its impact in our revenue or our potential, our services are more of fixed price kind of services, and we generally operate through fixed price contracts. So once we are into contract, it has no impact on our revenue. Majorly, our service focus is more on gas and less on oil. So again, with that element, we are least impacted with prices fluctuation of oil or gas.
Okay, so even if it's the most minimalistic impact, how much of your revenues are dependent on prices of oil and gas, and to what extent does the profitability then get impacted?
See, our majority of services are critical and inevitable services for oil and gas operations. And these services are such that whether crude is at 100 or crude is at 30, these services are required anyhow. And so in our more than 30 years of experience in this industry, we have seen so many cycles of crude and gas going up and down. But we are not impacted at all, as I said, because our services are fixed price contract services. And so majority of our contracts are of 3 years. So once you are into a contract of 3 years with X price, it will not change for 3 years. And so it has not any major impact on our revenue.
Okay. And with all of this, where does your current order book stand, and what's the executionable part of it in terms of FY26?
See, we were sitting on order book of more than 2,700. And with this order, we would be touching 3,000 crore.
Okay.
So the executable timeline of this particular order book is almost 2.5 to 3 years. Barring one contract, which is a longer tenure contract. So if we exclude that 1,400 crore contract, which is of longer tenure, the rest of order book is executable over 3 years, 2.5 to 3 years.
Also, Mr. Shah, so with the existing order book and the newer ones that you'll have, I remember you saying that you are expecting 30% of annual growth. So are you on track?
Yes, we are absolutely on track, and signing of these lease agreement is a testimony that we are right there on track, and we are continuing our focus on growth of more than 25% year on year for at least next 3 years.
Okay. And overall, to achieve this kind of growth and to execute an order book of almost around 3,000 odd crores over the next 2 to 3 years, what is the kind of capex that you will need in the next 2 years, and what's the funding plan?
So majority of capex is already been done with existing order book. Of course, we'll have to do capex of around 350 to 400 crore in current financial year, and that we would be doing it through internal accruals, debt, and of course, we may think of raising some equity as well.
Rohan, one quick clarification. The FY26 capex was initially pegged at around 500 odd crores. So are you saying now you will require only 250 to 300 odd crores and not 500 crores?
No, so 500 crore capex is inclusive of one acquisition opportunity. So when I am saying capex for plant and machinery is around 350 crore. Overall capex is around 500 crore, including some acquisition opportunity.
Okay, so I mean, 150 odd crores is where you will be looking at an acquisition, and where would this be, if you could give us some details and the timelines?
So we are in active discussion with few targets where we believe will be able to acquire them during current financial year. And this can give us a great amount of opportunity of inorganic growth. And this can give us our capacity enhancement and revenue boost immediately. So We are working on it still. It is not on finalization stage, so I cannot share much of details. But yeah, we are on active discussion.
Rohan, just wanted to ask about the production sharing contract that you recently won, and you were expecting this segment to grow going ahead. So, by when can you expect these new kind of orders to start coming in? I mean, maybe in FY26, or can you expect more orders in 26 and 27? So, if you can give some update around that.
Right. So it's a production enhancement contract, and the one which we have already been awarded, we have taken over the control on that particular field in last week itself, and we would be starting our operations immediately, and we are expecting to have good amount of revenue from that particular contract in second half of current financial year. With regards to additional opportunities of similar contracts, we are expecting few more rounds of such contracts in FY26 itself, and we are quite bullish in bidding those contracts.
So recently you did a QIP for 350 crores. What was the specific intent of this QIP? So will you be using this considering the capex plan that you have of 500 crores?
Yeah, we are planning for it, and this would be definitely used for the 500 crore which we were just discussing.
All right, and also you actually had entered in JV with Eurogas Systems, if I'm not wrong. Now, how this JV will contribute to the company's growth? I mean, if you can quantify how this will impact your top line.
Yeah, so JV with Eurogas system will give us an opportunity to bid in contracts where we can have some good amount of equipment supply orders, because as a Deep we are into services business, and with the JV of Eurogas we can also capture opportunities of supplying equipments to producers. So we are exploring that opportunity, but as on today, we have not yet received any such award.
Rohan, two questions. I mean, firstly, if I'm seeing the trajectory as well in terms of your quarterly growth, year-on-year basis, December you've seen a 47-48% kind of a growth, and that I think has been the highest since September of 2023. And if I have to look at the margins as well, you've been in that range of around say 32 to almost around 43-44%. So when you talk about above 60% margins, is that only for this contract, or on a blended basis as well you will be able to maintain above 60% kind of a margin profile? And secondly, on the top line, is this 45-50% growth expected to be consistent, or it's going to be one-off?
See, margin, when I said 60% plus, is for Dolphin, not as a group, because in offshore business you tend to have higher margins than onshore business. So overall at group level we are quite optimistic to maintain margin in range of 42 to 45% year on year, and this type of margins we are maintaining since so many years, and probably we would be improving on it year on year. So yes, at group level, we would be maintaining EBITDA in range of 45%.
Okay, and your return on capital employed, I mean, there was a point in time where you were at 33-34% as well back then in 2019 and 2020. I mean, it's come down to single digits and high, I mean, just start point of double digit of 10% in FY24. What is it that could lead you to come back to that high double digit kind of a ROCE, or you think it's going to be an impossible task?
No, we are gunning for it, and we believe in the current financial year or maximum by FY27 we would be on higher double digit, probably near to 17-18% ROCE. And see, at the end of the day, we are into a business where the services are capital intensive, and our services are backed by heavy equipments. And for us, the mobilization time for any particular contract is at least 6 months. So at any particular balance sheet date, if you look from capital employed perspective, you have employed your capital, but that capital has not necessarily earned in that particular year because it has taken time of 6 or 8 months to mobilize it. So in our business, when you are growing continuously, the ROCE can appear little low. But once you are there with the entire equipments mobilized and fully operational, this ROCE can go high as 18 to 19% as well.
Rohan, last question coming to you is on the cash flows. I mean, if I look at your net cash flows, they have been on the lower side. I mean, not something which could be, I don't know how the street would read it, but one aspect is your cash from investing activity, something which is taking your cash from operating and financing activity lower, right? If you could explain to us what is that and what is your stance in terms of maintaining a strong cash flow?
See, for us, cash flow is largely used in business expansion only. But for the time being, if that particular cash is not utilized in business expansion, then we would be investing it as a part of treasury, because at the end of day, we believe that having liquidity on hand can give you an opportunity of good target acquisitions. And Dolphin is one of the example where we could acquire that because of having liquidity in hand. And so we would continue to maintain some good amount of liquidity in hand. And when that liquidity is not deployed in business, it would be there in treasury for the time being.
Right. Well, on that, thank you so much, Mr. Shah, for joining this conversation, and all the best.
Thank you. Thank you so much.
So this was Deep Industries targeting 25 to 30% of growth. Well, on that note, let me just invite Vinit Bolinchkar, who is Head of Research at Ventura Securities. Vinit, welcome to the show. And just wanted to have your view on Deep Industries. Do you track this counter?
Yeah, we track this company and we believe that a very, very good franchise to have in your portfolio. I think it's got exposure to India's energy needs. And in these times when the world is putting walls around itself, I think it provides you a very insulated, exposure to very predictable cash flow business. Valuations are also very reasonable, and we think that this stock can do well going ahead.
Strong view coming in with regards to where Deep Industries go. The stock is seeing gains of nearly 12% in trade as we speak. But moving on, the government yesterday went ahead and hiked excise duty on petrol and diesel. But the Petroleum Minister, Hardeep Singh Puri, has clarified that the hike will not be passed on to consumers. Meanwhile, the cost of LPG cylinder was increased by 50 rupees for all consumers. Let me head across to Somit to understand how these events will impact the oil marketing companies and the gas distributors. Somit, over to you.
Well, yes, all in all, it's a positive announcement that has come in from the government side for the oil marketing companies. Yes, the excise duty hike will impact the gross marketing margins that the oil marketing companies earn on selling every liter of petrol and diesel. But do remember that the sudden drop that we have seen in crude oil prices, that alone would have hiked the marketing margins by around 2.5 rupees per liter. So the future earnings would get limited. But the current supernormal marketing margins that the oil marketing companies are earning, which is anywhere between 11 to 12 rupees per liter, that would continue for the oil marketing companies. Moreover, the oil minister also said that whatever earnings that the government will get from the excise duty hike will be passed on to the oil marketing companies for the LPG subsidy losses that they incurred in FY25. So they incurred a loss of close to 41,300 crore rupees, and with this excise duty hike, government might get around 33,000 crore rupees, which would be passed on to the oil marketing companies, while the remaining amount will come in from the LPG price hike that the government has done of around 50 rupees per cylinder. Now, apart from this LPG price hike that the government has done, there's also a possibility that LPG prices in the international market would come down, given the fact that crude prices have come off sharply. So both these factors, that is the LPG price hike and lower international LPG prices, will compensate for the remaining amount of LPG losses that the oil marketing companies had seen in the financial year FY25. So all in all, a positive announcement coming in for the oil marketing companies. Apart from that, they have also said that currently they are having a crude inventory of around 45 days, and that is valued at close to $75 per barrel. So some inventory losses could be seen in the first quarter of FY26 for the oil marketing companies.
Well, thank you, Somit, for all the details. In fact, we spoke to Yogesh Patil, who's the Director Research of Oil and Gas, Dolat Capital, about who said that HPCL is the outperformer in the sector. Do listen in.
First of all, the crude prices are near to $63-64 per barrel. And the HPCL would be the biggest beneficiary out of that, mainly because of, firstly, the gross marketing margins of HPCL, looking into the petrol and diesel side, is in the range of rupees 17 per liter. Okay. But yesterday there was one development that the oil minister has announced that rupees 2 per liter increase in the excise duty of petrol and diesel. And that will be collected to fund the subsidies which the HPCL or the OMCs have incurred in the FY25. That same collection would be utilized to repay the under recoveries incurred by the OMCs or HPCL in FY25, and that amount was 41,000 crore, closer to that. However, the timing of that reimbursement to OMCs is unknown or HPCL is unknown. And the OMCs, as per our understanding, they are still waiting for the official notification from the oil ministry. The only point that they will start accounting once they will receive the official notification. Secondly, there is one more development yesterday. Domestic LPG cylinder prices increased by 50 rupees per liter, and that is a positive for the HPCL. Under recoveries will decline rupees 3.5 per kg or closer to 10,000 crore less under recoveries for FY26 period for the OMCs, and HPCL will be the beneficiary out of that. So they have also mentioned that the MOPNG will revise the LPG prices every fortnight or month based upon the international LPG prices. So all in all, these are the two positive developments for the HPCL. Looking into the falling crude oil prices, HPCL will be the beneficiary, biggest beneficiary among the OMCs, because the HPCL is having a higher marketing to refining ratio. What I mean to say, the marketing volumes of the oil products are much, much higher compared to the refining throughput of the HPCL.
Right. In fact, so that's the view coming in on an HPCL. Beneath, taking both the aspects into consideration for OMCs as well as gas distribution companies, what is your view on any topics?
So I would concur that HPCL looks to be one of the very good stocks. There is also some corporate action expected in the company. I think it is going to be, around the loops business. There could possibly be a demerger of that. So there could be some value unlocking going ahead also. And given the benign pricing of crude oil and the expected supply glut, which is going to happen in the market, I think that the low pricing regime will be quite stable for some time, and that will mean very, very reasonable margin expectations going ahead. So we like this stock both from the earnings accretive point of view, as well as the point that there could be some corporate action happening in the group from value unlock.
Right, so positive view when it comes to HPCL. Well, moving on, BEL gains 5% after bagging 2,210 crore order from Defence Ministry. Anushi joins us now to tell us more.
Hey, so if you're looking at Bharat Electronics, again it's in focus on the back of a new order win, and this is a size of 2,210 crore that we are looking at for electronic warfare from the Indian Air Force, that they have received this order. So taking this order in consideration, if you look at the total FY26 order inflows, that stands at roughly 2,803 crore. Now do note the FY25 picture, if we see in terms of where the inflows were concerned, they had recorded inflows worth about 18,715 crore. This was as against the guidance given of 25,000 crores. So we did see a miss of around 26% in terms of where the order inflow picture was concerned for the company. In Q3, the management had remained confident despite the 11,000 crore mark that they had achieved in Q3 for the order inflows, that they would expect to achieve 25,000 crore. But on the back of delays in some of the three key orders from the Defence Ministry, we did see a miss on the part of where the order inflows were concerned. Other than that, if you look at the revenue growth, that was majorly in line for FY25, seeing about a 16% of a growth here, while the order book stood at about 71,650 crore as of the March 24 figure that we are looking at. Now, FY26 is a year crucial for Bharat Electronics. A huge ticket order sizes are expected. This includes the likes of a QRSAM order, which is a quick reaction surface to air missile order, which is in the size of 25 to 30,000 crore. Along with that, there's also an expectation of a 14 to 15,000 crore of a next generation Corvette related order for FY26 also. What would be interesting to watch out for the Q4 management commentary is this order slippages that we have seen in the fourth quarter and whether they would be expected in the first quarter of FY26. So that is one factor that we should be figured out, that we should be watching out for. But other than that, BEL and focus on the back of this 2,000 crore plus of an order win that we are seeing.
Thank you so much, Anushi, for all the details. Vineet, so there's a miss when it comes to order inflow. So how are you seeing BEL? So do you recommend buy, or I mean, do you see problem when it comes to slippages in order book when it comes to Q4?
So, the traction in BEL is going to be very positive, and we expect order bookings to continue to happen. But, our only consideration is the fact that, execution might not keep pace with the order flow. So, seeing a ramp up in execution and revenue generation is very important. So that needs to be key monitorable, and BEL therefore is definitely a stock to own in your portfolio. But the only thing, as I said, is that you need to track that growth. Revenue growth is there, which is in the high double digits.
Right, got it. Well, on that note, let's take a short break. Viewers, don't go anywhere and stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
Those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
Welcome back. You're watching Profit Buzzers. Now, Realty Index has actually gone ahead and broken its 3-day losing streak, driven by broad-based buying that we've seen in the sector, as well as the business updates that have come in from few of them have been encouraging, while some have missed their estimates. Let's bring in Anushi to decode all of them for us. Anushi, Soba and Godrej Properties, both of these stocks that are in focus, what are the updates actually indicating?
Hey, so if we are looking at the real estate updates which have come so far, we are looking at a mixed picture overall in terms of where Soba Limited is concerned. If you look at the Q4 growth numbers, that's the total pre-sales number that stood at about 1,836 crore, which was a 22% of a growth. But Soba share in it, if we see, that stood at about 1,370 crore, which was a 7.5% of a growth that we are looking at. Average price realizations also saw about a 5% of a growth at 11,781 square feet. But it's the FY25 numbers which are a standout over here. If you look at FY25, pre-sales are down about 5.5% on the account of some of the launch delays which have taken place. In fact, it also missed the revised guidance of 6,644 crore, which is the FY24 figure that the company expected to achieve in FY24. So, miss on the pre-sales guidance is what we are seeing. Do note that the company had already revised its pre-sale guidance in the third quarter, which initially they had pegged it at 8,500 crore, but due to the delay in the launches, that was then revised downwards to the FY24 number, which was there last year of pre-sale. So, but coming back to what led to the Q4 growth was something like a Soba Madison Heights and Soba Hamptons, which aided in this Q4 growth that we are looking at. Combined saleable area stood at 3.67 million square feet. Along with that, if you are looking at another project, which was the Chartered Birdsong Plotted Development Project, also aided in the Q4 number. So it was the FY25 number, which was a miss for Soba Limited. But let's also talk about Godrej Properties. Now here, this is one stock which has been posting robust set of numbers from a quarter-to-quarter basis is what we are seeing. In fact, if you look at the Q4 pre-sales number, that stood at 10,163 crore, registering a 7% of a growth here. FY25 pre-sales, if we are looking at, that stood at 29,444 crore, which again showed about a 31% of a growth. So this Q4 was a culmination of a couple of new projects that the company launched, which included the likes of Godrej Riviera in Noida to the size of 2,000 crore of a booking value here, along with Godrej Astra in Gurugram and Godrej Madison Avenue in Hyderabad, seeing bookings of around 1,000 crore. But if we take the whole FY25 picture in consideration, the company has beat its FY25 pre-sales guidance of 27,000 crore, achieving about 109% of its overall pre-sales guidance that we are seeing. In fact, if you look at the business development, that stood at 26,450 crore. The company had already achieved its business development guidance in the third quarter period itself. So these two counters are in focus on the back of some couple of business updates. In fact, Axis Capital also had a note on Godrej Properties. They are seeing more than 90% of an upside here on the back of its pre-sales, beating the estimates on the strong sustained sales which are going on, and also expect the company is on track to deliver its best ever annual operating cash flow for the year itself. So strong update for Godrej Properties. What on a Soba, if you are looking at the FY25, it was a miss in terms of where the pre-sales number was concerned.
Thanks you, Anushi, for getting us the details. Let me also welcome in Vinay Rajani. Vinay, good afternoon and welcome to the show. What are charts indicating for a Godrej Properties as well as a Soba?
Yeah, good afternoon. So Godrej Property has been into a downtrend. It is placed below the key moving averages, below 20, 50 and 200 days average. So entire real estate sector has been vulnerable and the trend has been down. Today, because of some news, it opened with a gap but did not sustain at higher level. So still it is into a downtrend. We need to see whether it is closing on a strong note or not. But existing trend is down, and I think unless it crosses 2150 on the upside, it will remain in a downtrend. So 2150, its 50 days exponential moving average is there. Unless that is surpassed, we should take it a negative view itself. So no doubt there has been a strong support around 1900 previously in the month of January, February also. We saw that it reversed from the 1900 level. So it is not far from the support also. So there has been a range of 1900 towards 2150. This is a range. On the downside, if it breaks 1900, then there will be a fresh breakdown on the charts, and on the upside 2150 is a strong resistance above which we will change our view from bearish to bullish. But till then we can say that it is trying to find support, and existing long position should be held with a stop loss of 1900.
Okay. Vineet, talking to you from a fundamental perspective, in fact, a recent report that was released by Magic Bricks was indicating that the overall demand from a pan-India residential perspective, that has moderated, and this is on the back of rising prices. In fact, their prop index for the first quarter shows that the demand is marginally growing by around 0.6% on a sequential basis, and the average prices have gone up by almost 21 to 22% on a year-on-year basis. Taking this into consideration, what would your call be? Because Delhi, there's a demand contraction of around 11 to 12%, Gurugram around 6%, Calcutta around 5%, and Noida around 12 to 13%.
So, I believe that Delhi is an overextended market, Gurugram especially. And markets, the micro markets like Bangalore, Hyderabad, Pune, these are all going to see a slowdown, which is going to be directly impacted by the IT related purchases. Because this sector is slowing down internationally, and that segment is going to be hit. Also, we've seen a very overextended rally. So, barring for these micro markets, I think the Mumbai market is very resilient, and we're going to see tier two players also emerge very well. So, Ashiana Housing, Godrej Properties, Suntec Realty, these are some of our top picks in this sector. We have to use a bottom up approach and not entirely be dependent on the, taking a blanket approach to investing in the real estate sector.
Right. But moving on, VE commercial vehicles, Vinod Agrawal expects bus segment to continue its strong performance. And while speaking to NDTV Profit, he said that the commercial vehicle industry is performing as per the company's expectations. And he added that the bus segment led the 16% growth in the March sales. Let's hear it, the conversation.
I think overall commercial vehicle industry has done as per our earlier assessments. We have been assessing it over the year. So overall March was a good month for the commercial vehicle industry, where we had overall growth, including the buses. We had a growth of around, I think, 4.5% for the month. When the month 3.5 ton and above industry, it was around 61,000 as against 57,000 last year. Total industry 3.5 ton and above. Now within that, of course, there has been much better growth as far as buses are concerned, and heavy duty trucks also there was some growth as compared to March of last year, and light and medium duty trucks there was sort of flat or little bit drop. So overall, I would say the industry performed as per expectations. If you look at for the full year, April to March, commercial vehicle industry 3.5 ton and above. There has been a growth of 0.3%. So you can say it is a marginal growth. So it's flat as compared to the previous year. However, if you break down this growth, it is largely dependent on growth of 16% in buses. So buses market has grown significantly. It is now 95,000, 3.5 ton and above.
Right, so that's the management of VC. Vineet, how would you look at the CV segment? Because the FADA data was also indicating that there is some bit of softness in terms of where CV sales are concerned. However, the government commentary that they might exceed their FY25 capex number, what they announced in the budget, that is telling you a different picture. How would you look at it, and what would your view be on Eicher VCV?
So Eicher VCV will continue to, belie the trend of a softening market. We expect Eicher VCV to continue to do well. And as such, we believe that Eicher will be one of the outlier performers in the, the transport auto segment.
Okay, so that's with regards to where Eicher goes. Vinay, Eicher, and along with Eicher, if you have to look at the other auto majors as well, specifically a Tata Motors, which was beaten down on the back of the US tariff war. What are charts indicating? Any calls coming in on that front?
So obviously, Eicher Motor is the strongest amongst the pack, not only the commercial vehicles, but entire auto sector. If I were to compare the auto stocks, the Eicher Motor is the strongest, which is placed above all important moving averages, above 50, 100 and 200 days averages. It is not that far from its 52 and all-time high. So in that sense, clearly it is a winner, and it is one of the outperformer. Relative strength is very high. So Eicher Motor looking very strong, and in this negative scenario also it performed relatively better. While if you were to talk about Tata Motor, before the negative news which came recently, the trend was already on the downside. So Tata Motor has been struggling. It might be a good opportunity for the long-term investor, but as far as technicals are concerned, Tata Motor no doubt showed some pullback, but registered some pullback, but it is looking still relatively weak, and relative strength is relatively less. So better to, if somebody is looking for short-term trades or positional trade, then I would ask them to go for Eicher Motor kind of setups, which are looking relatively stronger on medium to long-term charts. So yes, Eicher Motor is preferred stock from the commercial vehicle space as compared to Tata Motors. Ashok Leyland is okay. It is relatively better than Tata Motor, but not as good as Eicher Motor.
Okay, so that's with regards to where Ashok Leland as well as Aisha goes. But moving on to the consumption pack, FMCG giant Titan is in focus today on the back of the fourth quarter business update. The stock is seeing smart gains of around 4.5%. Mahima joins us to tell us more. Mahima, over to you.
Right, so Titan is shining today, and this is on the back of its strong Q4 update, and this is of course on the back of how gold prices have risen so far. The jewelry growth is strong, but studded mix has slightly declined. The company has reported a 25% growth in their overall revenues. Jewelry business saw 24% growth. The growth is of course on the back of increase in gold prices. Plain jewelry saw a growth of around 27%, and gold coins saw a growth of around 65%. Elevated gold prices have led to a sluggish demand for consumer at lower price points and a single-digit bar growth. But on the higher end, the higher price bands have sustained the overall demand and have also led to a double-digit growth in ticket sizes as well. Studded jewelry mix has registered a low double-digit value growth. Solitaire segment has seen green shoots where they saw a turnaround and registered both buyer as well as value growth. In terms of like-for-like sales growth, that stands at around 15%. Tanishq has also expanded internationally. They've added new markets like Sharjah in UAE, in Atlanta and Seattle in USA, and they've added 16 new stores, of which 4 are Tanishq stores and 12 are Mia stores. In terms of watch and wearables, they've recorded a strong growth of around 20%. Analog watches clocked a growth of 18%, and they added 41 stores this quarter. Eye care saw a growth of around 18%, both in terms of revenue as well as buyers. E-commerce saw significant growth in this particular segment and added 2 new stores in UAE region. They closed around 11 net stores in India. Emerging business, fragrances saw a growth of 26%. Fashion accessories saw a growth of around 2%, but overall Taneira sales declined by around 4%. Lastly, CaratLane saw a revenue growth of 22% driven by healthy studded portfolio, and buyer growth was in mid-single digits. The like-for-like growth for CaratLane was around 11% this period, and around 17 domestic stores were added this quarter. Now, in terms of what brokerages are penciling in for Titan in terms of its Q4 update, Citi has maintained neutral with a target price of 3550. They're saying that something to watch out for will be the margin trajectory once the results are announced. Macquarie has maintained outperform with the target price of 4000. They're saying they expect 20% standalone EBITDA growth in Q4, and healthy growth in Q4 is encouraging and enhances their confidence in their EPS estimates. Lastly, Morgan Stanley has also maintained overweight with a target price of 3876, and they're saying that the headline is strong, but there are internal, that is the different segments are giving mixed signals. So this is the overall view as to how Q4 has panned out for the jewelry giant, that is Titan.
Well, thank you, Mahima, for all the details. Vinay, let me come over to you. For Titan now, good Q4 updates. Now this is on the back of rising gold prices. So how are you viewing Titan, and also considering the concerns over the margins, whether they will maintain the margins in Q4? Is one of the concerns that all the brokerages have raised out. So how are you viewing this counter?
So definitely margins will be a concern because the price of gold has gone up. However, we need to see Titan more from a growth perspective in terms of absolute EBITDA rather than the margins, because the value of the business is going up and margins are obviously going to come down. It's a commodity ultimately. So we need to assess what the EBITDA growth is going to be. And to that extent, I don't think Titan will see a significant up move or even any concerns on the down move from my side.
Right. And Vinay, your view on Titan? How are the charts looking for it?
Yeah, so Titan is in formation of, it's look like that in a short term, it is forming a bottom, and around 2985 to 3000 was a strong base for the Titan. It is trying to surpass the resistances, short term resistances. According to us, the strong resistance is there around 3200. Once that is taken out, then it will confirm the trend reversal on the upside. So it looks like that after falling and after showing some underperformance, now it is headed higher. We are waiting for 3200 to be taken out on the upside. Once that is taken out, then we can expect extension of the rally. So yes, no doubt it is in last 2 days has seen a nice recovery from the lower level. But from here, I would wait for some level to be taken out. That is 3200, above which it could extend the rally towards 3450, 3500. So overall, yes, it looks attractive. Wait for 3200 to be taken out, then you can take a trading bet on the long side.
Right, so that's with regards to Titan. But moving on to the financials, three names that are in focus are Axis Bank, SBI and a PNB Housing Finance. Let's pull up all the stocks on the screens. Seeing some smart gains in today's session. You have a Goldman Sachs which has gone ahead and upgraded an Axis Bank to a buy, and they have a target price of 1,288. What they are saying is, clearly it's a mean reversion story, as the profitability and the growth is expected to improve from here on. The valuation differential versus other peer banks is also widened. In fact, they've widened to 35% versus historical average of 23%. Talking about a PNB Housing Finance, they've hiked the target price to almost 1,184. They're confident in terms of the earnings outlook of the company. They've upgraded the stock to a buy as well. The profitability is expected to remain resilient. They're seeing improved visibility in terms of the growth profile of the company, which will mainly be driven by newer segments that the company is entering. The asset quality for a PNB Housing Finance is much better as compared to the peers, is what Goldman Sachs is highlighting. And if you talk about valuations, it is cheaper, so a re-rating on the back of an improved earnings profile is what should be on the cards. And very lastly, if you talk about SBI, they've upgraded the stock to a neutral from a sell, and the target price has been upgraded to a 823 from a 806. They're saying that the risk reward is absolutely favorable with regards to where SBI goes. The pressure in terms of the net interest margins, that could be now receding for a SBI. And if they are seeing the ROAs, that's the return on asset, that would settle lower than 1% over the next 2 years, and this is on the back of the normalization that could be happening in terms of the credit costs. Three stocks from the financial space. Vineet, your views, any picks?
So, I would like to provide you with a slightly different stock idea in the mid-cap space, which is Fino Payment Bank. We think that this bank has seen a dip of 50%, but nothing has changed in terms of fundamentals. And there are three things riding, where we think it's an outlier. One is the fact that its SFB license is near term. It could happen in the coming quarter or maybe the next. Second is the digital payment traction continues to remain very strong. In fact, it's going to double over the next 3 years. And the MDR settlement, whenever it happens, it's going to be revenue accretive and margin accretive for the company. So given all these three things and the benign valuations that the stock is quoting at, we believe there is very little downside on this stock, and we continue to expect to see a sizable gains happening in this counter.
Right,
so this is one of the stocks. The other two that we like is HDFC Bank. We think that the worst is over. And we are very, very constructive on Canara Bank because, if the market settles down, you're getting a bank at very cheap valuations, having best-in-class ROEs and ROAs and good credit growth. Apart from that, you're going to see a number of IPOs hit the street from which this bank is going to benefit. So, this can give you the alpha that, everyone is struggling to get.
Yeah, that's an interesting one in terms of Fino, because I think MK also recently had a report where they initiated coverage in a Fino Payments Bank for a target price of around 400. In fact, what they are saying is that clearly, if you talk about the transition to the small finance bank as a business, along with the lending business, that is what is expected to support the business growth, is what the brokerage is maintaining as well. And clearly, valuations is something is on the cheaper side. Binay, very quickly, Fino Payment, what are charts indicating? Plus, if you have to look at a Canara Bank as well.
Yes, so Fino Payments Bank trend is still down. No doubt it could be a better opportunity for the investors going by the fundamentals, but technically, I would wait for some confirmation. Those who are looking for generating alpha in the short term, there is a strong resistance around 240, but it is too far from this level. So there should be some good close with a good volumes. Then we will get a first sign of reversal. But as of now, I can't see that sign, so I will wait for that. Canara Bank, overall PSU banks have been trying to find the ground, and overall they have done well. So Canara Bank, yes, is relatively better and looks good. Market has to support for that. In that case, Canara Bank can participate. The immediate resistance is seen around 91, above which it will find more momentum. So yes, it is a market performer kind of setup on the technical charts for Canara Bank.
Right, so that's with regards to Canara Bank. But very quickly, let's just pull up the rupee. It's fallen past the levels of around 86. Now, what is happening over here is we opened around 3 paise lower at around 85.87 in terms of today's session against the dollar. And in terms of yesterday's closing, 85.84 is where the rupee ended at. The downward trend is something that has continued in terms of the rupee, and it is a day when the currency actually recorded the worst single day fall since February 6th, 2023. This is what I'm talking about yesterday, but clearly now it's fallen past that 86 mark against the US dollar. Vinay, anything that you could tell us in terms of the chart of the rupee? I mean, do you track that? Anything that you could give us?
Yeah, so recently we witnessed sharp appreciation. The rupee almost 3.5% appreciation was there. But as dollar index witnessed low around 101, recent low was around 101, and it has bounced back from that level. So recovery in the dollar index has led to some depreciation in the rupee. But overall, we feel that the downtrend which started and 3.5% correction which started, I think overall trend for rupee is bullish against the dollar, and we can see anytime soon we can see appreciation coming back and resumption of a uptrend in rupee against the dollar. So I think it is a temporary correction in the rupee, but overall scenario is suggesting that the dollar should continue to depreciate against the rupee, and rupee will perform better than the Asian peers, as well as it will appreciate in the shorter term against the dollar.
I think there is an impact with regards to the weakness that we are seeing in the Chinese yuan as well, right? So that, along with the sustained dollar demand from importers and foreign investors, is what is actually dragging the Indian rupee. Because if you see in terms of the Chinese yuan, that has weakened, and the importer FPI dollar demand is something which is weighing on the Indian currency as well. In fact, former RBI Governor D. Subbarao said that the RBI is faced with a three-pronged challenge even as the Monetary Policy Committee meets. He told NDTV Profit that growth, financial stability and inflation are the three uncertainties that the RBI would have to balance and account for. Let's quickly listen in to that conversation.
Growth will be affected because of tariffs. As I said earlier, exports, even though they're a small percentage of our GDP, they are an important segment of our growth story. So India cannot grow unless there are exports. And on top of that, if there is a recession in the US and around the world, export demand will be further hit. So growth is a problem. And even financial stability, we can't take it for granted because, there is, for emerging markets especially, capital flows and exchange rate stability are part of the monetary policy equation. So unlike advanced economies, which struggle only with growth and inflation, we will struggle at the same time with growth, inflation, and financial stability. In other words, managing this impossible trinity. So I think for the Reserve Bank of India, at the moment, look at inflation and act on that, because the playbook for central banks remains the same. If there is inflation signals, is it temporary? Will it go away on its own? Or will it just play out? Will the central bank have to react? So that's an important thing for the central bank to do.
And this is what, the view of ex-RBI governor is that. But, Vinay, just a quick question to you. This is related to pharma. Goldman Sachs has initiated buy on Suven Pharma and Piramal Pharma. Just wanted to have your view. How are the charts looking for that?
So compared, if we look at the chart patterns, the PPL, the Piramal Pharma looks better because it has recently outperformed and remained resilient. So comparatively, I feel that PPL, the Piramal Pharma can outperform because the relative setup has been good. Current price is 223. The resistance can be I can see resistance around 238. About 238, it could extend the rally towards 265 level. So I think this stock can outperform when pharma was falling on the back of negative cues from the global markets. At that time also, Piramal Pharma showed a strength. An existing long position, I think, should be held with the stop loss of 210. I'm talking about the trading long position. So 210 is a very strong support. About 238, it could move above to 265.
Right. Vinith, your quick view on Suven Pharma considering the CDMO growth prospects?
Which one you mentioned?
Suven Pharma.
Suven Pharma, very bullish. We believe that the CDMO business is going to unravel in a very big way in the next few years. And within that, we believe that Suven, which has got a established, credible practice, should do very well going ahead.
Well, thank you, Vinith and Vinay, for joining this conversation. And that's all the time we have on this edition of the show. Stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
Those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Soumit Sarkar, and my co-anchor Puneet. Well, Puneet, the Nifty continues its upward trend. In fact, from yesterday's lowest point, we have gained more than 850 points.
Well, definitely, it's been a strong session for the market today, and we've seen, this from the global cues as well. It's taken a positive stance from the Asian markets as well as what's happened in the Dow Jones yesterday as well. We're currently up almost 525 points. Let's look at some of the key constituents here for essentially the Nifty as well. First, top contributors, of course, almost everything is in the green today. Infosys, Reliance, HDFC Bank being the key one. Let's also look at the mid cap as well as the small cap space as well, because we have seen the broader market recovery as well, essentially from yesterday's lows. So mid cap 150 at 4, up almost 422 points. We're just like off about 80 points on the mid cap index from the highs, but doing pretty well as an index. The similar thing for small cap 250 as well. And finally, let's just look at the Nifty 500 as well, essentially, because it's been doing well. But Soumit, there's been a positive trajectory in the market as well.
Well, yes, let's go across to my colleague Tushar, who is in conversation with Cyient Semiconductor's new CEO, Suman Narayan.
Yeah, hi. So Cyient has spun off its semiconductor business and appointed Suman Narayan as its CEO to talk to us what the diversification means. We have Suman with us right now. Suman, welcome to NDTV Profit.
Thank you for having me.
First questions. We have spun off the business. What does this spin-off mean for the company? Great focus on this particular part of the business?
Yes, I think the semiconductor business today represents about 600 billion. It is transforming to about a $2 trillion business in the next couple of years, maybe by 2032. So Cyient has decided to focus on this business, capitalize on Cyient Semiconductor with a real focus on providing custom chips for our clients.
Okay. But the India market, so to speak, or the India semiconductor industry, the chip industry, is still in its infancy, so to speak. Where do you see it going forward, and what role do you think you will play in growing this particular segment?
So if you look at India, even though the market is small, 20% of the world's semiconductor talent actually is from India. If you looked at overall from the world population, maybe 35 to 40% of the world's population for semiconductor is done by people of Indian origin. So I think there's a huge potential for us to capitalize the talent to build the right semiconductor solutions, both for India and for the global market as well.
What would your business entail at the get-go? Where do you see the starting point for Cyient Semiconductor?
So we see a huge growth for us in the industrial applications, especially if you looked at the power needs, power semiconductor needs for data center applications, where it's power hungry, and also to drive efficiency for that, and also in industrial automation as well, where it's also power hungry circuits.
Would you look at setting up a fab facility in India?
No, I think today we're not looking at a fab facility in India. Our primary focus is to do design and also the final test back into in India right now.
Okay, so what is the chip size that you're looking at immediately at the get-go?
So most of our chips will be north of 40 nanometers. So the sweet spot being about a 65 nanometer to 130 nanometer chips for us to do. As contrasted to what NVIDIA does in the 3 nanometer, we really provide the power chips that are needed to power up the NVIDIA chips. That's the goal for us in the custom silicon business.
So what is the application for these large chips? Do we have a ready market in India for such large nanometer chips?
Yeah, so the data center market in India it's at its infancy right now. It's expected to grow 4.5 times in the next couple of years. So we see that, and we also see the robotics and industrial automation market also growing. So those are really good market growths. In the long term, also we see the automotive segment, both in the two-wheeler and the four-wheeler segment, also growing, as you can see in India, with the consuming a lot of chips per car or chips per data center.
The initial investment capex requirements for your company at the get-go?
Yeah, so there's not a lot of capex requirement initially, because most of the capex needed is for the final test. The capex investments, the heavy investments are usually in the fab and in the OSAT, so that's not our focus area today. It's really primarily on the R&D and design and in the final test as well.
So what will be your R&D spend going ahead?
So, as you know, that Cyient has authorized for us to, 850 to 900 crores for us to kind of start this division. So we expect a high R&D burn initially on developing new products.
You mentioned Cyient. We have seen Cyient diversify earlier as well into DLM. We have seen Cyient do multiple acquisitions in the past. So what are the synergies that will come, so to speak, with the parent company?
So I think there's a lot of synergy. We are riding on a backbone of engineering that Cyient has developed over the many years. So I think for us, it's the question of can we partner with the aerospace defense companies in the future and also leverage Cyient DLM to do some of the manufacturing for us on the chip side of the business as well.
Okay. Last couple of questions for you. Where do you see the company scaling going ahead, and what is the role of AI that will come into play for you, especially in the semicon business?
Yeah, so I think the role of AI for us is that we will power chips that do AI. So that's kind of like the future, what we see in the semiconductor business. And our real focus is designing with our clients, partners, and third-party solution providers to kind of design tomorrow together with our silicon solutions.
Okay, so is it the bulk of your business going ahead, AI focus?
No, it's not the bulk of the business, but the bulk of the business is to power the chips that are using AI today. So that's our bulk of our focus today.
My final question to you would be on the supply chain. We already spoke about how if semiconductor space is in its infancy in India, it's growing. But how does the supply chain look at this point of time for you?
Yeah, so today we are partnered with all of the foundry manufacturers, both the TSMC and other foundry members, and also on the OSAT providers like ASC and Watian, for example, from the packaging side. But over time, as the indigenous fabs come up, especially we're looking at like the fabs from Tata, or if you look at the OSATs that are in India, we will capitalize on that when the time is right, and they're production worthy and process ready in the future as well.
Let's talk finally the latest development on the supply side. We know that the tariff wars have sort of started. There's a big, I think about 37% on Taiwan, so to speak. How are you assessing this tariff environment, especially at a time when actually starting off the company?
Mm-hmm. So we're paying close attention to what the tariff wars are going on right now. But I think for us initially, we don't see a huge impact on the tariff. But over time, we'll have to see how it plays out. With the U.S. markets and with the India markets.
Would you look to export as well? I mean, I know India is a big market to tap into, but would you look at exports going ahead?
So I think the exports is from assembly and test. When the OSATs come in at that point, then we'll look at the export market. So that will take some time.
All right. Thank you, Suman. Thank you so much
for having us.
Yeah. So.
Well, shifting focus from semiconductors to the city gas distribution space, IGL continues to remain in focus, and this is largely on the back of the new EV policy, and analysts believe that this could have serious EPS impact if it gets implemented. Now, what is the policy suggesting here? The policy is suggesting that the two-wheelers that are running on petrol, diesel and CNG will not be allowed to run from August of 15, 2026. It also says that all garbage collection vehicles leased to be transitioned to EV by December 31st, 2027, and all public transport buses operated by DRC and DIMTS will be converted into e-buses. They're also saying that private car owners will have to buy electric cars only if they have already two vehicles or more than that. Now, what could be the impact of this on IGL? Now, analysts believe that the new EV policy aims to transition Delhi's transport to electric vehicles with aggressive timelines. It believes that the auto and the three-wheeler volumes alone form nearly 5% of the CNG volumes, and this implies that nearly 0.3 MMSCMD of volumes could exit from IGL's volume portfolio by FY27. Now, because of this, there could be an EPS impact of less than 5%, but the impact of other measures, if implemented, would be much more material on IGL's overall volumes, is what the analysts believe, and this could also lead to serious EPS cut going forward, and hence keep an eye out for IGL in trade.
Got that view, Samit. So it's definitely a stock that's currently in focus as well. But the other ones, of course, that is in focus is also the OMC stocks, right?
Right. Well, yes, oil marketing companies also continue to remain in focus given the fact that the government yesterday announced an excise duty hike of around 2 rupees per litre. Now, oil marketing companies will be bearing the brunt of this, which means that the gross marketing margins of these OMCs will come down or will take a hit of around 2 rupees per litre. But do remember that given the fact that oil prices have come down so sharply, the gross marketing margin would actually would take a hit of the future earnings of oil marketing companies. Now, this $5 per barrel drop that we had seen in the oil prices, that alone would have increased the gross marketing margin by around 2.5 rupees per litre. So that moves out for oil marketing companies. But the current supernormal profits that they're earning, or the supernormal gross marketing margins that they're earning, which is more than 11 to 12 rupees per litre, that will continue for the oil marketing companies. And the oil minister also said that the excise duty that they are collecting by increasing this, by making this increase of 2 rupees per litre, that could be around 33,000 crore rupees, and this will be given off to the oil marketing companies to make good for the subsidy losses that they incurred in FY25. Now in FY25, the total subsidy losses incurred were close to 41,300 crore rupees, and of this 33,000 crore might come in from this hike in excise duty. Now the remaining amount is expected to come in from the LPG hike that was also announced yesterday. Now yesterday they announced a 50 rupees per cylinder hike on LPG prices, and that will contribute around 6 to 9,000 crore in FY26 to the oil marketing company. So both these factors are expected to make good for the LPG losses that were incurred in FY25. However, on the flip side, the minister also said that the oil refiners are maintaining an inventory of nearly 45 days, and that is valued at close to $75 per barrel. Now if the current crude prices of $63 to $65 maintain or remain in the market, then for the first quarter, all the three oil marketing companies could see some serious inventory losses that could come in the first quarter of FY26. So keep an eye out for oil marketing companies in trade. All are right now buzzing, gaining anywhere between 3 to 4% in trade.
Got that view, Somit. Another set of stocks in focus is, of course, the Realty Index as it breaks a 3-day losing streak, which is, of course, driven by broad-based buying and encouraging business updates as well from these companies. Now, my colleague Anushi joins us with Q4 updates for Sobha as well as Godrej Properties. Anushi.
If we are looking at the real estate updates which have come so far, we are looking at a mixed picture overall in terms of where Sobha Limited is concerned. If you look at the Q4 growth numbers, that's the total pre-sales number that stood at about 1,836 crore, which was a 22% of a growth. But Sobha share in it, if we see, that stood at about 1,370 crore, which was a 7.5% of a growth that we are looking at. Average price realizations also saw about a 5% of a growth at 11,781 square feet. But it's the FY25 numbers which are a standout over here. If you look at FY25, pre-sales are down about 5.5% on the account of some of the launch delays which have taken place. In fact, it also missed the revised guidance of 6,644 crore, which is the FY24 figure that the company expected to achieve in FY24. So, miss on the pre-sales guidance is what we are seeing. Do note that the company had already revised its pre-sale guidance in the third quarter, which initially they had pegged it at 8,500 crore, but due to the delay in the launches, that was then revised downwards to the FY24 number, which was there last year of pre-sale. So, but coming back to what led to the Q4 growth was something like a Sobha Madison Heights and Sobha Hamptons, which aided in this Q4 growth that we are looking at. Combined saleable areas stood at 3.67 million square feet. Along with that, if you are looking at another project, which was the Chartered Birdsong Plotted Development Project, also aided in the Q4 number. So it was the FY25 number, which was a miss for Sobha Limited. But let's also talk about Godrej Properties. Now here, this is one stock which has been posting robust set of numbers from a quarter-to-quarter basis is what we are seeing. In fact, if you look at the Q4 pre-sales number, that stood at 10,163 crore, registering a 7% of a growth here. FY25 pre-sales, if we are looking at, that stood at 29,444 crore, which again showed about a 31% of a growth. So this Q4 was a culmination of a couple of new projects that the company launched, which included the likes of Godrej Riviera in Noida to the size of 2,000 crore of a booking value here, along with Godrej Astra in Gurugram and Godrej Madison Avenue in Hyderabad, seeing bookings of around 1,000 crore. But if we take the whole FY25 picture in consideration, the company has beat its FY25 pre-sales guidance of 27,000 crore, achieving about 109% of its overall pre-sales guidance that we are seeing. In fact, if you look at the business development, that stood at 26,450 crore. The company had already achieved its business development guidance in the third quarter period itself. So these two counters are in focus on the back of some couple of business updates. In fact, Axis Capital also had a note on Godrej Properties. They are seeing more than 90% of an upside here on the back of its pre-sales, beating the estimates on the strong sustained sales which are going on, and also expect the company is on track to deliver its best ever annual operating cash flow for the year itself. So strong update for Godrej Properties. But on a Sobha, if you are looking at the FY25, it was a miss in terms of where the pre-sales number was concerned.
Got that view, Anushi. Thanks for that. But, we've seen the markets being in turmoil, of course, impacted because of global factors such as the Trump tariffs. And my colleague Vishwanath spoke to KK Mistry, the former VC and CEO of HDFC, who spoke about markets, tariffs, as well as the RBI. Listen in to a slice of their conversation.
frankly, if I was an investor, and I do invest a lot, I would always look at a long-term view. Never get tempted by the short-term ups and downs in the market, because when you're investing in stock markets is a long-term story, and you have to stay invested. I think the market reaction over the last 2 days has been exaggerated significantly. If you look at our economy, you have to look at the economy, not look at market. Markets will go up and down, but you have to look at economy, because markets will ultimately follow what the economy is doing. And in my opinion, the Indian economy is strong. It's very robust at this point of time. The tariff war is going to hurt us less than it's going to hurt our competitors. We have to look at things not in absolute terms, but in relative terms. So, first of all, if you look at what is exports. Exports today is about 22 or 23% of our GDP. And then within that, exports to the US are about 17% of our total exports. So if we look at that picture and work out the arithmetic, by my reckoning, the impact on GDP should be about around 40 odd basis points. Not a very material number. Then we come to the benefits that come out of this. The first is the sharp fall in oil prices. You know, I've always said in many interviews that for us in India, the single or one of the most important criteria is oil, because we are such a large importer of oil. And when oil prices come down, it's a big benefit to us, whether it's in terms of current account deficit, fiscal deficit, GDP growth, and inflation, and so on and so forth. So with oil prices having come down so much because of the global uncertainty, we are clearly a beneficiary. And the second is the liquidity that, and first of all, let me first compliment RBI. I think RBI has done a fantastic job in the last 4 or 5 years, ever since we started COVID, to make sure that we did not get the kind of tearaway inflation that the Western world saw. And now we are seeing RBI easing, RBI infusing liquidity in the system. My expectation is that there is a credit policy tomorrow. We'll probably see a rate cut tomorrow. So liquidity, more liquidity will again enhance the GDP numbers by about 10 odd basis points. So net, in my view, the impact on GDP will be not more than 25 to 30 basis points, which is not a material number at all. And now if we are to compare ourselves with China, with Vietnam, with Bangladesh, which are some of the countries which compete with us for exports, we are so much better off. So let's look at it from the perspective that on a relative basis, we are far better off today being in India than being in any of these countries.
Let me also ask you this question. This view that India is better placed than a lot of other Southeast Asian economies is now becoming more prominent in discussions. But I wanted to get a sense. One of the economists who was speaking on our channel a little earlier had said that India might have the largest lifeboat, but they must remember that they're still in the ocean with the rest of the countries. So it's not like we've gone past the choppy waters yet. I mean, yes, we're relatively safe. But do you think those choppy waters have say, a second order impact at all?
So the primary effect is not going to be very material. Okay. I think a lot of people are worried about the second effect that can come because of tariff. Second effect coming because you see a big slowdown in the US. And if there is a slowdown in the US, what impact it'll have in terms of the IT industry, for example, that job creation will slow down in India. I don't buy that theory. I think, first of all, if there is pressure in the US and US economy starts slowing down, you may, contrary to IT spending slowing down, you may actually possibly see IT spending increasing, because companies want to then take advantage of better technology, better systems in order to cut down on manpower costs. So I don't think you're going to see that material and impact, a second impact, or at least that material, a second impact, in my opinion.
Okay. One of the other arguments was that there is a system that has been set, let's say, over the last 50 years, right? There's a way the world works and the way the world trades. And now you're upending it entirely. You're saying, okay, I don't want to trade with somebody who does X, Y, Z, so I will place reciprocal tariffs on them, and then let's see, and maybe bring back businesses into the US, and slightly more insular, inward-looking sort of an approach to global trade. I wanted to get a sense from you, is this even a realistic move? And forget US, for any country.
I think, first of all, there will be a lot of negotiation that will follow. It's not that what has been announced today is Psychostrand is going to happen like this. Yeah. Some amount of negotiation back and forth will take place. So let's wait for all of that to settle down. I don't think you're going to see trade, such a dramatic change in trade over a longer time frame. Let's give it a little time and let things settle down. You see, markets react whenever there is any kind of uncertainty. Yeah. And whenever there is uncertainty, markets sort of tend to fall sharply, which is what you saw the last couple of days where global markets have collapsed a lot. But I think now logical thinking should come into the picture, and you should see the markets getting a little better, unless there is some bad news which keeps coming every day.
Okay, you mentioned a 25 to 30 basis point impact to India GDP, right, because of the current uncertainty. This is also coming at a time when, in general, you're seeing GDP growth sort of taper off a little bit. Does that then add to any concerns?
No. So the way I see it is, if you take the period ahead, I am a lot more bullish and a lot more optimistic about the Indian economy in 25, 2026, because now we've come to a stage where inflation has largely been controlled. Even in fact, inflation was even controlled last year and controlled very well. It's just that food inflation spiked, and that caused the headline number to go up. But if you look at core inflation, which is excluding food and excluding fuel, core inflation throughout the year was somewhere in the 3.2, 3.3% range, which is not material. So I think now, with the slight change in stance of RBI, more liquidity being injected, we've seen one rate cut happening a couple of months ago. Probably we'll see another rate cut happening tomorrow. So given all of these facts, I would today be a lot more bullish in terms of government spending happening. I would be a lot more bullish in terms of economic growth next year. So I think for us in India, the only real thing we need to ensure, and full compliments to the government for doing it so long, is to make sure that we are creating enough jobs for all the young people who are passing out from schools and colleges every year. And if we can do that, I honestly believe that there is no reason why the Indian economy should not be on a roll for the next many, many years.
The government is estimating about 6.6, 6.8% roughly growth for FY26. There is also a developed nation target. Yes, it is 22 odd years later, but is that 6.8 enough to drive India?
I think so. Historically, if you look at it, look at what's happening to the rest of the world. Again, let's not look at it in isolation. First of all, a 6% growth is not a bad growth at all. We are comparing the 6.4 or 6.5 of this year, March 25, with the 8.2 or the revised 9.2 we had last year, but that was an exception. Yeah. Anything upwards of 6, 6.5 is a very good number to have. Global economy is growing at around 3%, less than 3%. The advanced economies are growing at an even lesser pace. So in that sense, India stands out as a shining star in the global world.
How do you take benefit of this ecosystem? If you were an advisor to somebody who's probably creating rules, how would you say that, okay, these are areas that we should focus on and ensure that we fill the global supply chain?
Well, I think you have to understand where is the demand going to come from, and what is our capability, what is our strength in terms of being able to meet the demand. So it's going to be very industry specific. So I can't give you a very general comment, but within industries, a lot of things will happen. You take, for example, the IT industry. There is so much of innovation and so many changes that are happening. Almost every month you are seeing something new development on the IT front, whether it's in terms of artificial intelligence or what artificial intelligence will do. So there is so much of scope for growth in services itself, let alone manufacturing. Manufacturing, yes, but even in services. You go to hotels today, any hotel you go to, you see the hotel occupancy rates are booming. The restaurants are all running full. So on one side you are saying that the economic growth is lower at 6.4 or 6.5%. On the other side, we are seeing that at the ground level, consumption is beginning to pick up again. We did see a slowdown in consumption for some period of time, but that is beginning to pick up. And again, last thing, which is that we are a domestic economy. Let's not forget that. We may take advantage of all the challenges which some of the other countries are having in terms of tariffs and improve our exports or increase our exports. But at the end of the day, domestic demand can sustain India. We were not so badly affected during the COVID period, apart from all the great work, and honestly great work that the government and RBI did. I think we also benefited from the fact that we are a domestic economy. And so long as the domestic economy continues to grow, India's growth rate will be there irrespective of what happens.
I want to ask you last couple of questions. The first one is the question about the domestic consumption, right? And yes, it's true that the domestic consumption is what drives India's growth story. We've had a period of a little bit of a slowdown, at least on the urban consumption side. Hopefully that is going to turn around this year. But I wanted to also get your view. Are we missing something on the urban consumption side that maybe, because one view was that the current metrics that we use to measure urban consumption may not completely measure everything. On one end, the data suggests that consumption is slowing. On the other end, you're seeing, large houses being bought, cars being bought, your luxury cars are showing large number of sales. Yes, smaller cars are not. Anything that you think maybe the data is missing?
So, in my opinion, what happened last year is that, as I said, inflation was very well controlled. But food inflation spiked for a large part of the year, or for some part of the year. Fortunately, that has also come down, and the outlook looks good because we should be getting good monsoons this year. Now, for a lower middle income or a middle income person, more the lower middle income, which is the bulk of where bank deposits come from and consumption comes from, food is the single biggest item of consumption for them. So with food prices being higher than what they were last year by whatever 7-8% at some point of time during the year, out of that total amount of money that they earned, a larger portion went into paying for the food that they were buying, and therefore a lesser amount was available for consumption. I think that will change. I think that was a temporary phenomenon. That will change. I would also expect that deposits in the banking system will also, which has seen a bit of a slowdown for some time, will also start seeing a pickup in the current year.
All right. That was actually going to be my last question. I want to understand bank deposits because it seems that rates as a tool to motivate depositors is not really working.
So that is, you're talking of fixed deposits. When you're talking of bank deposits, you're looking more at the CASA deposits, which is your current accounts and your savings accounts. And that is not so rate dependent. It is not dependent on rates at all. Yeah. It is dependent on the fact that how much money does the average person have today and how much money is going to leave in his bank account. So again, it goes back to this item of food, that if food expense is higher, you're spending more on food, you're having lesser amount to put in your bank account. People say that stock market's affected, people started putting money into the stock market and therefore deposits did not grow. That's a flawed theory. It's a completely flawed theory. Because for example, if you are buying a share from me and you pay me money, you will pay me money from your bank account. So it moves from your bank account to my bank account. The total deposits in the banking system don't change. What may change is that retail deposits may become wholesale deposits, which may have a lesser lendable value. But apart from that, nothing changes. So that's not the explanation.
That's huge. That is a biggie. It's on.
Gold Plus Clear Glass. पार हो या नियर, सब कुछ दिखे clear.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार, सिंपल लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
AB Real Estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
He sold most of his stock, 80%, as on that date.
We have requested
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita and with me is Neeraj Shah. We've somewhere brushed off some of the fears that have come with regard to tariffs over the weekend as well as at the start of this week. We're up 2% now on the Nifty, just off the day's highs. If you can pull up the intraday chart, that's what will signal. And it's largely in line with the way global markets are behaving as well. When you're seeing US futures, they're also in the green. So propped up in that sense, largely in line with how global markets are doing. We came off those highs and now we're seeing a bit of a bounce back. But overall, we're net 2% higher on the Nifty 50 index, which is a key positive. Let's look at the heat map. Of course, certain pockets doing well, something like a Titan, something like a Shriram Finance, Zomato are leading the pack. IT, and within that Infosys doing very, very well and leading again the top IT stocks as well. Pretty much all stocks in the green. Not been a while since we saw that, and it's also a bit of a relief. But it's also a bit of a reversal to what happened yesterday, and therefore that also to be kept in mind and contextualized, that we're just seeing a bit of a rebound versus yesterday. And mind you, from the lows of yesterday, we've definitely seen a larger rebound than the 2% we're seeing in trade today. Let's also quickly look at the advanced decline, because the breadth yesterday was extremely weak, and that's the one thing which is standing out today. Look at the market breadth, extremely strong in that sense. And that's really standing out as well in a week which was going to be marred with uncertainty. And the last piece is with regard to sectors. If you can quickly pull that one up, and it's largely the same shift that we've seen. Yesterday we saw the Nifty Metal under pressure. Last couple of trading sessions, in fact, that one is up 1.4 odd%. You're seeing a jump across the board, of course, and you can see that on your screen. Everything in the green. But IT is standing out as one sector, despite it being export facing, is up 2.5%. That's the one thing that's very heartening to see. Outside of that, you've got oil and gas, realty, as well as to a certain extent PSU banks, which are more inward facing, and therefore that bounce that we're seeing today may be more justified. Nifty Auto is up 1.7 as well, and the Bank Nifty is up around 1.3. So underperforming the Nifty, the Bank Nifty today, but broader markets is where a lot of the action continues to be. Both was yesterday and continues to be today. Neeraj, broader markets.
Thanks, Harsh. Well, firstly, the VIX should come up on your screen because it is a bit tempered. It was down maybe 14 or 15%, currently down just about 8%. So volatility isn't exactly sinking. So bear that in mind. Look at that chart also. Then in terms of stocks which are losing out in trade today, I think that is an interesting mix while we talk about the gainers, because the small cap index is still up about a couple of percentage points, but 361 WAM is certainly, or 361 is certainly under pressure in the session today, despite the fact that the markets have looked good. That is one. Delivery is down about 7%, so that has not looked all that great either. There is weakness in Welspun Corp, Vodafone, Astral are amongst the other names which have looked slightly wobbly in the session today, but the key loser is Delivery, which is down about 7%. I don't know if it's got to do with the valuations of the business that it's acquired. What's doing well today, some of the pharmaceutical related names are doing okay. Diagnostic companies, Vijaya Diagnostic is up 10%, Rainbow Children is up about 6.5%, so that's a bucket that is okay. PG Electroplast and Keynes Tech bring up the EMS players which are doing well. Lloyds Metal, from the broader end of the spectrum, metal companies is also doing okay. And some gains in tech, the likes of KPIT Tech, which is up in trade. So that too is not doing too badly. But the standout performer, as I hand it back to Harsh, has to be the oil marketing companies. And HPCL leading the way, 4.5%. So yesterday's losses have been recouped. But the likes of BP, IOC also should be in the green. So decent showing for the oil marketing companies. What are the key factors, Harsh?
Well, interesting, because it's a day where actually, Neeraj, there's been no news on the global front, but markets globally seem to be brushing off the tariff fears to a certain extent, right? And that is the big headline, at least today. IT also in recovery mode to a large extent. Question is, have we really priced in a lot? We've seen a 30+% correction. Has risk reward suddenly started turning favorable even in the current environment is the question. PSU banking index leading sectorally in that sense, and that may not be a big surprise in terms of how broader markets are playing out. They're outperforming marginally. We did see that. And last off, the market breadth is extremely strong. And given the kind of week that we were bracing for on Sunday, and given the way the Dow had reacted and US markets had reacted on Friday, as well as futures were reacting Monday, in that sense, we've not had that bad of a couple of trading days if I were to combine the two. Market breadth today, strong. Neeraj, quick question as editor. What's the sense like at this point? You believe market has started to brush off fears, and therefore what should participants, investors, viewers do?
Play it slowly and steadily, but the longer term picture is still unclear. For the short term, I think we've got some of the best men and the best experts on the show today, so let's try and do that. Kush Bora, the reason why Kush kudos, because you got it right? Yesterday in morning, Kush had mentioned that if we close above 22,000, then that will be the win for the day. And it was tantalizingly down and up, and then closed about 22, and currently about 1.7%. So Kush, with the presumption that you initiated some longs in closing yesterday because it closed above 22, are you taking money off the table if you were long yesterday in today's session?
Hi, Neeraj. First up, a very good afternoon. Thank you so much for remembering that and highlighting and all the kind words. Yes, I mean, the market did take heart from the fact that the closing was above the 22,000 mark. Also, just to answer one question that Harsh posed to you, how do you read this? What happened today, at least on the global front? I think this is more like a round one of the boxing match where one fighter has thrown punches and the other one sort of given them back, and now we're on a break. So I think this is more of the interim break, before the next round of the boxing match begins. But either way, I think right now we are on a good footing. The way markets reacted yesterday and the follow through that's coming today, that is very healthy. If I did have long positions, yes, I would take them off the table, but only partially, because now the momentum starting to pick up in very strongly beaten down names like IT. I think banking is what I would call a little muted, although it is still about 1.5%, but I would call it muted, and that's largely ahead of the RBI policy. I think once that is out of the way, and if the rate cut is in line or better with market expectations, that you'll see a rally here also. So take some money off the table. But if you bought it yesterday, if you had the courage, to buy it yesterday and you're holding it today as well, then with that extremely favorable risk reward ratio, you should continue holding on to the rest of the position. Resistance do come in at 22,650 and then the 22,900 mark, but that's still some distance away. So you might want to ride that wave. So my view at the moment is that if you have an existing position, continue to ride. If you don't, you could still enter. You could still buy with a stop loss around the 22,300 on the Nifty.
And what's the likelihood of that, Kosh? Do you believe, and what would the factors be like? What would you watch out for to expect further highs in this environment? Because it's a risky, it's a risk-off trade which is currently at play, and now suddenly we've seen a reversal and a very sharp one globally.
Absolutely, Harsh. I'm not saying we're out of the woods in the sense that yesterday we did speak of 21,500, that number that keeps popping up, at least on my on my analysis time and again. And if the volatility were to extend 21,000 as well, I am not taking that scenario out of the picture. Don't get that wrong. This is, as you rightly said, a sharp pullback, a sharp bounce back after a much sharper cut. So that number still stays. That is still my base case scenario, given the kind of volatility that the world has witnessed in the recent past and might witness going forward. The factors that are play right now, two things. One, no news is good news. We've not heard anything for yesterday and today, and hence the markets are perhaps taking this as a calm. As I said, this is the break between the two rounds of a boxing match. So that is one factor. No news is good news right now. Secondly, look at the sectors that are at play here. As I just mentioned, IT is seeing a rebound. Again, I don't think even IT is out of the woods. Most of these stocks like the TCS, NCs, and HCL techs of the world are rebounding from deeply oversold territories, and you would have never seen such oversold levels on some of these names. Banking also rebounding, holding ground. That's a healthy sign. So I think the sectoral participation and the buying interest at lower levels is something that will give support to the rally that we're currently witnessing.
Point taken. Coach picks for this afternoon.
Still going with two buys given the optimism that I'm sharing on the index at least. Apollo Hospitals has done rather well over the last 10-15 odd sessions, knocking at the doors of the 200-day moving average. So for targets of 68.25, 69.40 with a stop loss around the 6600 mark, you could consider a long. Also Nazara Tech, very interesting moves on this one, where it's almost completed the recovery of Friday. Yesterday's fall obviously recovered almost the Friday move also. Friday lows also being touched here. Also, there's a very good move on this one in terms of the 200-day moving average and the 50-day moving average converging, and the stock comfortably trading above that. So for targets of 980 and 1000 with a stop loss around the 940 mark, Nazara Tech is a.
Got it. Okay, Kush, stay on. We will probably talk about the banks at some point of time too, simply because the most important event in the next 20 hours is the RBI policy. And to talk about the policy, Oradeep Nandi, India economist and executive director, Nomura India, joins us right now on the show. Oradeep, thanks much for taking the time out and being with us today. What are you penciling in? A 25 a given, and could it be more, or would you be happy with a 25 and dovish commentary around liquidity?
Dovish 25 basis points is our baseline case. So I think 25 should be guaranteed, because this is the second rate cut that would happen. RBI has already delivered one. The question is, so there are two issues that where there is uncertainty. One is, will they do 50 basis points? It can happen. We've attached around a 25-30% probability of that happening. And the other question is, what do they do on stance, right? Does the stance change from neutral to accommodative? Actually, RBI has already played its card, so to speak, there, because there's been a sort of tsunami of liquidity that it's injected into the market, and so you can really see the pivot that's happened with Governor Malhotra taking charge, where it's a different RBI, an RBI that believes that liquidity needs to be in surplus, and so in that mode, for all intents and purposes, we are already sitting in accommodative. So maybe in terms of a signal, that would be that would say something. But I think currently we have neutral stance, 25 basis points cut, dovish commentary.
Okay, and so the RBI has done quite a bit, as you said, a different RBI around liquidity already. Do you expect more measures to take place in order to presumably support the uptick in capex that the government says that they have seen, and they will beat the FY25 number in some fashion? And we hear some strokes, some management conversations that we've done in select sectors talking about capex coming into play as well.
So the RBI doesn't have to, wait on occasion out here. It doesn't have to wait for an MPC meeting to deliver more liquidity, which it's already shown so far. So yes, of course, they can inject more liquidity on the policy day itself, or announce some measures then, but it doesn't stop them. I think the bigger issue is sort of the verbal communication that goes out, right? So if the RBI comes out and says that, look, we believe that we want liquidity to remain in surplus. We want it at, say, 1% of net demand and time liabilities. So it's sort of, if they give that, then the message that goes to markets is really strong, which is that clearly there is a pivot in policy. There's no guesswork. They can take the guesswork out of it, and I think that helps. So in terms of liquidity, I guess sort of the bigger step can be in terms of just communicating what the RBI sees and wants. Because if you look at the February policy, right, it seemed like a very conservative policy. And the reason why markets were surprised by all this liquidity is that none of this was really discussed and mentioned as much in the policy meeting. I think this is a really good time for the RBI to say, look, this is the regime that we are looking at. We want interest rates to go down. We want liquidity to remain in surplus durably over the medium term. And I think that is a pretty strong message too.
Right. Aradeep, this is Harsh also joining in. Given everything that's happening globally with regard to tariffs and otherwise, is there enough of a case for a 50 basis point cut tomorrow? And in your view, I know your view is 25 bips, but in your view, do you believe that there is a strong enough case for a 50 bips as well?
So here's the thing. If a central bank delivers a 50 basis points cut, it means, it's panicking, right? That situation has gotten bad. People are standing at their desks saying, oh my God, we need to do something. Now, of course, one rationale could be that if I am easing, I might as well just ease quickly and get interest rates down. But I think, look, there's a lot of uncertainty around this tariff business because, yes, the headlines look scary, right? But we really don't know how this will play out. We don't know if some of these tariffs countries negotiated down. We don't know if there's going to be winners or losers. It's really an uncertain world. We don't know what impact it will be on exports, on consumption, on investment. I mean, currently we just forecast that things are going to go worse. But how bad would it go? I think there are a lot of open questions at this stage. Given the fact that the RBI is already easing, right? I think it can still afford to wait to sort of see how the macros play out before committing to a larger cut, as opposed to just sort of hitting the panic button right now. Yes, the RBI has been late to the rate cut game. We've been arguing for a rate cut just based on cyclical growth drivers going down domestically. We've been saying this since October. We've been calling for a rate cut even in December. So it's not like the domestic side has been doing great and suddenly there is a global crisis and you've got to spring to action. Rather that yes, we are through a cyclical growth slowdown which is accentuated by global shocks. Let's see how that plays out. You have space. So, you can deliver 25 now, and if need be later in the cycle, you can deliver 50. So that's sort of the rationale we have for sticking to 25 as a base case. But again, that is 50 is also a distinct possibility. It's just not our baseline case.
And Auradeep, I wonder what your view is with regard to the risk of trade at this point. So US bond yields have again started to inch higher. There's of course a large level of uncertainty in the global environment. So would be unfair of me not to take your view with regard to how the global macro will likely play out according to you.
So I think the world is going to react differently to this shock. In the case of the US, our belief is that the shock will first hit inflation before it hits growth, right? And I mean, growth will eventually slow. We are not penciling in a recession right now, but our 2025 growth, for instance, from 2%, we are bringing it down to 1.4%. 2026 from 1.8 to 1%. But the first shock is actually going to be on core PC inflation going up on a 3-month annualized basis. In fact, we see it even crossing around 6% in the near term. So what will the Fed do in this situation? The Fed will be on hold. Right. And so we still have our a rate cut in December for the Fed. But in the case of Europe, in the case of the rest of the world, the growth shock happens first, right? Country, be it India, China, Vietnam. For these countries, the first shock will happen in terms of lower exports, lower consumption, lower investments. And so policymakers here will actually have a sense that let's ease in order to counter this shock. So I think on the policy response is going to be different. I think in the US, it's going to be more of tackle the inflation issue. In the case of emerging markets, it will be tackle the growth issue. And I mean, on inflation side for India, for instance, we think that for most of the months in the year, inflation will be below 4%. And let's not forget, in all of this, there is a distinct risk of China dumping its goods in countries like India, which is going to be, again, disinflationary. So when you put all of that together, I think there is the inflation we don't think is going to be the first victim of this growth is. And sort of that's going to shape out the macros. Just one thing, I mean, even if you look at past crisis, right, it's never a linear pattern, be it for macros or markets, right? So there will be phases where the markets really bleed. And then there will be phases of recovery, things sort of going back a little bit. And then again, there is some bleeding that happens. So this is typical of any crisis. It's rarely that, it's sort of a linear one-way street.
Point taken. Auradeep, I come from a standpoint that RBI's policy will largely also be driven with the way the Fed will respond to everything that's unwinding. And therefore, do you expect that, of course, you're expecting that inflation will continue to remain elevated, but growth will come off sharply. You'll likely slip into a recession. That's at least what currently the consensus seems to be. And you might also see some issues with regard to labor as well. Unemployment data will start to look negative. Do you believe that there is a large case for the Fed to cut in a big fashion in this year? Do you probably anticipate that, and therefore India also may see larger cuts?
Okay, so India seeing larger cuts is something that can very well happen. Our baseline case is cumulatively 100 basis points, and it could be more, right? Because there is a serious growth concern. When it comes to the Fed, I think the question that one needs to ask is, what does a central bank do? And a central bank's first and foremost job is to tackle inflation. And I think, Fed Chair Powell has said as much that, what we want is that the tariff shock is a one-time shock and it doesn't sort of transmit through the system. So the worst case scenario for Fed, so if you look at Fed's objective function, the worst case scenario for Fed is that, yes, prices go up, so inflation goes up across the board, and then it remains sticky and it stays on. And now you are in a point where you can't cut because it's just that you've got to tackle inflation first. So again, I think in terms of Fed delivering a rate cut at this point, the risk is that you are yet to see the inflation side of things, right? So your inflation is going to be above target. And if you're cutting rates, then your risk is that inflation, the sort of horses bolt out of the stables, and growth will obviously get hit. It won't be solved just by a rate cut. So I think the way the Fed is likely to play it, in our view, is that it can afford to wait. It can see, okay, let's see how much this inflation problem, how big this inflation problem is, right? So let's hold our nerves till then. And meanwhile, let's not forget that, so far, US fundamentals have been strong, right? So US consumers so far have have surprised us on the positive side. It is a service-driven economy. So you need to still see if a recession happens or not. It's not a given. It's certainly not our base case as of now. So given that you have a responsibility towards inflation, A. Two, you're going to see the inflation risk come out first. Better for a central bank then to take care of inflation. And once you're okay with inflation, then you start focusing on the fact that growth is slowing.
Point taken. Thank you so much, Auradeep, for this very detailed perspective, but crucial at this point to get your views with regard to everything that's happening. So thanks so much for coming and speaking with us.
Thank you for having me.
Right, with that completely out of time, what we're going to do is slip into a short break. On the other side, we'll have heard on the street, of course, and we'll talk stocks. But before we slip into that break, here's a view coming from banking veteran Keki Mistry, as well as former RBI Governor D. Subbarao, talking about the key challenges for the RBI and their expectation from tomorrow's MPC meet. Listen in.
A lot more bullish and a lot more optimistic about the Indian economy in 25, 2026, because now we've come to a stage where inflation has largely been controlled. Even in fact, inflation was even controlled last year and controlled very well. It's just that food inflation spiked.
Right.
And that caused the headline number to go up. But if you look at core inflation, which is excluding food and excluding fuel, core inflation throughout the year was somewhere in the 3.2, 3.3% range, which is not material. So I think now with the slight change in stance of RBI, more liquidity being injected, we've seen one rate cut happening a couple of months ago. Probably we'll see another rate cut happening tomorrow. So given all of these facts, I would today be a lot more bullish in terms of government spending happening. I would be a lot more bullish in terms of economic growth next year.
Growth will be affected because of tariffs. As I said earlier, exports, even though they're a small percentage of our GDP, they are an important segment of our growth story. So India cannot grow unless there are exports. And on top of that, if there is a recession in the US and around the world, export demand will be further hit. So growth is a problem. And even financial stability, we can't take it for granted because, there is, for emerging markets especially, capital flows and exchange rate stability are part of the monetary policy equation. So unlike advanced economies, which struggle only with growth and inflation, we will struggle at the same time with growth, inflation, and financial stability. In other words, managing this impossible trinity. So I think for the Reserve Bank of India, at the moment, look at inflation and act on that, because the playbook for central banks remains the same. If there is inflation signals, is it temporary? Will it go away on its own? Or will it just play out? Will the central bank have to react? So that's an important thing for the central bank to do.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
Those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these?
Slightly past 2:30, but great time to get in my colleague Somit Sarkar, who joins in with all the chatter from the dealing rooms with the herd on the street segment. Somit, what is being heard on the street? More bullish tones than bearish tones?
Well, yes, somewhat bullish tones is what the street is indicating. Firstly, what I'm hearing is on Max Healthcare. The potential buzz on the street is that there could be a block deal by an FII very soon. So keep an eye out for Max Healthcare in trade. The second stock that is in focus is Delivery. Now, a couple of days back, they announced an acquisition. Today, we are seeing strong sell flows on that counter. Now, what I'm picking up is that a foreign emerging market investor has been selling his stake today. There were multiple block deals as well today, and this selling is likely to get over soon for Delivery. So keep an eye out for Delivery. Trent is another interesting stock that was down around 17% in trade yesterday. Today, it opened higher, but currently it's just trading 0.5% up. It has fallen nearly 4% from day's high. Smart investors are indicating, or in fact fearing, that there could be some inventory issues when it comes to Trent, and that's one of the reasons why there has been selling pressure when it comes to Trent. Yesterday, now I had clearly mentioned that there were buy flows when it comes to IT. In fact, IT was the top sectoral gainer from a day's low yesterday, and today also it's one of the top sectoral gainers in trade. A couple of stocks that stand out in IT sectors, Emphasis and Coforge. What I'm picking up from dealers is that large HNIs have been buying into this counter. This could well be a positional trade, a buy trade as well from their side. So keep an eye out for Emphasis and Coforge. And lastly, it's Suprajit Engineering. Now, yesterday the company announced entry into ABS manufacturing, and what dealers are indicating is that in fact they have signed up deals with two potential customers. They have expressed interest for the company. Obviously, this will not generate revenue over the next couple of quarters, but the entry into this segment was largely because a couple of customers, their existing customers, have shown interest, and there could be potential clients for Suprajit Engineering. So it could generate a good amount of revenue, at least after the next couple of quarters for Suprajit Engineering. So keep an eye out for Suprajit Engineering as well.
Okay. Well, a clutch of names to certainly watch out for. Now, this is, of course, what is heard on the street, and keep an eye out over the next few days as some of these might turn out to be true. But as a part of a larger strategy to curb Delhi's air pollution, the draft EV Policy 2.0 proposes a complete ban on fossil fuel powered two-wheelers from August 15, 2026. No renewals for the CNG vehicles as well, clearly out there. Somit, how does this impact IGL? Because the stock is taking it on its chin.
Well, yes, if you see, IGL is the only supplier of gas in the Delhi region, and obviously Delhi contributes nearly 70% to the total volume, and this could lead to serious EPS downgrades for IGL if the rule is implemented. Now, what the rule is saying is that two-wheelers running on petrol, diesel and CNG will not be allowed from August 15, 2026. In fact, not only two-wheelers, three-wheelers as well. All garbage collection vehicles will be leased to be transitioned to EV from December 31st, 2027. Public transportation buses will be converted into e-buses, and private car owners who already have two vehicles will have to buy an electric vehicle, is what the policy is saying. Now, what analysts are saying about this impact on IGL for this, now they're saying that the new EV policy is aiming to transition Delhi's transport to electric vehicles with aggressive timelines. Aggressive is the key word to focus here, and they're saying that the autos and three-wheeler volumes alone contribute more than 5% of the total volumes for the company, and the EPS impact could be around could be less than 5% on IGL, but it will happen from FY27 if this new policy is implemented. But what is more worrying is the other contours which have been proposed in the policy, and that could have a much bigger impact on the EPS of IGL. So there could be EPS downgrades coming in for IGL, given the fact that the volume growth story would slow down, and hence we are seeing this kind of a selling pressure when it comes to IGL in trade on the back of this policy. But do remember, this policy is yet to be implemented. It is just proposed.
So IGL under pressure. The new EV policy anyway interesting in terms of the kind of opportunities it will take forward for all segments, and autos also in focus today. Dharmesh Kant joining in he's head equity research of Chola Securities. Dharmesh, very good afternoon to you and great to have you on. Since we're talking about the new EV policy and the auto pack, let's start with your views there.
Yeah, good afternoon, Tavanna. I mean, again, it's a clear push from the government for the EV vehicles, and they have been very vocal about that EV is the way to future. So, having seen everything in the context and the type of EV, I mean, the automobile slowdown is going into the sector. This will again have a tapering effect because vehicles, not every company is ready with their EV portfolios for the public, and it's a forced kind of a environment, especially in Delhi. If you're owning two four-wheelers, then the third one has to be an EV. So it's a mandate by the government. I think again, automobiles as a place will undergo more of a consolidation till the time the entire portfolio of EV, be it two-wheelers, three-wheelers, or four-wheelers are there for the people to decide on their picks. So transition period. I don't see it as a cyclical buy trend as of now.
Okay, Bajaj Auto in focus. Kush, very good afternoon to you. Anything looking interesting to you in the auto or the auto Ank pack as an opportunity? And I'm wondering if you're going to say I told you so at any point. Is any of the recovery that we're seeing today something that you think that you had seen in advance?
No, I'm gonna let Neeraj do it for me. He already did it at the start of the show, so yeah.
Oh, wow.
We could rewind that.
Okay. So tell me about autos and auto Anks.
Very, very tricky play here. The leaders at least are not on a strong footing. Be it the four-wheelers or even some of the two-wheelers. While we did like some of the names on on the auto Ank side, again, we've not seen that kind of participation. See something like a JBM Auto or a Lumax Auto, or Lumax Tech. Some of these names did actually start to show signs, but they didn't have fizzled out because of everything that's happening around the auto space in general. So I would sort of put this on a wait and watch list. Not very encouraging move. The recoveries also have been there, but not something that would warrant a trade just yet. But that said, JBM Auto, Lumax Auto, some of these names I will keep on my radar, but nothing, as I said, strong enough to keep put out a buy call on.
Do you have any buy call or except for JBM Auto? Kush, any buy call apart from JBM Auto? Anything in the pack?
No, not yet. The auto pack is very much on a wait and watch list. I'm at the moment.
Okay. What about some of your movers today, like a Keynes Tech, for example? Some of your auto Anks, ER&D space, they're looking interesting, especially as some of those fears are easing. Kush, what are you making on Keynes Tech? Let's talk about Keynes Tech specifically. 7% up.
So even if I take out what happened yesterday, Keynes, Dixon, some of these names, they have been reeling under pressure. The recovery was actually sold into even before yesterday, mind you. So for example, a Keynes Tech specifically that you've asked for, 51.50, 51.75 thereabouts was a 200-day moving average. That's the best it could do, and we saw 2 days of attempts of breaking beyond that level, and that was about 10 sessions ago, and then it kind of slipped from there on. So I wouldn't be too excited about these names. Even Dixon, I'm including in the same list until some of these key resistances are taken out. So I'll push that resistance level for Keynes a little higher to a 50-200. If that is taken out, perhaps a new rally could come in. For Dixon, that level comes in about 14,000. If that is taken out, you could see some selling pressure evade, and then some buying interest kick in. Up until that happens, I think this downturn that began late last year, has been continuing. There are bouts of recovery, but nothing so meaningful that would say that the trend has turned for some of them.
Okay, let's focus on the stock of the day. Titan is in focus on the back of their fourth quarter business updates. Mahima is joining us to talk about why Titan is turning out to be the stock of the day. Mahima, off its highs, definitely, but it's gold prices that is boosting Titan more than anything else, isn't it?
Right, absolutely. You're right, Tamanna. So the Titan stock has been shining on the back of its Q4 business update, and of course this is on the back of how gold prices have risen over the quarter. The gold jewelry growth has remained strong this quarter, but overall studded mix has slightly gone down. In terms of how segment-wise performance has been, well, in terms of jewelry business has seen a growth of 24%. The growth is on the back of high gold prices, plus there is buyer growth also coming in single digits. plain gold has grown over 27% and coins has shown a growth of around 65 odd percent. Overall Q4 has reported a growth of 25 odd percent. In terms of elevated gold prices, that has led to a sluggish consumer demand in the lower price ends, and this has also led to a single digit buyer growth there. But overall demand for higher price bands has sustained, and this has resulted in high double digit growth in ticket size as well. Studded jewelry growth has shown green shoots and has seen some so studded jewelry mix has kind of recorded a low double-digit growth, but overall solitaire has shown green shoots and it has gone up this particular quarter, both in terms of buyer as well as value growth. In terms of like-for-like sales growth, that has come at 15% for the jewelry business this quarter. Overall, Tanishq has also expanded its network in the international markets in Sharjah as well as in Atlanta and Seattle in the US, and they've opened 16 new stores this quarter. 4 for Tanishq and 12 for Mia. In terms of watch and wearables segment, the growth has come out at 20%. Out of this, 18% of growth has come from the analog segment. They've opened around 41 stores this quarter for watches and wearables. For eye care, the growth for this particular quarter is 18% year on year, and this is driven by both the revenue growth as well as the buyer growth. E-commerce has been the new segment that has augured growth for eye care. They've added 2 new stores in UAE region this quarter and closed around 11 net stores in India this particular quarter. So for eye care, their focus now is driven towards the e-commerce. In terms of the emerging business, fragrances has done well. The growth has come at around 26%. Fashion accessories has shown a growth of around 2 odd percent, but Taneira has shown a decline in sales of around 4 odd percent. And lastly, CaratLane has also registered a good growth of around 22% this quarter, and this was also driven by the overall studded mix portfolio. Buyer growth was in mid-single digits, and like-for-like growth for CaratLane was at 11%. Total 70 new domestic stores for CaratLane were opened this particular quarter. Lastly, what are brokerages making of this? Citi has maintained a neutral stance with a target price of 3,550. They are saying that margin trajectory will be something to watch out for once the results are in. Macquarie has maintained and outperformed with a target price of 4,000. They're expecting a 20% standalone EBITDA growth in Q4. And what they're saying is that healthy growth in Q4 is encouraging and enhancing their confidence in the EPS growth as well. Lastly, Morgan Stanley has maintained overweight with a target price of 3,876. And they're saying that overall Q4, the headline is strong, but the internals, that is different segments of Titan, are showing mixed cues. So this is the overall view as to how the Q4 has panned out for Titan and why it's buzzing in today.
Mahima, very quick 20 seconds. Volume growth numbers aren't out, but if gold prices had gained so much and if Titan sales are 22%, suffice to say volume growth would have been tepid?
Definitely, because studded mix, they've already said that it's in low single digits, so volume growth might not be as good as what it has been in the past quarters as well. So this rise in revenue will be on the back of rising gold prices only.
Gold price alone. Okay, thanks for that, Mahima. And Dharmesh, now put that into perspective. Are Titan's numbers therefore as good? If gold prices were to be stagnant, then are we looking at a stagnant quarter up ahead based on the past trend? I know it's not easy, not wise to say what's happened in the previous quarter will happen, and this is probably a busy quarter from a wedding perspective too, but still.
I doubt, Neeraj. I mean, the volume growth is low, and it was seen in the Q4 numbers itself. The revenue growth was primarily led by the gold prices growth, and people have been consuming less. And seeing the year ahead, I think the disposable income in the hands of people will be far less than what it was last year. So that incremental disposable income growth is also going to come down. Putting everything into light, if gold prices stay where they are, I don't see a very good year for Titan FY26. It can be maybe, see, this is the revenue growth. We haven't seen the PAT growth or the operating profit growth. So that is critical to see how the operating profit growth or the PAT growth materializes. And that I think will be 12 or 13% at best. Keeping in light with 86, 87 kind of a PE multiple, it's difficult for Titan price to appreciate a bit. It may languish here, maybe 2-3% more, but I don't see the stock climbing up from here.
Margins will be something which need to be watched very, very closely when it comes to Titan. What about the view on its charts, Kush, on Titan?
Someone has come at a level where you could perhaps consider, accumulation in the sense that you could start accumulating. The stock is at a 2-year low. If you take the retracement level, on the weekly setup, it's at a 61.8% retracement, which is a very strong support zone. 3,000 level, also psychologically acting as a support. So it's got a few points going for it. But as Dharmesh mentioned, the confidence in terms of a sharp up move, is missing even on the chart, even in the volumes, even on the price action. But given that it's got a few technical parameters going for it in terms of support, it will not be a bad idea to perhaps consider start accumulation. I wouldn't go big on it just yet, but yeah, I mean this is a place where you could start consider accumulation on Titan with a stop loss just under the 3,000 mark, perhaps 2950, 2900 thereabouts.
Okay. Well, stay on, gentlemen. Let's get in a special voice to try and understand how the trend of the market looks like. Dr. C.K. Narayan, a couple of columns ago, had written about some timelines around April 22nd, and of course these get thwarted as a result of the tariffs. But Dr. Narayan, I wonder, and thanks for joining in firstly, but I wonder if the structures have become a bit fuzzy because of all that's happened in the last, let's say, 4 or 5 days.
Well, you see, the event is large enough to create a problem in any kind of analysis, fundamental, technical, whichever you use. Because I think the entire world order is being changed right now. One man has been able to create that. But as far as time cycles are concerned, I think they are inexorable, right? So they will play out. Now, they may play out differently from the way we envisaged it before this major event. But I think when those cycles are due, some turns will happen. Now, whether those turns will be larger ones or minor ones, that is the only thing which remains to be seen. So the March bottom was right on cue. From there, the rally came up. It finished at a level of expected resistance, which was somewhere around 23,800. What was not expected was that this whole rise of about 1,900 points would get smashed in a matter of about 3-4 days. But the event was such, and then it has become a global event. Now for April, the major turning point in the time cycle is the 22nd. And I will be looking for some price nexus to happen along with that. Now, when we say price nexus, the prices could be down to support or the prices could be up into resistance. Along with that, I would also be looking at the general thing that we look at for a turn. It should generally be an amalgam of price, pattern, sentiment, momentum and stuff like that. So typically larger turns happen when all of these things come together. If just one or two things are there, then that time cycle turning point produces only a minor turn. So let's wait and see. I have the things mapped for 22nd. We'll wait and see how all these things come together or just a couple of things come. Depending upon that, we shall actually map out the next move up or down.
Okay. All right. Mr. Narayan, Harsh also joining in. I also want to try and get your view with regard to, therefore, how should one play this as an investor? There's just so much uncertainty. What would you advise at this point? How should you play it?
Well, I think the first point, from speaking from an investor's point of view, is that we had a lot of headwinds, before this event. This event itself was a headwind, right? Then we had the headwind of the FI selling, which kind of flipped over in the week before this, where they turned actually net buyers. They covered their shorts. They actually went long a bit in derivatives and all that. Then your dollar was a headwind because it was heading up, and you had the DXY at about 110. That is retraced to around 100, 102 levels. Your 10-year bond yield was also a headwind because it was up there at about 4.5, or
and all that. That is now down to 4%. So I think lots of headwinds which were there that have all moved away a bit. So I think there is something to be hopeful in the sense that if headwinds have either moved away or been blown away slightly, then the danger of further declines reduces. So that is point number one from an investor's point of view. Second, headwinds not being there is not good enough. Do we also get some tailwinds so that the prices will go up? For that, I think one we will have to look at the fact that the RBI and the government itself has been trying to infuse liquidity into the market. That's always good news. The RBI policy coming up for tomorrow, I think that that seems to be a shoe-in for a 25 bips cut. There is also a lot of talk for more than 25 bips cut that we'll see. Now that should be sentiment positive. And of course, then you have Q4 results, which are also starting from the day after tomorrow. So I think these are 2-3 things, and these are all in the short term, right? And then in the longer term would be whatever deal we can strike with the Trump administration in terms of these tariffs. Now, we are not in a position to dictate terms to America like China could, or China has, or Canada, or France. All of these fellows have stood up and said, okay, here it is, buddy, right back at you. But we are not in a position because our economy is not large enough, or it is too dependent on so many things for us to do something like that. So we will have to try the rapprochement way, the dialogue way. And so maybe if something good comes out of it, that will be something a little slightly longer. And even longer term from investor point of view, if India it can really take advantage of something which gets thrown up here. So in that context, what is the investor to latch on to? I think that is only one major one and two minor ones. The major one would be the Q4 results. So the Q4 results will put up candidates, and then he keeps watching what happens to the 10-year yield and the dollar.
Agreed. But Dr. Narayan, so while that happens, just now purely from what can a person do now from a tactical positional trade perspective as well? We were just talking yesterday, IT index down 31%. Is IT a good enough index or specific stocks within that bucket to start trading? Any other set of stocks or sectors which look interesting to you for a trade, be it long or short?
See, for a trade, I think I would confine myself to day trades right now.
Okay.
Because there is no clarity and there is too much confusion. And who knows what will happen overnight. So I would confine myself to day trades. Then it doesn't matter whether it is IT or it is any other pack, whatever moves you have to trade. From a sectoral perspective, I think it is too early to call it. Now let some results come and let there be some sort of a pattern, or let there be some show of consistency. Then we can latch on to sectors. IT is beaten down and the mood in that is also bad. Whether that should be bought or not will be shown by the initial set of results. And I think the leaders will come out first and that will set the trend. So sectoral pick will be after some bunch of results have flown. Subsequent to that, wherever there is some amount of good OI build-up in the stocks, which last post the results, etc., I think those would be the other ones to build your position on in futures.
Okay. Dr. Narayan, appreciate and keep some of these points in mind. Maybe look at day trades as well, as opposed to really taking large positional trades, but bear all of these in mind. And when I think of some short-term trades, guys, I think one bucket that is standing out right now is oil marketing companies. That's a bucket that's doing really well for itself. So a quick question to both our experts, Kush and Dharmesh, before we thank them as well. Kush, after this 4.5% uptick, would you trade BP, HP, IOC at all?
No. One word answer is no.
One word answer is no. You don't want to trade them on the long or the short side. Okay. Dharmesh, oil being so low, is it worth going out and investing into HPCL where marketing margins are clearly doing well?
It is doing well as of now, but the answer is no, because it's not a long-term wealth creator.
Okay, fair point. Okay, that's succinct, and thank you so much, both of you, for joining in today on the show and giving us your thoughts as well. I must say, viewers, you look at today's chart, HP, BP, RC look very good. HP over the last 6 months, YTD, whenever you look at those timelines, the stock has actually not created wealth. So maybe there is a point here. Take a quick break. Back with more market opinion.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Welcome back. It's turning out to be a good afternoon, and what's very clear is that as far as policy maneuvers are concerned, Government of India is on top of it. Very important story from my colleague Rishabh that we're going to highlight now. India is setting up an import monitoring group for certain products to check diversions from countries which face US reciprocal tariffs that are higher than India, such as China and Vietnam. So let me just explain this. As US increases tariffs on China and Vietnam, there is a fear that they may end up dumping all of those goods in markets like India, because the US, of course, will have much higher tariffs. That is a huge problem for our domestic for our domestic manufacturers. Rishabh, what is the policy plan to tackle this?
Right, Tamanna, what we're hearing from our sources is the fact that this will be an interministerial working group that will be reviewing any potential surge in imports that might be coming in as a result of the sweeping US tariffs that we've seen come in from this Trump administration. What we're seeing is that members from the Commerce Department, from the Department of Revenue, as well as Department of Investment and Trade will also be joining in. What we're seeing is that the focus is on 4 core product groups. Number 1 being consumer goods. Number 2 being electronics. Electronics is very important given that China, Vietnam, Thailand, Indonesia, Cambodia, all of them are competing nations with us with regards to a lot of low as well as high value electronics manufacturing. Apart from that, there is a potential surge expected in goods such as chemical as well as iron and steel products. So these 4 products will be kept under review by this group. Also, what's very interesting is that these products will be reviewed starting June and July. So still a couple of months left before this working group starts to monitor the data that's coming in. The June-July period is because in a couple of months is when the full operational the full operationalization of these tariffs will come through on all countries. And that's when the data that will come in, the import data that will come in, will be more reliable, and we'll more be able to understand the impact of these tariffs on exports as well as imports. Back to you.
Okay, thanks a lot for that. By the way, so thanks for that, Rishabh. Now, some numbers out on the screen in transformers and rectifiers, big bump up on margins, as a result of which that stock also likely could be doing okay. Let's just pull that stock up. I would reckon that such a sharp bump up should probably lead to the stock doing well. Yes, indeed, 4.99, so 5% higher, and just locked on a circuit now simply because of the kind of numbers that have come in. Avinash Gorakshekar, Director of Research at Profit Mart Securities, as well as on the fundamentals. Aditya Agarwala, Head of Research and Investments at Invest4EDU. Gentlemen, both of you, thanks for joining in. Avinash, I'm coming to you with a specific first. Transformers and rectifiers, a pocket that continues to show growth, 500 basis points expansion in margins. Is it something that interests you enough, whether Trill or some other transformer company?
No, I think my sense is, transformer companies will continue to do well, Neeraj, because clearly, the demand from the power sector has been growing quite rapidly. And I think once the, December quarter numbers had come out, the management was quite positive on the order book, on the execution. So I think these numbers would definitely be quite, reassuring, considering the fact that they also have a further order book which has got to be implemented in FY26. So I think even at the current odd level, to bet on these companies, one could definitely expect a decent compounding return of at least 15-20%, because margins are pretty intact. The order book continues to grow. And I think with the kind of supply crunch we have seen on the power generation side, plus a lot of industrial users, now are opting for, transformers, I would suggest that, this could be a good kind of, bet to put your money on, at least if one were to look at the fact that it comes from the mid and the small cap category. And I think this is one area where possibly the returns could be much better than the broader market. But I think you'll have to live with the volatility, because today the markets have been good. So, good news has been welcomed by good upside. We'll have to wait how the market performs. But otherwise, I think it's definitely a good investment bet if you look at the next 12 to 15 months.
Okay. Let me just go quickly to Aditya Agarwala joining us this afternoon. Aditya, very good afternoon to you. Let's get an index view very quickly.
Hi, Tamanna. Good afternoon. Index is going to remain choppy. Let's talk about Nifty first. I think it will try to cover up the gap that we had witnessed in trade yesterday, somewhere around 23,000, 22,900. Index will make an attempt to touch that level and close up the gap area. But I don't see a significant upside in the index. It should continue to consolidate in a range. We've seen a lot of price correction. It needs to enter into a time correction now. So my sense is between 23,000, 23,200 on the upside and 22,000 on the downside. Nifty should continue to oscillate in this zone, while you will see pockets of sectors outperform. And same holds true for Bank Nifty. If anything, I think Bank Nifty is something that can outperform from here on. So on the upside, 51,000, about 51,500 is what I'm eyeing on the Bank Nifty. On the downside, I think 49,900 should be a good, decent support area for the Bank Nifty. So one should clearly look at more of, and we are seeing that also, Tamanna, a shift towards consumption and domestic stocks rather than export-oriented stocks. So I think focus on Bank Nifty somewhat, and then consumer durables.
Okay. Any stock calls at this point? We have about 20 odd minutes of trade to go.
I've got a couple of buy recommendations, Tamanna. Indus Tower is looking very interesting to me. Despite all the mayhem, stock has actually stuck its neck out and it's on the verge of a breakout from a narrow consolidation phase. So Index Tower for me is a buy or a BTST candidate for a target of 410 on the upside, with a stop loss at 345 on the downside. The second is insurance play. It's looking very interesting to me. And again, focusing on the domestic consumption story, I think insurance is going to do really well. ICICI Prudential is looking interesting to me for a target of 600 with a stop loss at 540 on the downside. This can also be bought.
Okay. Stay on with us. Let's go across to bull versus bear segment. Today, we are putting the focus on PNB Housing. Stock has been on a rise today after a positive note from Goldman Sachs as well. Let me go across to Harsh, who's breaking it down. Harsh, what's the bull case and what's the bear case for PNB Housing?
Well, plenty of zing on the stock today and an upgrade coming through. But yes, I'll try to kind of outline the bear case along with everything that's coming, which is largely bullish, at least on a day like this. First off, with regard to growth guidance, they're guiding for a 17 to 18% retail loan growth on the book. But what we've seen is that the last 5 years, the growth has been absolutely sluggish. And therefore, there will have to be a big reversal in loan growth if this were to start to come through. The bull case is, of course, that retail loan growth will be 17 to 18%. Now, in terms of where that growth will come from, one of the spaces is affordable housing, and that's my second case. Affordable housing in that sense is going to be one big component of the book. Currently at around 5,000 crore on a 70,000 crore book size, is expected to grow fairly rapidly. But mind you, the book size of 72,000 crore in the larger scheme of things is quite large for a housing financier. We've seen other housing financiers growing at a far sharper clip. So in terms of compete, can they be able to grow on a 72,000 crore size only with the help of affordable housing? I'm not so sure. There are a couple of other levers which they will have to use to kind of ensure that that loan growth comes through. And there are other players in the market which are growing faster because the size is larger here. Let's talk about asset quality, because that has been the big overhang. They're expecting credit costs at 30 to 35 bips, largely driven by recoveries, is what they've said. That's the bull case. Asset quality in the affordable housing book, as well as new businesses that they're doing, including retail, needs to be monitored more closely, because these are new ventures that the company has gone into. Whether they can continue that kind of a credit cost on the new book is really the big question, which will probably translate in a year or two as the cycle turns. Margins, they are expected to continue to improve since they're going into newer segments. Spoke about it. ROA target 2%. They're doing 2.2 roughly at this point. But margins, at least, they're banking on a turnaround in the business as a whole. And therefore, if they're able to turn around the business, then those margins are sustainable. So something you may want to really look for is whether it's sustaining or not. Valuations, cheaper than peers, currently at roughly 1.5 times 1 year forward. Or even sub 1.5 times 1 year forward, to be absolutely precise. But the real question on the bear side is growth and asset quality. They've seen difficulty in the past, and hence it's cheaper than peers. Also, the growth is slower than peers, and therefore something to be mindful about. It's a bit of a balance that you'll have to try and calibrate in terms of valuations. Growth plus good asset quality plus valuations, all three is the right way to look at it. And that's where this company has suffered, at least over the last few years.
Okay, interesting breakdown there as far as PNB Housing is concerned. Earlier in this year was on a lot of, let's see favorites for 2025 list. I wonder if it still makes the list for you, Avinash Gorakshikar. Any views on PNB Housing after that very elaborate breakup that Harsh has given us?
No, I think clearly, valuations seem to be attractive, Tamanna, but, as Harsh rightly pointed out, the track record in the last 3 to 4 years has been very sluggish. I think, the market would obviously look at re-rating the stock once we get a little bit of stronger growth, from the April to June quarter. Hopefully, if interest rates are cut and I think the affordable business segment grows significantly for the company, then I think one could definitely look at the stock. I think within the housing finance space, there's a lot of competition. We believe that, it's better to wait for a quarter or two to see what kind of growth trajectory the company actually records, because, the narrative seems to be very good, but I think deliverables have to be, delivered in terms of numbers. So I would prefer a hold, fresh buying, only after the Q1 numbers, according to me.
Okay, NBCC in focus as well. Order win news coming in. Let's just pull up the intraday very quickly for NBCC. As we speak, they've got 3 construction orders worth 121 crores. Stock close to the day's high. So, when some of that panic settles, and I'm not saying that we're out of the woods yet, but when some of that panic settles, you then see stocks beginning to react to news like order wins. Aditya Agarwala, is NBCC something that you've been tracking?
Yes, Taman, it's an interesting setup. I completely agree with that. More of a consolidation going on. 86 on the upside is a hurdle for the stock. Once that is taken out, I see a clear up move to levels of 95 on the upside. So definitely one should keep it on the radar. Immediate buy targets are 86. Beyond that, I'm looking at a target of 95, 96 on the upside.
I'm just wondering if you have any view on a delivery. Delivery getting slammed today was part of our Herd on the Street setup as well. But Aditya, any take on delivery at the levels that we're currently seeing at 248?
It's a one-way downward spiral, Tamanna. Stock continues to make lower lows, lower highs. I don't see any reason to go out there and buy the stock just yet. Till the time it crosses that hurdle of 280, 290 on the upside. So I'll stay away from the stock. If already unfortunately entered into the stock, then I would suggest keep a stop loss around 230, 235. That happens to be an immediate support. If that is broken, I see a further decline on the downside. So as of now, stay clear of the stock. Don't look to venture immediately into it. Let the dust settle down. Let it start making higher highs, higher lows. There may be a better idea to get into the stock.
And what about Zomato? Since we're in the space and talking about it, and just to remind people what we've said on Herd on the Street today as far as delivery is concerned, Somit and his piece talked about sell flows by a foreign emerging market investor as well. What we're hearing is selling could get over likely too, but the charts show continued weakness. Aditya, my question to you on Zomato.
Oh, definitely. That I think that's a buy for me at current levels. As a disclosure, we have recommended the stock recently to our clients as well, so it would be there in the portfolios. At current levels, I would definitely stick my neck out and buy the stock. Clearly, because of the fact that despite all the mayhem that we've seen in the market, stock has stood tall. It has entered into consolidation, broken out of a narrow consolidation as we speak. So at current levels, yes, I will stick my neck out again and buy at support of 200. So that should be the stop. Look for a target of 260 on the upside. If that is taken out, I think 300 can also be doable in the stock. So that is one stock that we are gung-ho, and I think one should clearly look at adding the stock in your portfolio more from an investment perspective rather than just a trading bet.
Okay, Realty Index is also in focus. It's broken its 3-day losing streak driven by broad-based buying and encouraging business updates from several companies. Anushi is joining us with what the Q4 update is looking like for Sobha and Godrej Properties. Yes, Anushi.
Hey, so firstly I'll start off with Sobha Limited. Now if you are looking at the Q4 total pre-sales value, at the face of it we are seeing a 22% of a growth, which looks on the healthier side. But if you just take the Sobha share into consideration, we are looking at a 7.5% of a growth, with average price realization standing at 11,781 per square feet, showcasing a 5% of a growth here. So overall Q4 update, while the total pre-sales is on a healthier note, but the Sobha share is seeing a 7.5% growth. But more than that, it's the FY25 picture which is more in focus. If you look at what has happened, FY25 pre-sales were down about 5.5% on account of launch delays which have taken place. In fact, with this, the company has missed its revised revised pre-sales guidance as well, which was around the levels of 6,644 crore, which was the value that we have seen in FY24. Do note that the company had earlier guided for an initial 8,500 crore of pre-sales, which had revised downwards in the third quarter to the FY24 pre-sales value of 6,644 crore itself. Now on to the Q4 launches that we had seen for Sobha Limited. This included the likes of Sobha Madison Heights and Sobha Hamptons. Along with that, they also launched a chartered birdsong plotted development project as well. So this was in terms of where Sobha was headed. The company missing its FY25 guidance for the year. But if you look at Godrej Properties, it's the contrast scenario that we are looking at. In fact, the company beat its FY25 pre-sales guidance of 27,000 crore. This it did by achieving a total pre-sales of around 29,444 crore, which is a 31% of a jump from last year. And if you take the pre-sales guidance in consideration, it's about a 9% of a jump from those levels. Business development, which we see that stood at 26,450 crore, again beating the guidance in the third quarter itself, which stood at the roughly likes of around 20,000 crores. Now, in terms of how the Q4 shaped up for the business, Pre-sales stood at 10,163 crore, which was also its highest ever quarter sales, 7% of a growth here, while FY25 pre-sales, as we've discussed, saw about a 31% of a jump. A couple of projects which helped in this number that we are looking at. So firstly, higher sustenance sales is something that we are seeing. Other than that, Godrej Riverine in Noida clocked in about a 2,000 crore of a booking value, and Godrej Astra and Gurugram and Godrej Madison Avenue in Hyderabad saw about 1,000 crore of booking value. So this is the overall picture that we are looking at for Godrej Properties. Overall, a strong business update from here, while for Sobha, we are seeing an overall miss on its FY25 guidance that it had stated.
Okay. Thanks a lot for that, Anushi. So clearly watch out for some of the real estate names. Any thoughts here, Aditya, on any of the realty plays for a trade?
I do like one stock, Neeraj, in this space. I'm not sure if fundamentally that's a good company or not. On charts, definitely this looks good. DB Realty is something that stands out for me. It's a very handful of stocks within the real estate space that I like. So at current levels, DB Realty for me is a buy with a stop loss somewhere around 150 on the downside. Go for a target of at least 210 to about 220 on the upside. So this is one stock which definitely stands out for me. I would clearly avoid Godrej Properties at current levels. That seems like still into a corrective phase. Until the time the correction is over, I'll not get into Godrej Properties at current levels.
Aditya, I want you to give me one more chart check, but couple that up with your closing strategy as well. The chart check that I want from you is Z. It's like a phoenix rising from the ashes after ages. I'm seeing Z make this move 12% now. So word on Z and then your closing strategy.
A very good move, Neeraj, and an encouraging move, but I'll still wait for levels of 112 to be taken out, because that happens to be a major hurdle for the stock. Happens to come back from those levels. So if it crosses above 112 in trade tomorrow, yes, I will go ahead and buy the stock for a target of 124, again purely a trading bet, and put a stop loss just below 100 or maybe around 100 for a target of 123, but wait for it to cross 112 and then buy it. For me, a stock that I'm looking to go ahead and buy now is the GMR Airport. A very good up move, trading above its 200 DMA after 5 months. So at current levels, I'll be a buyer in the stock and look for a target of 95 to about 96 on the upside with a stop loss at 81 on the downside.
Okay. So that's the word GMR Airports, and watch out for that one. Was in the green even on a bad day yesterday, by the way. Avinash has recouped some of those losses quite strongly. GMR Airports up today as well. Is it an investment candidate?
Yeah, I think Neeraj, it is a quasi-monopoly business, and I think looking at the kind of growth in the airline sector and very few companies operating in this space, I think if the time frame is at least a couple of years, I think one could definitely expect that probably next year they could become profitable. The management has also guided for improved profitability from FY26 onwards, and I think considering the kind of growth in aviation traffic and the kind of opportunities going forward, definitely one could look at a long-term deep value kind of stock, because numbers are not very great as of now. They still are not profitable, but I think over the next couple of years, hopefully once they start making the bottom line positive, you could expect a decent amount of re-rating, because this business is like an annuity business and there are very few players who compete with the company.
Okay, GMR Airports in focus this afternoon. So is Vijaya Diagnostics. Now I'm wondering what's cooking over there. Vijaya Diagnostics has been an interesting take all day, actually, in about 19% up. I'm wondering, Avinash, if there is something that you're liking in this space or this stock specifically?
No, I think Tamanna, 19% upside. I think unless there is some corporate news or some corporate development, it's difficult to figure out what exactly has happened, because clearly, I think markets are in a good sentiment. So obviously, local companies which unlikely are going to be affected by the tariffs are being accumulated by investors. But specifically, some corporate news seems to be in the pipeline, because 18% move cannot happen without possibly either fundamental changes or basically some corporate development. So I think it's better to wait and watch here.
Wait and watch here. On the charts, Aditya, would you look at this counter or any in this space today?
I would not get into Vijaya Diagnostics after 19% up moves, Tamanna, but yes, I have a couple of names in this space which definitely stand out for me. Dr. Lal PathLab is something which I definitely like. I think offering an excellent risk to reward on the verge of a breakout from a channel 2550 is the resistance. So I will go ahead and buy the stock at current levels, look for a target of 2,800 on the upside with a good support on the downside at 2,500. And the second stock in this space is Krishna Diagnostics. That is also looking interesting to me. I think a good support on the downside at around 700. At current levels, I'll go ahead and buy with a stop loss just around 720, 710. Look for a target of 850 and 900. So these are the two stocks which I like in this space and definitely can be looked at.
And Aditya, your picks for this, apologies, we just took your picks. Okay, Aditya, quickly on to how should one play metals at this point? We've seen deep gash in metals both on Friday as well as yesterday. The Nifty metal holding up well today, but your sense with regard to how one should play metals?
I think it's still early days to get into metal just yet. The few stocks are bouncing back from yesterday's low, but I will still wait it out to see how the stocks react tomorrow or maybe on Friday's trading session. Because I think the pain in metal stocks are not just over yet. It will take some time. Consolidation will be there. More than price correction, I think time consolidation should be there. So I would still avoid playing metal. If anything, I'm looking at within the space. I think NMDC is something that is looking interesting to me. So maybe once the dust settles down, NMDC is something that I look at. But again, at current levels, I'm not looking at any metal stocks going long.
Rainbow Children is the other one which has done well. So selectively, some of these healthcare names haven't done too badly. Keep an eye out for that. Marksens amongst other pharma names. Okay, call me besotted with Z, but such a move doesn't escape attention. Avinash Gorakshekar, are you a buyer into any media name, particularly Z?
No, I think, Neeraj, I would prefer to wait for the numbers to come out because, this company has a legacy of problems as far as its balance sheet is concerned. And I think unless and until we see some more cleaning of the balance sheet and the cash flows improving, although, historically, it's been one of the older players in terms of their media library, in terms of their digital assets. I would believe that today's move is definitely good enough, but I think it needs to be backed by good fundamental numbers in the Q4. I think once the Q4 numbers come out and we get a better sense from the management in terms of the outlook and commentary, I think I would prefer to enter at that level. Although at these levels it definitely looks attractive, it's been beaten down significantly. But I think for a better visibility, I think it's better to wait for the Q4 numbers, which should be out very soon.
Another stock on the radar is Axis Bank. I mean, some positive brokerage notes as well, but making smart moves. Among all of this love for private banks right now, Avinash, where would you rate an Axis?
No, definitely. I think in terms of the positioning, Axis looks attractive, Tamanna. I think, our favorite was ICICI Bank. But I think if you look at Axis Bank numbers, definitely it stands to benefit because of the large digitization kind of efforts it has put in, and more importantly we expect a strong Q4 number and plus a good FY26 outlook. And what has happened for banks like IndusInd has actually made a lot of investors reshuffle their portfolio. So it's better to get into the top 2-3 large private sector banks because the outlook also shared by IndusInd has been very disappointing. So I think to a large extent some amount of reshuffling in portfolios has also benefited Axis Bank.
And Avinash, I'll stick with you. Some of these power financiers, we've ignored them for a bit now, not spoken too much about them. What's your take at this point?
No, I think clearly, this is a business which is going to grow rapidly, and it is like an annuity business, huge demand, and a lot of runway for growth over the next, say, 2 to 3 years. So I think companies like REC, PFC, even companies like Irida, which was recently listed, I would believe that unless you got a year and a half kind of time frame in mind, these could be good opportunities because I believe that numbers in the Q4 and for FY26 should be significantly better. So I think good business, and I think in this kind of volatile market, these are domestic plays, Harsh, where there's hardly any dent or damage from the import tariffs. So I think definitely they should grow considerably well even in the coming year.
And Aditya, 3% on a Bajaj Finance. I know that there was a CLSA note on this one, and they compared a Bajaj Finance's form to a Sachin Tendulkar's form and said that you can't rule out class is permanent, right? So from a fundamental perspective, extremely bullish, and I'll be curious to know Avinash's views. But quickly 30-second thoughts with regard to technicals on this one.
Oh, definitely one of the best stocks within the Nifty 50 space. I would completely agree with that. Class is permanent, form is temporary. Look for a target of 10,000 on the upside. Stick with Bajaj Finance. If you're still not bought the stock, maybe it's a good time to look at adding the stock in your portfolio.
Avinash, your views?
No, I think I would also like to second the view. See, Bajaj Finance is definitely a quality play in the in the financial space, and I think the kind of balance sheet they command, the kind of asset quality they have, I think there's no doubt that over the next couple of years, growth is definitely going to be rock solid. My sense is that I think investors should have moderate expectations of returns here, because the kind of money made in Bajaj Finance in the last, say, 4 to 5 years has been extraordinary. But I think going forward, one could expect compounding returns of 18-20% every year. That should satisfy investors, for investing in such a large cap name. But I think, yes, definitely long-term prospects are good.
I'm pretty sure that investors will take 18 to 20% any day of the week if they got it year after year. So that will be an interesting one. But thank you so much, Avinash, as well as Aditya, for joining us this afternoon and giving us all of those views. We'll let you go around half a minute or so to close now. Let's quickly look at how the Nifty is shaping up at close. We're just about 0.5% thereabouts, I believe, from the highs of the day. 22,697, so 22,700 is where we made the highs. We're around 150 points off that. It's a decentish recovery, and we had already seen some bit of that in trade yesterday, but today we are sitting in the green and largely in line with how global markets are responding as well. So a positive day of trade in that sense. Let's look at the heat map as well. A couple of pockets which have done well. Some of the Fin Nifty stocks and NBFC stocks in focus. Shriram Finance. Mind you, tomorrow is the big day where you might see a rate cut, and therefore you might see some zing in these stocks continue tomorrow. You want to watch out for that. But a Bajaj Finance up 3%, a Shriram Finance up 5% at close, and a Jio Finance up nearly 6% at close. So very interesting moves there. Otherwise, BEL on a big order win, Titan on the back of its Q4 update, keeping those stocks in focus, anything between 3 to 4% higher. But I'm interested in seeing this. Nearly 26 stocks have gained 2% plus in trade today, which is very, very solid. The breadth was extremely good. 40 stocks 1% plus higher. So really, really solid breadths where the Nifty 50 is concerned. Power Grid, the only loser, but frankly, it was just slight negative bias at close. But outside of that, some IT stocks also in focus, and let's pull up the contributors. That will give us some flavor on how IT has done, because some of the heavyweights, the contributors, please, on the Nifty 50. That's of course how IT has done well. But look at the contributors, heavyweights dominating that, but Infi right at the top among those heavyweights. So in that sense, IT has done well. IT index, if we can look at it intraday as well, it's had a good day. It's been a bit of a good comeback, but off the day's highs, as you can well see. Let's look at sectors now. Let's look at the entire sectoral heat map. Pretty much all sectors closing in the green. The India VIX has cooled off, so that's the other positive. But you're looking at media, which has seen a spike 4.5% on the back of Z doing very well in trade today. Otherwise, it's the Nifty PSU Bank, which is the top sectoral gainer, along with the Nifty Realty Index. Even though the Nifty Bank has underperformed today, the advanced decline, if we can look at the intraday graph, has been very, very solid at the breadth in favor of the advances. A bit of a comeback that we are seeing, and therefore the broader markets have outperformed. 2% plus on both the Nifty mid cap as well as small cap indices. That's how we've closed in at just off the day's highs on both of them. So 2% plus, that's how we've done fairly well. Last off, the BSE 500 top gainers, top losers. Those are some names. Well, Z doing the best. In fact, the top gainer on the BSE 500, those last hour spikes on Z aiding the stock higher. But a Chola holding was the other one. And you'd see NBFC stocks take focus. Chola Finance as well, up 6% in trade. Delivery was down nearly 8%, but outside of that, a few stocks which also saw a bit of a cool off on a day like this. but favorable breadth overall. Let's look at top factors that have played out in markets today. Nifty Bank have closed over 0.5% from the day's highs. The Nifty PSU Bank is the top sectoral gainer for the day. Broader markets have closed over 2% higher, so positive even on the breadth. All sectors closed in the green, breadth was positive. And last off, there's a sharp cool off on the India VIX. All positive, at least at this point. Now, quickly on to what we'll be looking out for. There's a crude stock change within the US which we'll look out for. Far and few in terms of details. Standard glass lining technology, 2% shares to exit lock-in. So not too many cues for tomorrow, but the one big one is the RBI MPC, which we'll have to wait and watch out for, and likely impact will last pretty much through the week. But with that, from Tamanna, Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. एक simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight to the show. Viewers, stellar rebound in Indian indices as value buying resumes in the market. Benchmarks rise over 350 points to end above 22,500 levels. The Sensex surges over 1,000 points to end above 74,200 levels. Broader markets outperform benchmarks. All sectoral indices rally to end higher. Nifty companies at 3.8 lakh crore media index jumps the most, followed by strong surge in FMCG, financials, PSU, banks, realty, pharma and auto. Tariff tensions hit India's rupee. The currency weakens to past 86 level against the dollar. The rise in the level of rupee versus dollar comes amid the ongoing global trade tensions and volatile market sentiment. The government announces a hike in excise duty of 2 rupees per litre. The oil marketing companies will be bearing the brunt of hike in excise duty. As a result, the gross marketing margins to take a hit of 2 rupees per litre. As crude oil prices fall, Government of India takes compensatory actions like increasing excise duty on oil imports to protect oil marketing companies. While this measure aims to offset losses, Citi Research still awaits clarity on the extent to which companies will be able to account for this redressal. The brokerage estimates that risk to FY26 earnings would increase if crude price goes back to $75 per barrel. Motilal Oswal reckons things are uncertain for India with many possibilities lying ahead. It also accounts India to be relatively less affected than its peers. While Q4 earnings stayed the same, India's policymakers are taking active measures to boost the economy. Morgan Stanley advises to remain calm amid the mayhem in the market to ride volatility. Rhythm Desai expects Indian equities to be closer to bear case in 2025 as domestic growth could be on the mend. Adds that India's trade deal with US is in a more likely than not scenario, but may take time and expect a favorable policy on April 9. Titan Stocks shines on a stellar Q4 business update. The company reports a strong growth in gold jewelry, but the studded mix slightly declines. The jewelry business mainly jumps on sharp rise in gold prices. Watches segment clocks in 20% growth with addition of 41 stores in the quarter. PNG Jewellers jumps on strong FY26 outlook. The jewelry company adds 5 new stores in Q4. Expects strong FY26 fueled by robust demand. Even aims to launch 20 to 25 new stores. CLSA maintains outperform on Bajaj Finance with a target of 11,000 rupees. Says the tough phase of earnings growth is over for the company. Says that bad form may be a temporary phase, but the class is permanent. The company has a pristine asset quality and deliver 20% plus returns in 10 years. Goldman Sachs upgrades Axis Banks to buy and hikes target to 1,288. Now says that mean reversion story begins as profitability and growth start to improve. Hails the valuations that have widened to 35% versus historical levels of 23%. Goldman hikes the target on PNB Housing to 1,184 rupees on back of confidence in earnings outlook. PNB Housing's profitability will remain resilient, whereas the lending spreads may expand. Additionally, there is improved visibility in growth profile driven by new segments and asset quality trends are better than peers. Sobha's FY25 pre-sales decline over 5% on launch delays. The company misses revised guidance of 6,644 crore rupees in FY25. Godrej Properties report a strong Q4 business update, beat FY25 pre-sales guidance of 27,000 crore rupees. The company achieves 109% of its pre-sales guidance and the business development stood at 26,450 crore rupees. Now, Axis Capital maintains buy with a target of 3,700 and says that the company is on track to deliver the best ever annual operating cash flow. Goldman Sachs is bullish on Suven Pharma, initiates buy on the stock with a target of 1,350. Goldman expects strong rebound and structural growth from FY26, expects potential approval of new drugs or indications. Goldman highlights product concentration and challenges to new management's integration as key risks. Bharat Electronics gets order of 2,210 crore rupees for electronic warfares from Indian Air Force. Now, this takes the orders to 2,803 crore so far in FY26. Goldman upgrades SBI to neutral and hikes the target to 823 rupees, says the risk-reward looks balanced post underperformance. Goldman believes that the pressure on net interest margins could recede as well. Petronet LNG signs Memorandum of Understanding, that is the MOU, to set up LNG terminal in Odisha. The government will invest about 6,500 crore rupees in Odisha LNG terminal. Shares of LIC-backed NBFC Paisalo Digital today surged after the company announced a fundraising planning. The company's board has given in-principle approval for raising funds by way of issuance of equity shares, foreign currency convertible bonds and/or other eligible securities in one or more tranches to eligible investors through preferential allotment, private placement, or including qualified institutional placements, that is the QIP, or any other permissible mode. Morgan Stanley maintains overweight on HPCL with a target of 506 rupees. Morgan Stanley believes that the share price will rise in absolute terms over the next 15 days. The brokerage is bullish on cooking fuel price hike, potential LPG recoveries. Delhi may soon say goodbye to petrol, diesel and CNG bikes if the draft EV policy 2.0 gets the green light. Now, in a bid to curb pollution, New Delhi's EV policy draft proposes a complete ban on fossil fuel-powered two-wheelers from August 15, 2026. The draft EV policy 2.0 also aims to phase out CNG-driven auto rickshaws and fossil fuel-powered vehicles used by civic bodies for solid waste collection. India is set to be a relative beneficiary of tariffs imposed by US President Donald Trump, according to market veteran and Helios Capital Singapore founder Samir Arora. He reckons that India's trade exposure is relatively less, and in many cases, India adds value to imports from other countries and exports the final goods. Now, this may prompt US officials to consider this factor in reconsidering tariffs. Among the sectors expected to power through the recent tariff-induced uncertainty, pharmaceuticals remain a top pick, says Vikas Khemani. Now, despite scenarios over the current global trade scenario, the founder of Carnelian Asset Management and Advisors believes pharma companies will stay resilient. Maharashtra has a whole new menu for investors, says the state's Chief Minister Devendra Fadnavis while addressing the India Global Forum. He also spoke about building a new port at Vadhavan Port and emphasized on the industrial parks of the state, which are well equipped with good infrastructure. Ashish Kumar Chauhan, the CEO of NSE, while speaking at the same event, highlights that India is slightly in a better position than China to tackle tariffs, believes retail investors will continue to put in more money. He hails India's IPO pipeline. India's gross domestic product may see a net impact of around 25 to 30 basis points due to the reciprocal tariffs announced by the US. Now, says K.K. Mistry, former vice chairman and CEO of erstwhile Housing Development and Finance Corporation. In an interview with NDTV Profit, Mistry said that the tariffs themselves might result in a 40 basis point hit to GDP. Keystone Realtors reports 34% rise in pre-sales to 3,028 crore in FY25. It further added that it has achieved the guidance of pre-sales given for financial year 2025. However, in the fourth quarter, the pre-sales rose 1% to 854 crore rupees in comparison to 843 crore rupees reported in the same period the previous fiscal. Godrej Consumers has now entered its arm in pet care. They will launch a new pet brand, Godrej Ninja, a pet food brand to compete with brands like Pedigree, Drools and more. A total of 500 crore rupees will be invested over a time frame of next 5 years. Currently, the Ninja is only available in Tamil Nadu, starting from price of 20 rupees. Maruti Suzuki has now updated their Grand Vitara, which prices starting from 11.24 lakh rupees. Now the brand enhances the safety features, adds new variant and equipment. Unilever announced setting up of a global capability center for their ice cream. The facility will be based in Pune. The announcement comes at the IGF event today. Arcade Developers has secured the rights for the cluster redevelopment of 4 housing societies in Borivali in the Mumbai metropolitan region, that is the MMR, with an estimated gross development value of 865 crore rupees. The company has registered the development agreement for the project, marking a significant step in cluster redevelopment activity. Natco Pharma clarifies on Risdiplam launch. Now, the company will launch the drug post clarity from the Delhi High Court. The company will price generic drug at 15,900 rupees in India. Bank of Maharashtra reports double-digit growth in loans and deposits in its March 2025 quarter business update. Now, during the March 2025 quarter, Bank of Maharashtra reported a 15.33% year-on-year rise in total business at 5.47 lakh crore rupees. Of this, gross advances were at 2.4 lakh crore rupees, which was up 17.84% year-on-year. Credit card usage has surged in India, driven by the rising popularity of digital payments and increased consumer spending. However, there is another worrying side to this trend, a growth in non-performing assets in the segment. Now, according to the latest data from the Reserve Bank of India, the NPAs in the credit card segment increased by 28.42% during 2024. Now, the total amount defaulted by credit card holders stood at 6,742 crore rupees during the period. The Apex Court of India has said that there will be no CBI inquiry in the Bengal government's creation of post to accommodate 25,000 teachers. Now, Chief Justice Sanjeev Khanna-led bench overruled the Calcutta High Court's, pointing out courts are barred from investigating cabinet decisions. The top court has also criticized the governors sitting on bills for a prolonged inaction as non-bona fide. They have set up a time frame of 3 months in which a governor has to either assent the bill or return the bill to the House or refer it to the President. The judgment was given as Tamil Nadu governor was sitting on 10 bills passed by the state legislature and was pending since then. The Commerce Ministry is setting up high-level team for import surge. Now, the potential import surge expected from China, Vietnam, Thailand between June and July. The group will have members from Commerce Department, Revenue and DPIIT. Consumer goods, electronics may see significant surge due to higher tariffs. Singapore PM Lawrence Wong has said that it does not look like 10% tariff is up for negotiation, as small countries have very limited bargaining power. He also said that Singapore is assessing the impact of the tariffs and will address the issue in WTO framework. Scientists have revived dire wolf, a species that went extinct nearly 12,500 years ago through genetic engineering. The 2 pups that have taken the scientific world by storm are named Romulus and Remus. Now, they're just 6 months old, but they already measure nearly 4 feet and weigh over 36 kg. The company behind their Resurrection, Texas-based Colossal Biosciences said that it created the dire wolf pups by using ancient DNA, cloning and gene editing, as per a report in CNN. The dire wolf was made popular by HBO series Game of Thrones. Leading contenders began to throw their hats in the ring on Tuesday as South Korea officially set June 3 for a snap presidential election triggered by last week's removal from office of impeached leader Yoon Suk-yeol. Yoon was removed on Friday over his short-lived declaration of martial law in December that plunged the key U.S. ally into crisis, triggering a new election that could reshape its foreign and domestic policy. The U.S. Supreme Court allows Donald Trump to pursue deportations of alleged Venezuelan gang members using a 1798 law that historically has been employed